gray in the process, but followed by Comptroller, Department of Finance, and the Independent Budget Office. At this time, I would like to introduce my colleagues. Of course, we are joined by our Speaker, our Deputy Speaker Williams, Majority Whip Hanks, Majority Leader Abreu, Council Members Shulman, Dinowitz, Ung, Lewis, Krishnan, Narcisse, and I think that is it for now. Okay, so and Councilmember Banks. So before we start, I would like to extend my sincere gratitude to the dedicated staff of the City Council Finance Division for their tireless efforts. In preparing for today's hearing, I know it was a lot of long hours. This work doesn't happen on its own, and I want to acknowledge the mighty team of dedicated professionals who make it all possible. Finance Director Nathan Toth, Managing Director Jonathan Rosenberg, Deputy Directors Amre Adev, Chima Obisher, Paul Simone, and Isha Wright, Chief Economist and Assistant Director Delaria Dimnaku, Supervising Economist Paul Sturm and Andrew Wilbur, Assistant Directors Aliyah Ali, Julia Haramis, Florentine Kabor, Caitlin O'Hagan, James Reyes, and Jack Story, Chief Counsel Nicholas Connell, Senior Counsel Nadia Jean-Francois, and my Committee Counsel Brian Sarfo, my Senior Advisor Athena Say, and many finance analysts, economists, and support staff who have worked behind the scenes to bring everything together. Welcome to Director Sharif Solomon, to you and your team, and thank you all for joining us today to answer our questions. Before I go any further, I want to invite Speaker Menon to give her opening remarks.
Thank you so much, Shirley. And first of all, I want to also thank our incredible Council Finance team who has logged in such long, hard, dedicated hours. We have an unbelievable team, and I just want to thank each and every one of you for your amazing work. So good morning, everyone, and we want to thank you. We want to welcome you, Director Solomon, and your whole team to be here today on the penultimate day of the hearings on the administration's proposed $124.7 billion executive budget for fiscal year 2027. Nearly 2.5 months ago, when you were last before this committee, we mentioned a number of issues that the Council had with the preliminary plan that had been presented to the Council. I was very clear that the idea of increasing taxes for all New York property owners was not something this Council was willing to consider. Additionally, we pointed out to you how detrimental to the city's financial stability drawing down annual reserve funds would be. Today, I want to thank you for taking those concerns seriously. The executive plan no longer includes revenues from an assumed increase in the property tax, nor does it draw down on the annual reserves. Additionally, the Council wants to thank you for taking the Council's response to the preliminary plan seriously. I note that the current plan includes over 20 of the recommendations the Council presented in our budget response, providing alternative resources rather than tapping reserve funds or increasing property taxes for all New Yorkers. We hope that the administration's acceptance of so many of our proposals is an indication of how budget adoption can be achieved. Council staff has spent countless hours analyzing this financial plan and the underpinning economic assumptions that drive your revenue forecasts. As with every economic forecast, slight variations in assumptions can lead to differing revenue projections. Today, my office released the Council's updated revenue forecast for its fiscal 2026 through 2030. The Council's economic outlook foresees steady growth with a slight improvement from the March forecast. As a result of this improved outlook and stronger than predicted current year collections, the Council's revenue forecast now includes nearly $2 billion more tax revenue than OMB in fiscals 2026 and 2027. The Council's updated forecast also shows that once you adjust for the in-year reserves, the fiscal 2028 gap falls from over $7 billion to about $2.5 billion, a manageable gap. With these additional funds, as well as the additional proposals presented in our budget response that were not included in the executive plan, the Council and the administration can agree to fund many programs for the success, health, and safety of all New Yorkers, including the expansion of the Fair Fares program, which has been a top priority for the Council, bringing the parks budget in line with historical spending, implementing an expansion to the New York City Kids Rise program, the allocation of funding allowing the FDNY to reinstate the 5th firefighter, increased funding for the Department of Consumer and Worker Protection, increased funding for the Department of Investigations, and other priorities. I won't list our whole exhaustive list that the council has prioritized in crucial areas of the city. And the record speaks for itself. Over the past decade, the council's forecasts have the best performance in estimating the actual tax revenue available to the city. And just as we have confidence in the Knicks, we are confident that this winning track record will continue. But we also understand that forecasting is as much as an art as it is a science. There's higher uncertainty, we know, in the economy, largely due to actions taken by those in Washington, D.C. For that reason, the council also believes that some of this nearly $2 billion surplus should be used to bolster the city's rainy day fund to protect our investments and city services from the inevitable downturn. We've come a long way since the release of the preliminary plan. The state budget has been adopted, and the city is now receiving closer to its fair share of resources. I hope that as a result, we can move forward and adopt a budget that is both financially sound and also provides for the critical services that all New Yorkers require. So we look forward to hearing from you today about the administration's fiscal year 2027 executive budget. Thank you, and I'm now going to turn it back over to Chair Lee.
Great, thank you, Speaker. So yesterday, the council released, as the speaker just mentioned, our economic and tax forecast for the FY27 executive budget. And New York City's economy continues to show resilience with higher tax revenues than projected over FY26 and 27, even though our economic growth continues to lag below our long-run average. The City Council's tax revenue forecast remains largely the same as our previous forecast this past March, with shifts in the timing of revenues. We project that the city will collect a total of nearly $2 billion more in tax revenue in the current and next fiscal years than OMB has projected in their May plan combined, driven by stronger personal income tax revenue growth and higher collections in property, personal income tax, and unincorporated business taxes. Additionally, we project $1.5 billion greater tax revenue collection in FY27, $3.1 billion in FY28, and $4.1 billion in FY29, and 4.1 in 29 and 4.9 in FY30. The council sees tax revenue set to grow at an average of 4.3% annually through the forecast period, which, while trending the right way, remains below the 5.5% annual growth the city saw in the prior decade. The council remains optimistic in the city's financial outlook, and we will continue to ensure that we are using every resource we have on hand to improve the lives of New Yorkers. We continue to have what we need to preserve the cornerstones and lifelines of our city and to protect the essential services that keep New Yorkers on their feet. The more we invest in our fellow New Yorkers, the more our city will get back, and I look forward to seeing how our discussion today can help guide us towards discussions and decisions that improve the lives of New Yorkers. And I have to say this PSA before every hearing, which is that we are going to take public testimony for all agencies on the executive budget tomorrow, Wednesday, June 10th, beginning at 9:30. So we're going to go all day, which includes testimony for all the different agencies. So please join us tomorrow. Make sure you sign up. Tell your community members to sign up for public testimony at 9:30 a.m. So we will see you all then. And I will now turn it over to Brian Sarfo, our committee counsel, to swear in the witnesses.
Good morning. Do you affirm to tell the truth, the whole truth, and nothing but the truth before this committee and to respond honestly to council member questions? Director Solomon.
I do.
First Deputy Boyard.
I do.
Deputy Gustorf.
I do.
Senior Deputy McKinney.
I do.
Deputy DeStefano.
I do.
Deputy Goldstein.
I do.
And Deputy Hoffman.
I do.
You may begin.
Sorry, just really quickly. Just want to recognize we've also been joined by Councilmember Ariola on Zoom, Councilmembers Wong, Morano, and Aldebal. Sorry. Now you can go ahead. Sorry.
Thank you. Thank you, Chair, and good morning. Good morning, Speaker Menon, Chair Lee, Leader Carr, members of the Finance Committee, and all members here with us today. Thank you for the opportunity to testify today about the executive budget for fiscal year 2027. I am joined today by First Deputy Director Tara Berard, Senior Deputy Director Latanya McKinney, and Deputy Directors Josh Goldstein, Nathan Gustorf, Liz Hoffman, and Patrick DeStefano. When I testified in the preliminary budget in March, I spoke about significant and chronic under-budgeting across many areas and the approach that our administration took to introduce transparency, predictability, and less risk in the city's budget. Addressing billions of dollars in known expenses in the preliminary budget was a prudent, fiscally responsible, and necessary step to take, but it meant that we needed to confront a staggering $12 billion gap over fiscal years 2026 and 2027. We immediately went to work and applied a variety of strategies to address this inherited challenge. Through a combination of savings plans led by newly appointed chief savings officers, additional tax revenue, and significant financial support from our partners in state government, we eliminated the gap and presented a balanced executive budget, one that puts the city back on a strong financial footing, one that invests in an affordable, safe, and vibrant city, and one that continues core government operations that New Yorkers depend on. And we balanced the $124.7 billion fiscal year 2027 budget without raising property taxes, without drawing down the rainy day fund or the retiree health benefit trust fund, and without slashing services. This morning, I will discuss in greater detail the multifaceted approach we took to close the gap, focusing on three main areas: recurring savings initiatives, significant state aid, and restructuring unfunded pension liabilities. The executive budget includes $1.77 billion in savings from chief savings officers and vacancy alignment over fiscal years 2026 and 2027, all without slashing services. By category, chief savings officers saved $24 million from giving up unused space, consolidating leases, and other leasing savings and efficiencies. $28 million from modernizing city technology, software licensing efficiencies, and other IT savings. $94 million from pursuing better contract rates, terminating contracts in favor of insourcing, and other contract savings and efficiencies. $368 million from improving the efficiency of public services, managing overtime, and phasing out unused programs and other program savings. And $947 million improving our financial management, claiming revenue that the city's owed, and accurately estimating expenses. And finally, $307 million from the vacancy alignment exercise. This is the first phase of this exercise. Executive Order 12 is now embedded into agency operations, and our savings officers will continue to work with OMB and the Office of the First Deputy Mayor to find savings and efficiencies. As I noted, $307 million of the $1.77 billion was achieved by reducing vacancies. This savings exercise was paired with a removal of the 2-for-1 hiring restriction that has largely been in place since COVID and slowed down the hiring process in many agencies. Agencies can now move quickly to hire up to their funded personal services budget, which will improve service delivery. On top of savings achieved through the Chief Savings Officers Initiative and the vacancy alignment exercise, in the executive budget, we implemented policy changes to contain rapidly escalating costs in due process cases and the City FEPS program. In the executive budget, we had made investments to address the underlying systemic issues which have led to a shortage of services available to special education students in the public school system. This includes adding $150 million for special education pre-K and ensuring that children in private schools have access to DOE service providers, which are a less expensive alternative to the private market. At the same time, we will improve the administrative procedures for due process hearings. We know that City FEPS is a lifeline for thousands of New Yorkers leaving the shelter system and seeking stable housing. As both the stewards of the program and an administration that firmly believes in its purpose, we want to protect it by placing it on firm financial footing. That is why we are pursuing reforms such as centralizing support functions, strengthening oversight, and implementing administrative improvements that protect the program's future. We can curb spending growth without cutting vouchers and, at the same time, develop strategies to improve the program. I look forward to discussing this with the council in the weeks ahead. Next, I would like to express my deep gratitude to Governor Hochul, Majority Leader Stuart Cousins, Speaker Hasty, and members in both houses for supporting the significant package of state aid that helped address our budget challenges. I would also like to thank you, Speaker Menon, and Chair Lee, and the entire council for your advocacy on behalf of additional resources for the city. The governor's executive budget included an additional $383 million in foundation aid and a provision to allow the city to decouple from certain corporate tax cuts that have been included in H.R. 1 that will generate approximately $700 million in fiscal year 2027. State support continued after the governor's executive budget with a $1.5 billion commitment from the governor on the day before we released our preliminary budget. That included $500 million in one-time unrestricted aid, a recurring restoration of cuts and cost shifts, including $300 million per year on youth programming, $150 million per year to reverse the sales tax intercept for distressed hospitals, and $60 million to reverse lower reimbursement rates for public health funding. An additional $97 million in school aid was also realized. Finally, the enacted state budget included approximately $4 billion more through a mix of direct aid, such as restoring the state share of line-of-duty survivor benefits, state authorizations, such as a more flexible schedule for class size compliance, and new revenue from the state's first pied-à-terre tax for non-primary resident homes valued at over $5 million. It has long been understood that the property tax system is inequitable. This reality manifests itself in many ways, including the regressive way that the luxury market is taxed. The pied-à-terre tax will remedy some of that inequity for high-value homes over $5 million and will generate $500 million in recurring tax revenue that will support much-needed city services across the 5 boroughs. The enacted state budget also authorized the restructuring of unfunded pension liabilities in the city's retirement systems, subject to approval by the trustees of each retirement system to ensure that we are making predictable and even payments over time. The restructuring proposal allows a short 5-year extension to a 22-year payment schedule that began in 2010, which required employer contributions to pay down unfunded actuarial liabilities as calculated by the Office of the Actuary. The original amortization schedule was back-ended, with annual payments beginning at roughly $4 billion and climbing to about $7.2 billion at the end of the amortization period in 2032, when the cost would plummet to zero. There is a better way to finance long-term obligations: flat dollar, level payments, and that is what the pension restructuring proposal accomplishes. Instead of completing payments in 2032, we will get there in 2037 with no impact, I underscore, no impact on retiree benefits. Smoothing the pension payments over time will generate $652 million in savings this fiscal year, $1.64 billion in fiscal 27, and roughly $1.6 billion annually in the remaining out years of the plan. And our retirement systems will remain fundamentally sound. The average funded ratio for the 5 retirement systems is 86%, higher than the 79% national average. This reasonable funding policy and the multi-year savings it will produce will ensure that New Yorkers have a local government that is more financially stable, while ensuring a continued pathway to a 100% funded ratio for the city's retirement systems. And I thank the council for including this proposal in its preliminary budget response. Now I'd like to share technical details about the fiscal year 2027 executive budget. Fiscal years 26 and 27 remain balanced. The fiscal year 2028 gap is at $7.1 billion, which is in line with historical averages. The gaps in fiscal years 2029 and 2030 of $9.1 billion and $9.8 billion respectively are lower than during the Great Recession years as a percentage of gaps over revenue. We will continue to identify structural solutions and make long-term systemic changes to improve the city's long-term fiscal outlook and reduce out-year gaps. Our administration is committed to rebuilding and maintaining high levels of reserves to ensure that we can weather an economic downturn. We replenished the Rainy Day Fund to $2 billion and the Retiree Health Benefit Trust Fund to $5.2 billion. As a percentage of revenues, our reserves are approximately 8%, higher than the pre-COVID 10-year average of 7.3%. Turning now to our revenue forecast, we recognize headwinds, including the ongoing war in the Middle East and a subdued labor market, but also economic strengths, including continued market momentum, financial and artificial intelligence investment, and elevated commercial leasing activity that is driving down vacancies. The result is that, before accounting for changes in savings and tax programs, the tax revenue forecast in the executive budget has been revised up by $75 million in fiscal year 2026 and is unchanged in fiscal year 2027 as compared with the preliminary budget. And we incorporated the council's proposal to reduce the unincorporated business tax credit, which will generate $68 million annually, also as of fiscal year 2027. By virtue of our strong fiscal management, we have made new critical investments in New Yorkers that are focused on retaining our tax base, taking preventative measures to save money down the line, and spending more efficiently to deliver faster results for New Yorkers. From a big picture perspective, we added roughly $17 billion in new spending across the preliminary and executive budgets, with just $1.39 billion, or 8%, attributable to programmatic administration initiatives, with the rest going towards addressing chronic under-budgeting for known critical needs and core government operations like snow removal and IT costs. In terms of programmatic investments, our administration has baseline needs that were typically deferred to adopted budget negotiations and funded for just one fiscal year. In the executive budget, we baseline funding for the library systems, the Parks Department, Fair Fares, cultural organizations, and CUNY. This removes the uncertainty many New Yorkers experience every July around ongoing access to their neighborhood library, cleanliness in their parks, the cost of traveling to and from work or their doctor, accessing the public art sphere, and preserving CUNY as an engine of upward mobility. We also made investments to improve the lives of our youngest New Yorkers by increasing child care provider rates, expanding the New York City Reading and Solves program, and funding the Little Apple, the city's first ever municipal daycare program. We also deepened our commitment to a safer New York with investments in the newly formed Office of Community Safety, an 800% increase in funding for the Office of Prevention of Hate Crimes, and staffing within the CCRB and the Fire Department. The mayor also expanded his commitment to safer streets and deepened funding for waste containerization. We have boosted economic justice and worker protections with support for street vendors and commercial lease legal assistance, and expanded capacity for the Department of Consumer and Worker Protection to grow their headcount by 181 heads and $18 million over the next 3 fiscal years. And we are improving New Yorkers' health and well-being by supporting survivors of domestic violence, seniors, and access to mental health care. I think we can all agree that these are necessary investments that improve the quality of life for New Yorkers across every borough and community. Turning now to the capital budget, the 5-year capital plan totals $117.1 billion, growth of $4.1 billion over the preliminary capital plan. The affordability crisis is exacerbated by an acute housing crisis, and the administration's block-by-block housing plan addresses the crisis head-on. That is why we invested an additional $4 billion in the housing in HPD agency capital funds over the 5-year plan, and $500 million more in fiscal year 2031 to build and preserve affordable housing across the 5 boroughs. We have also invested an additional $500 million in fiscal year 2028 for comprehensive NYCHA renovations, and we're allocating $256 million from this fiscal year through fiscal year 2028, along with funds from the expense budget to restore vacant units so more families can move into safe, stable homes. The capital plan includes a total of $5.6 billion for NYCHA, the most city capital devoted to NYCHA in recent history. I look forward to working with you as partners to address the fiscal challenges ahead and identify resources that support our mutual priorities, including keeping New York safe and clean, promoting education and public health, taking on the affordability crisis, and making this city livable each and every day for the people who build it. Thank you again for the opportunity to testify. I'm happy to answer any questions that you have.
Okay, going to turn over to Speaker Menon first for her questions.
Okay, thank you so much for your testimony today. A number of questions. So first of all, just a process timeline question really coming from our finance team. So after our preliminary budget hearing on the 25th, the council sent a follow-up letter to OMB requesting additional information regarding the budget. That letter was sent on April 6th. We didn't receive a response until June 2nd, nearly 2 months later. So we want to get your commitment moving forward that that won't happen again and that we get timely responses to the council's requests.
Yes, we will work on making sure we speed that up for you.
Great. Okay. So moving to the substance. So fair fares, which, as you know, is one of the top priorities, an expansion of fair fares that the council has put forward. So some questions on that. What does the administration estimate it would cost to expand the eligibility of fair fares programs to 175%, 200%, and 250% of the federal poverty level?
So let me start, Speaker, by saying we are proud that we were able to fund in the executive budget $25 million that have been put up at the adopted budget as a one-shot in the Fair Fares program. We know that there are calls to increase the rate, to increase the percentage of federal poverty level. If we were to go to 200%, depending on utilization, it can be anywhere between $150 million to $300 million.
And what do you estimate would be the increase in the number of clients enrolled in the program for these expansion scenarios?
We have estimates that can be upwards of over a million riders. Really depends on utilization.
Okay. During the hearing we had on the General Welfare Executive Budget hearing, HRA testified that through March 2026, $62.5 million had been spent in fiscal 2026 for fair fares. During the first 3 quarters of the fiscal year, only about half of the fair fares budget had been spent. So do you anticipate the entire budgeted amount for the program this year will be spent? If not, why not, and how much will be unspent? And overall, the questioning is that there's been a underspending has been the case for multiple years, which is concerning. So what outreach and education efforts will the administration take to address that?
Sure, Speaker. So, I think you've heard the mayor say on numerous occasions, a program on paper is of no use to New Yorkers. We need to be able to get the word out as much as possible. You see ads all over the subways. You see ads on New York One. You see ads elsewhere. We know as well that the agency participates on a frequent basis with the MTA on outreach events, either in the subways or wherever they can connect with New Yorkers. So outreach is key to this program, and there may be some underutilization that is expected for this fiscal year. The goal is to fully utilize this program.
Okay, thank you. Moving along to a different topic, in April 2026, leaders of the Brooklyn not-for-profit Bragg's Home Care were indicted on federal bribery and embezzlement charges. Rather than cut ties with Bragg's, the administration has appointed an independent monitor to oversee the group. Bragg's was awarded 2 new multi-year contracts, which start on July 1st, worth $186 million for shelter and social services. Can you explain the administration's decision to continue its relationship with Bragg's, considering the recent federal charges?
Well, as you noted, Speaker, we have, the vendor has a corrective action plan. We're working with DOI to make sure that there's a monitor, and there is, those protocols in place, and we'll stay working closely between the agency and the Department of Investigation to make sure that corrective action is taken according to that corrective action plan.
Why not just cease interaction with this organization and select a new provider?
Again, the safeguards are in place with the DOI, with DOI in the mix, overseeing, having a corrective action plan, and a monitor for this provider.
Who is the independent monitor and how are they selected?
I'd have to get back to you on that.
Okay, if you could get back to us this week on that. And then also, did the appointment of the monitor require a new contract? Is it additional funding? If so, how much did the monitor cost? Have the funds in the budget been allocated to the monitor?
Let me see, turn over to Patrick if you have.
We did not add new funding for that. There's funding allocated within each of the agency budgets for this type of monitoring, so it was within that.
Okay, so if you could get that, I do want to express my strong concern with this decision. I don't understand it, and I don't know why continue to contract with this entity. So I want to make sure we are saying that. And I do want to say it's not the first time concerns have been raised about a not-for-profit organization contracting with DHS. In 2025, 4 employees at a different shelter provider were indicted for wire fraud, bribery, and money laundering. So what steps is the administration taking to address systemic deficiencies in contract oversight to ensure that public dollars are being used responsibly?
We continue to work with our agencies, and we continue to work with the Department of Investigation to ensure that if there's any contracts that are not being implemented in the appropriate way, that there's appropriate action that's taken.
Okay, moving along to DOE contracts, which is something I know we've asked a lot of questions about. So in both our preliminary budget follow-up to DOE and to OMB, we requested additional information on DOE contracts. Neither DOE or OMB provided this information in your responses, and then we received a partial response from DOE late last week that was unclear. At yesterday's executive budget hearing, on education, DOE blamed technical issues and staff capacity for not being able to provide responses to the council. I do want to note DOE has the largest agency budget of any agency, so the idea that there's not staff to address what are literally rudimentary questions about providing contracts, I find not credible.
Mm-hmm. We appreciate the fact that the council has surfaced and raised DOE contracts and contracts writ large as an opportunity for the city to realize savings. That is why the chief savings officers, and in our savings plan, we begin with $30 million in savings from DOE contracts in fiscal 27, ramping up to $200 million in fiscal year 2030. It's a start. We know there's more to do. We want to partner with the council to be able to do that. With respect to the information that was provided, there was a summary of contracts that was provided. We know you want the actual contracts, and we'll work with you and the Department of Education. The summary, I would note as well, has about $1.25 billion in contracts, which is what requested in terms of what are the contracts that haven't been competitively bid. There are a couple in there like the custodial services and the New York City school bus. So I think that we're willing to obviously take a deeper look with you on that as we perceive our shared goal of being able to find contract services without, contract savings without slashing services.
So when can we expect to receive the contracts?
We will work with you in the DOE. We know that they answered yesterday that it'll take a certain amount of staff time. We'll look to see how quickly we can work together.
Okay. Moving along to DCWP, which is also a top priority of the council. On the campaign trail, the mayor had pledged to double the budget of DCWP, but the fiscal 2027 executive budget proposes only $78.4 million, an increase of just 4.4% from $75.1 million at fiscal 2026 budget adoption. The fiscal 2030 budget at the end of the plan in the mayor's term is $96.6 million. That means DCWP still needs $53.6 million to achieve a doubling of its budget. So how is administration still committed to doubling DCP's budget? Could you talk about the funding? As you know, we're pushing for increased funding, and the reason we're pushing for increased funding is because this agency has been asked year in and year out, to be clear, by the council, to do additional work. We have so many important council bills that were passed in the last few years that add additional work to DCWP. So as someone who ran that agency, I just want to raise a red flag that I'm very concerned about the agency's ability to do everything that we are asking it to do.
I know you know the agency well, and we both share the goal of what the agency can do and what it can be. We have a significant investment in this executive budget to bring their headcount, when fully ramped up, to 181 new positions to address multiple facets of their responsibilities, existing responsibilities, and new responsibilities through the local laws that you referenced, Speaker. So we look forward to having the continued discussion with you over the next few weeks about appropriate resources for DCWP.
Okay, so is the administration, though, still committed to doubling the agency's budget?
We want to give DCWP the resources that it needs. We worked very closely with the commissioner to understand what he needs, both in the short term and in the medium term, and this executive budget provides a significant start. We're happy to talk to you in the next few weeks about if there's any more that's needed.
Okay, in January 2026, with Executive Order 7, the mayor established the Office of Mass Engagement. The existing Public Engagement Unit, PEU, budgeted within HRA, was incorporated into this new office. We would like to get a better understanding of the work of the Office of Mass Engagement and how specifically PEU will now operate. So what is the total budget and headcount for the Office of Mass Engagement? And I want to say that the PEU is an entity that council members and community boards, I mean, they're sort of on the front lines of dealing with community outreach. So we really this is why we really want to better understand these various functions. So what is the total budget and headcount for OME in fiscal 2027 and in the out years?
So the total budget for the Office of Mass Engagement is $53 million, and that includes in this executive budget $2.8 million for new funding for staff in the executive budget in 27 and out. And as you noted, there are multiple offices that are included in there, and so the additional funding would fund an additional 20 lines in the office.
Right, did you say 53 million for OME?
Overall budget for OME, $53 million.
50, okay. But how much of OME's budget then is for PEU?
We can provide you a breakdown
Okay.
for all the different offices that are in there.
And
There's
how much-
PEU, there's CAU, there are, you know what the other, yeah, look.
Okay, and what are the new office's responsibilities?
Well, I think that the Community Assistance Unit, as has existed, as you know, connects government with communities, and being able to inform New Yorkers and all communities about what services government provides, so on and so forth. In an acute housing crisis as well, there's outreach to various communities to inform them about assistance, in their housing needs, for example. So these are the kinds of things that the office, even before there was the creation of Office of Mass Engagement, has existed to do. And so there's a continuation of those efforts and really a ramp up of those efforts to reach New Yorkers and their communities.
So in the executive plan, we can see that 10.3 million in dedicated budget codes for PEU within HRA includes the 20 positions that you mentioned. From conversations Council Finance staff has had with OMB, we understand there is additional funding and headcount for PEU that is not so clearly delineated in the budget. Why is that?
So, Patrick, do you have the?
Excuse me. PEU, I believe, exists within one or two budget structures within HRA, so it's not that, hidden or anything. And I think PU budget is approximately $24 million, and we can provide those codes to your staff.
And the last question I have on this topic is, what safeguards are in place to ensure that OME is not engaging in political work or other outreach that would be a conflict of interest?
Government offices cannot participate in political activities. That is very clear from the very beginning. And so employees are instructed as such. And so whether it's through conflicts of interest board training, DOI training, employees understand what their roles and responsibilities are. This is a government office, not a political operation.
Okay, and so all the employees have taken COIB training?
I know that I will get back to you to confirm who has taken it or not.
Okay. Okay, I have more questions, but I'm going to turn it back over to Chair Lee, and I'll go on the second round. Thank you so much.
Perfect. Okay. Okay, so starting with the state budget assumptions, the executive plan was released, obviously, as we know, prior to the adoption of the state budget, and now we have the state budget. So what assumptions does the executive plan include regarding state actions or funding, and were all of the assumptions included in the final adopted state budget?
Yes, I think it's another opportunity to really thank Governor Hochul, Leader Stewart-Cousins, and Speaker Hasty. What was committed to was provided, and so we are confident in what we put in the executive budget in terms of what the final product was.
Okay, and what other actions in the adopted state budget will affect the city's financial plan that were not included in the executive plan?
There was one particular area, Chair, we had put up in the financial plan $110 million for what we anticipated would be the cost impacts from pension enhancement legislation. This is the Tier 6 legislation and a couple of other pension bills. It turned out in the final analysis that Tier 6 was more costly to the city, so we hadn't booked that extra, I believe year one was $36 million more. And there were a couple of other pension bills, as well. So that is something that we'll have to reflect based on those fiscal notes.
Okay, so that was 110 million total of the,
110 million we put in the financial plan.
right,
But it turned out that Tier 6 was,
it cost,
I believe 36 million more.
okay, perfect. Also, just really quickly, we've been joined by Jay Sanchez, Councilmember Epstein, Councilmember Ressler, Councilmember Farias, and then on Zoom, we have Tiffany Caban, Councilmember Caban. Okay, so really quickly, moving to units of appropriation. One of the ways to improve transparency and rebuild trust in the budget is to align the units of appropriation with the programmatic spending areas, especially where there are real issues in cost containment. In our budget response, we called for the creation of a number of new U of A's to increase transparency. So does the executive plan include any of the new U of A's? And if so, could you please provide a list of the new ones? And also, what was the rationale behind the creation?
Sure, there were new units of appropriation in the executive plan. The Office of Mass Engagement, for example. There were also new units of appropriation for the City Council in the sense that there were committees, the Committee to Combat Hate, the Committee on Disabilities, et cetera. Also, there were new units of appropriation for the Office of Community Safety that was created. As always, we look forward to discussing with the council new units of appropriation.
Okay, and just while you're on that topic with OCS, because I know that this came up in a few of the city agency hearings that we had throughout the budget process, where I think there's just a lot of questions and confusion around OCS and what that's going to look like. And so I know that there's a whole restructuring that's happening, and my understanding, correct me if I'm wrong, is that we're sort of taking programs that were under perhaps different city agencies and putting it in. So it's not necessarily new funding that's being allocated, but do you know if there will be increased funding required for OCS in the future? And how does it look like right now in terms of the coordination, staffing, all of those things?
Sure. So the creation of the Office of Community Safety is really an exciting step for the administration to be able to move forward in this space, be able to create, an office in City Hall under a new deputy mayor. And so what we initially were doing was taking $260 million that were from existing offices that would come under the umbrella of the Office of Community Safety. So, you know, the Office of Community Mental Health, the Office,
Right.
and
GBV.
exactly. And so that was the 2026 number of 260 million. What you have in 2027, there was a drop-off based on grants that did not extend into fiscal 27. So we've invested $41 million in new dollars, so that the overall budget as it stands for fiscal 27 is $271 million for the Office of Community Safety. Clearly, we're going to want to build on that as we move forward, but there was money added to go beyond the 260 that we said we were taking in fiscal 26.
Yeah, because my understanding, I know up until now it's been, you know, just sort of reshuffled funding, but my understanding was that it would eventually require more funding in out years, and so, so next year for FY27, you're saying 41 million, and then do you know in future out years how much that will increase?
In future out years, we are looking at additional
Reevaluate.
investments as the office takes further shape and the vision of Deputy Mayor Francois
Okay.
continues to take hold.
Sorry, took a little curve. So currently, sorry, going back to U of A, the city's reserves are held in one unit of appropriation, 002, in the miscellaneous budget, which also includes judgments and claims, various transit subsidies, and other citywide fixed costs. So do you think it'd be better and provide more transparency for the city to budget its reserves in dedicated units of appropriation rather than just all together in a lump sum?
Yeah, I think, look, we're happy to have a conversation with you about it. I think that there's been certainly a greater focus and attention on reserves now. I think everyone knows down to the penny exactly what we have in reserves because there's been so much discussion about it. But of course, we're happy to talk to you about ways that we can improve that level of, you know, display of information.
Okay. And then moving to the tax revenue growth in out years. So the financial plan shows large out-year gaps of 7 billion, as you mentioned in your testimony, to nearly 10 billion in FY 2030. However, this partly appears to be a function of the assumption of very slow tax revenue, your assumption of very slow tax revenue growth in those years. And OMB expects tax revenues to grow at an average of just 2% a year, which is slower than the forecast for inflation during the same period that you guys had mentioned. And after adjusting for inflation, OMB expects the city to generate less tax revenue in FY 2030 than it will in FY 2027. So that's something that usually happens only during recessions. And so just wanted to know how you came up with this forecast, and is this a product of just being more conservative on the budgeting? Yeah.
So first, to start, I think we have to look at first what we have in the tax forecast for FY26 and FY27. So you're looking at forecasted growth in 26, and collections are coming in on plan at 5.1% this year, and then around 4% next year. We continually monitor, obviously, market conditions, economic conditions, headwinds, as I noted in my testimony. When you start looking out into the out years, we have basically, a forecast that is not too aggressive, because we want to make sure that we're not forecasting revenues that don't materialize. I don't know if you want to add it.
Oh, and then I would ask what you think is more realistic outlook then.
I think, statistically, as you go out into the out years, the degree of certainty is smaller, right? You have a much larger room for error. So in terms of how we do it, as the budget director said, we typically try to get the best forecast for the current and next forecast year, and then we do have a wider band of variance. So we are on the less aggressive side, right? We're taking in there's a lot of risk out there, and we want to make sure that we are accounting for it, because as you know, like the risk is asymmetric on the revenues, right? If you forecast too aggressively and the money doesn't come in, then we're forced to cut.
Right. But hopefully there's room for improvement, right? Or increases.
Absolutely.
Okay, Perfect. Okay, property tax increase and reform. I'm glad you said it's inequitable. As we know, the property tax system is inequitable. And the executive plan and I'm glad also that you are not including it in the executive plan for the property tax increases. But as you sort of have been thinking through looking at property taxes, right? What insights has this process so far in the budget given in terms of where changes need to take place?
So I think we've said before, we'll continue to say, I think it's near universal agreement that the property tax system is inequitable. We know that we need reform. We are working on a reform proposal that largely builds on the recommendations of the Advisory Commission on Property Tax Reform established by former Mayor de Blasio and former Speaker Johnson. So we are making sure that we're looking at not only the structural recommendations that are included in those findings from the commission, but also looking at homeowner relief programs, taking a holistic view. We know that, looking at other classes of properties, we're looking at the multifamily properties, large rentals, commercial properties. So we are taking a comprehensive, holistic view on property tax reform because that's what's needed to address the system. And we're working on that proposal to be able to introduce in the state legislative session in the next year.
Oh, in the state, okay.
In the next state legislative session.
Got it, okay. Because I know that this year in Albany, I think you had mentioned that the proposal would be released in weeks, which was in February, but did you mean for next year? Because we're just trying to get a sense of when
Sure.
the timeline is.
Yeah, I think we're definitely working on the proposal. Again, we're taking a comprehensive view, and we look forward to being able to have a proposal that is ready for action in Albany next year.
Okay, great. And will the tax lien sale remain paused until after the property tax reform gets accomplished?
The tax lien, we paused the 2026 tax lien sale, as you know. We are initiating, or in the middle of, I should say, a 6-month review on tax liens. At the same time, we know that per legislation that has been passed earlier this year, there are all kinds of different, policy looks, policy changes that could be made, including the utilization of land banks. And so we are looking at that to be able to have an alternative pathway to what we've seen in terms of the lien sale, which is a program that's in need of reform.
Okay, so what I'm hearing, if I'm understanding correctly, is that you would pause it until do you want it to go hand in hand with the property tax reform? Is that what you're saying? Or you would? Not
necessarily relate. I mean, it's related in the sense that it's both property tax, but
right.
the steps that we're taking on both sides, it's not really interrelated in that same way.
Right.
So the 6-month review is what we're engaged in now.
Okay.
In terms of the tax lien sale, and then the property tax reform proposal is also being worked on in parallel. To the extent that the two will interrelate, we will obviously incorporate what our review lands.
Okay, so there is a chance that it will unpause, I guess, for next year.
The 6-month review will dictate, and the recommendations from there will dictate how we move forward.
Okay. Really quickly going into streamlining OMB hiring approvals to reduce the staffing delays. I know that one of the things we've heard across a lot of the agencies and just is around the staffing and the report that it does take a while to obviously go through the approval process. And that it's sometimes causes internal bottlenecks to hire folks in the social services. And so what steps have you taken to streamline the hiring and budget approval process so agencies can fill positions in a timely manner and maintain the staffing levels needed to deliver essential services?
Sure. One of the first things that I heard when I came to OMB was that, one of frustration from agencies about the personal action request forms not moving at an expeditious way. So we, immediately went to work to try to figure out where those bottlenecks were. And we've been making significant improvements. One of the main things we've done is eliminate the 2-for-1 hiring restriction. Under the 2-for-1 hiring restriction, you would need to wait to get a monthly allotment after we understood what your attrition rate was, right? So that is that's eliminated. And so agencies are now able to hire up to their PS budget. What we sometimes encounter when we're looking at personnel action requests is that there is a misalignment between the vacancy and between the appropriate funding, or maybe there are different levels of sources of funding that may tie to a particular employee line, where we have to have a little bit of a back and forth with the agency on that. But we're committed to streamlining the process as much as possible. In fact, we're looking at, and this has been in the works, to look at a system that we can have where we can really look at where a PAR is across the system to see if there are bottlenecks, and looking at if there are particular agencies that have an issue where we have funding issues because they have more capital funding, for example. So all of that's on the table. We are looking to move it quickly, and in fact, we have moved it quickly. I think between May 1st and June 6th, I think we moved forward and approved about 1,400 PARs.
Okay.
I think, in fairness, a couple of those a piece of those 1,400 have been for new classes, in terms of civil service titles that are coming online, but there have been, agency PARs that have been met. And so we're continually working on that and committed to improvement.
Okay, and sometimes I know the delay can happen with the background checks, and sometimes the background checks can take about upwards of 6 months to complete. And so how have you factored that part into the sort of streamlining of the hiring process? And is there a way to truncate that sort of timeline? And do agencies manage the background checks themselves, or does DOI manage them? I know some cases external contractors are involved in the background check process as well. So.
Yeah, so OMB is not involved in the background check process, and so when we get a PAR, we're looking to move it forward as quickly as possible, as I noted.
Okay, and then just in terms of the same sort of line of thought around streamlining, one of the comments and feedback we've heard from a lot of the HPD-related housing projects is that there's a very arduous process that they have, the term sheets that HPD has, and then they have to go through another very arduous, long process with OMB. And so I know last year the council worked with the administration to update the HPD term sheets that in some cases hadn't been updated for years, and this was critically important because out-of-date term sheets required ad hoc approvals from OMB that added considerable delays. And so what is your role in approving HPD preservation in new construction projects, and is any of OMB's role duplicative of agency-level approvals at HPD?
I'm going to turn it over to Tara Berard to speak to that.
Okay.
Thank you for the question. So as it pertains to HPD projects, we are required to approve the certificate to proceed. As part of that analysis, we're looking to make sure that all of the funding is eligible for capital, but we're also looking to ensure that the project is within the term sheets that we agreed upon. Oftentimes when there is a perceived delay, it's because the project is coming over, and then we're working with the agency to make a determination about how to bring the costs down. Over the years, when we have found those projects over term sheet, that funding does not come back to the general fund or the capital budget, but more than likely stays with the project itself, right? So what we're trying to do is increase additional affordability or raise the reserve level to make sure that that particular project is more viable in the long term.
But after updating the term sheet, because would that not be included there? Because my understanding is that it was updated so that we could sort of move these projects along faster. And all I know is that from my own minuscule experience with our nonprofit capital project, the CPs can sometimes take like 8-10 years. So and it's not necessarily, and with that, the costs and everything else increase. And so with housing being such an important part of, the city's affordability issues, how do we make sure we can speed this up?
The team at OMB that works on the housing CPs is extremely dedicated, and I think that, for the most part, you're looking at housers in addition to budget people. The process that we take on is concurrent, so we're not adding additional time to the whole development process for HPD.
Because correct me if I'm wrong, because I was told that it's sequential, not concurrent. So I guess that was my question, because that would seem to make the process even longer, but you're saying it happens at the same time.
It happens at the same time.
Okay. All right. I have more questions as well, but I'll save it for round 2, because I want to make sure that our members can ask questions. So first we are going to, okay, we'll come back to Deputy Speaker when she comes back. Majority Leader Abreu.
Thank you, Chair Lee. I just have one question. On the campaign trail, the mayor supported the expanded use of hardened daylighting. During our executive budget hearing, however, DOT said there is no funding budgeted for daylighting in the executive plan. Has there been any discussion with DOT about providing funding to expand daylighting?
So there has been obviously a back and forth with DOT about the needs. I think that we know that we have the 400 that has been budgeted. We know that when we do bike lane projects, that as part of that, there could be daylighting included as part of those projects. It's something we look forward to discussing with the council in the weeks ahead. We are also making investments in, street safety overall. We're committed to street safety. We're putting, funding in for Sammy's Law. We put funding in for more bike lanes. We put funding in for pedestrian centers on the side of medium-duty trucks. So we are committed to street safety, and we look forward to having conversations with the council about additional investment.
Yeah, at my executive hearing, I did mention that we are grateful for funding in certain areas, like the ones you've mentioned. However, I'm disappointed in the lack of funding for daylighting, given that the mayor campaigned on this issue, and it's something that we see no funding for, specifically for. Advocates are calling for $15 million for daylighting. What has your engagement been with the advocates, and what is your estimate of the need to meet those goals?
Well, I defer to DOT in terms of engagement with the advocates, but I do, again, I look forward to having the discussions with the council about additional investment in daylighting.
Thank you, Director.
Thank you.
Okay. Sorry about that. Deputy Speaker Williams, followed by Majority Whip Hanks.
Thank you. Hello.
Hello.
Hi. Just a question about the cultural funding. So in the council's budget response, we called on the administration to baseline the $30 million that was received in a one-shot last year to adequately fund the ongoing needs of the city's cultural organizations. The exec plan thankfully included $10 million baseline, but we wanted to know if the administration would be adding the remaining $20 million baseline funding to the adopted budget.
We all value our cultural institutions together. I know we all agree on that. We were happy to put up the 10 million into baseline. I do think that we look forward to having the discussion with you and with the council on additional funding moving forward. Obviously, with the overall fiscal constraints in mind, and to try to figure out how we can provide more to our cultural institutions.
Okay, and just wanted to have a little bit more understanding as to why you all chose the $10 million to include in the exec budget, which I'm sure you know forces a lot of the cultural organizations to continue to operate year to year with a lot of budget uncertainty.
Yeah, it was a matter of just looking at the total funding envelope of the executive budget, and with the commitment to see that we could put up funding for the institutions that we care about and not sort of wait or defer them to adopted budget negotiations. So we had picked the 10 million because of the funding envelope. But we recognize that it's also a significant priority for the council. We share the fact that we want to invest in our cultural institutions, and we'll look forward to those discussions over the next few weeks.
Okay, just to jump around a bit and tease this out, but I definitely have a ton of more questions on this topic, as well as libraries. So OMB's racial equity plan states that the agency intends to develop tools by 2027 that would allow city agencies to incorporate equity principles into budget requests and planning for the FY28 preliminary budget. What specifically will those tools look like, and how far along is OMB in developing them?
Sure. So thank you for your question. We, as noted in our plan, are committed to having a rubric that OMB uses to systematize really how we're looking at making investments that align with the racial equity plan, and making sure that we have a way to screen those new needs that are coming in, to be able to say, okay, does it meet this need? Does it meet this need? So we are developing that framework now. We have committed in our plan, which is published in the preliminary racial equity plan, to have that ready for the next budget cycle. So for the next preliminary budget, it would have been informed by this new framework. So we're happy to be able to talk to you about it in greater detail as it gets fully developed, but we are committed to having some system and framework for being able to assess whether a new need comports with the racial equity goals that we put forward in the plans.
I know that your office created a climate assessment to look at the city's budget. So would it be similar to that assessment? Would it look a little different?
I think we are looking at climate budgeting as something that could be instructive for how we view the racial equity plans. As you note, it's something that exists. It's something that screens for a particular goal of government to be able to understand how funds are being invested. So there are parallels to there, and we will look to that to be instructive in how we develop our plan. Thank you.
Okay. Majority Whip Hanks, followed by Councilmember Ariola on Zoom.
Thank you, Chair. Good morning. It's good to see you.
Good morning.
So my line of questioning is about the right to counsel pilot of Department of Small Business Services. The executive plan includes an additional $4 million in fiscals 2027 and 2028 for a right to counsel pilot program at SBS designed to provide negotiation and settlement support for small businesses experiencing commercial lease-related harassment. My question is, how did the administration arrive at this estimate for the cost, and how will this program differ from the core commercial lease assistance program that SBS currently operates?
Sure. So thank you for the question. So the commercial lease assistance program is really designed to be sort of it's like the advice and counsel that we can provide, and assistance we can provide to small businesses as they're going into negotiating a lease, to make sure that they're best positioned to be able to get the best deal for that particular small business. The right to counsel comes in after the fact, right? So it's sort of like where it lands in the process, where right to counsel then will be if there is a dispute and there is a need for counsel at that time by the particular small business. And I think that we came up with the number, just again, it comes back to the funding envelope overall. We said, can we make an investment here? This is a real need to support businesses. And that is how we arrived at the $4 million.
Thank you so much. So does the administration have any estimate of when the RFP for contracted legal services be issued in order to get these services ramped up for fiscal 2027?
We will work closely with SBS to make sure we understand what their timing is. This is something that the administration believes in. That's why we're making the investment and making sure that they can access these services because we want small businesses to thrive in our city.
Thank you so much. One more question, Chair, may I? The New York City's Economic Development Corporation, New York EDC, is the agency who their mission is to encourage economic growth in each of the 5 boroughs. We are now 6 months into the new administration, yet we don't have an Economic Development Corporation. They lack a president. What is the status of the administration's search for a new president of EDC? And could you speak on why it's taking so long?
The search is ongoing. It is a priority. At the same time, we know that the agency continues to work on a number of projects that have been in the pipeline. So whether it's Spark, Spark project in Kips Bay, we know the Kingsbridge Armory, is another project that continues. Obviously, the work that they're doing to prepare and on the World Cup, on free grocery stores as well. So all the work continues in that agency.
Thank you, Chair.
Thank you. Okay, Councilmember Ariola on Zoom, followed by Councilmember Schulman. Councilmember Ariola, are you there?
Yep, I'm not sure if
Okay.
you can hear me.
Yep.
Okay, because I'm not getting it. Okay, great. So, thank you, chairs. I want to go over a couple of things that we discussed at the executive budget hearing for fire and emergency management. So, in your testimony, I did not hear anything about the 5th firefighter, that expansion that has been proposed by the speaker and the council, EMS pay raises, and I would like to know if what you plan to do with both of those topics, as well as taking out your money and making it available now for firehouses that are in terrible disrepair so that they can be fixed sooner than later.
Sure, Council Member. Thank you for your questions. So on the 5th firefighter, we look forward to having that discussion with the council. We know that fire safety is of paramount importance. We know the council put forward a proposal. We know prior to that, the union had put forward a proposal. Again, we look forward in the next few weeks to have that discussion. On the EMS parity, this is something that, the fire commissioner believes deeply in and has testified to that fact. I think the mayor also has publicly talked about the challenges that are faced in terms of EMS. We look forward to working with the new union leadership. There is a new president that was elected for that local. There are conversations between the Office of Labor Relations and that local, and we look forward to having a collective bargaining discussion where we can hopefully make progress on the last EMS contract round. And then finally, on your question on firehouses, we were proud to include in the executive budget capital funding to renovate 6 firehouses that will be obviously determined in terms of the most sort of in need of state of good repair. So we're proud that that was a start. Your suggestion about looking at out-year capital funding to accelerate, we will take a look at. We're constantly looking at our capital plan and seeing what kind of opportunities may exist to advance funding. But we put up funding for the 6 firehouses as a start. And we want our firefighters to be in, state-of-the-art facilities as best as we can, and we want to invest the dollars to do so.
And just one last question. The money that you're appropriating for the 6 firehouses, is that immediate money or is that out-year money?
That is, we have $24 million for FY31, and we would look at being able to, again, per your suggestion, seeing what can be advanced.
Okay, thank you so much.
Thank you.
Thank you, Chair.
Great. We've also been joined by Purina Sanchez, Gail Brewer, and Sylvina Brooks Powers, and we have Schulman, followed by Dinowitz.
Thank you very much. The executive plan includes savings associated with long-term vacant positions at DOHMH and reflects ongoing efforts to manage fiscal constraints while maintaining public health services. How does OMB evaluate whether vacancy reductions can be achieved without impacting service delivery or DOHMH's core public health functions?
Sure. Thank you for your question. We have an extensive engagement with the agencies to make sure that this exercise should not in any way result in any reduction to services. We leave the flexibility to the agency to understand how they would effectuate the 50% vacancy reduction. I would also note that in other ways, we're adding funding to the Department of Health and Mental Hygiene for heads that they need, whether it's the community teams that will do outreach to make sure that folks are signing up for health insurance access, and other needs that we've added for mobile food vending, et cetera.
Thank you. What funding and staffing requests submitted by DOHMH remain under OMB's review ahead of budget adoption, and what public health investment, if any, does OMB anticipate may be added to the adopted budget?
That's a conversation we look forward to having with the council. The agency, we had extensive engagement with them in the lead up to the executive budget. We were able to meet some needs, including funding disease surveillance. We're also funding maintenance for the new public health lab that's opening up, in addition to the other investments that I noted in the first part of my answer. So I think we're constantly talking to the agency if there's anything that develops over the next few weeks, but clearly as well to the with the council.
Okay. The executive plan includes a baseline $17.6 million increase to support disease outbreak resilience and sustain core public health functions previously supported through temporary federal grants. As the federal government continues to reduce funding for New York City, has the state included any funding in its enacted budget for any of DOHMH's programs and services?
Well, one of the things that we were especially proud of this year is that we were able to reverse the Article 6 public health funding cost reversal, which had existed for many, many years, and we were able to do that, which is worth about $60 million a year to us. So through our advocacy efforts and through the partnership with the state, we were able to do that. So that is an example of additional state funding for public health.
What assessment has OMB conducted of the potential risks to disease surveillance and outbreak response resulting from the loss of federal public health funding?
Well, I think that's exactly why we thought it was important to make the investments that we made in the executive budget for the disease surveillance, et cetera. So I think that it's important that we never lose sight of the fact that, you know, we're only a handful of years away from a once in a century pandemic, but we also see outbreaks, whether it's hantavirus, whether it's Ebola. So we need to make sure we're always in a state of readiness, and that is why we made that investment.
Chair, I just have one more question.
Sure, go ahead.
Please. Thank you. I just want to follow up a little bit on Speaker Menin's question about the mass engagement unit. Up until recently, every council district was assigned somebody from the community engagement unit, from CAU, and that doesn't really exist anymore. So what's being done to make sure that that continues to happen? Because without that, it's very difficult to get things done unless some of us have relationships with certain people in IGA and everything else, but we were assigned a particular CAU person.
I'm happy to take that back, council member, and talk to leadership for the Office of Mass Engagement about that.
Okay, and just for the record, Article 6 was something that I came in office and pushed for, so we were able to do it. We worked with the state. We appreciate the support of the admin, but I just wanted, for the record, state that.
Thank you for building the foundation for us.
Thank you, Chair.
Thank you. Okay, we've been joined by Councilmember Aviles, and next, actually, sorry, Eric, we have Councilmember Caban on Zoom, followed by Dinowitz.
Thank you very much, Chair. I know that we're tight on time, so I'm going to ask both of my questions up front. They're very different topics, so apologize for that, but I'm going to start with a question on gender-affirming care. I'd like to know what policies and resources OMB is prioritizing ahead of adoption as a contingency plan of the federal government, because of the federal government threats to further protect, gender-affirmative care in the city, particularly for youth. And then my other question has to do with IMT and ACT. In your testimony, you mentioned that the city is improving New Yorkers' health and well-being by supporting access to mental health care. Now, last year, the council secured an additional funding of $15.5 million to expand the mobile treatment teams and create the step-down program. And then we were informed a few months ago, very surprisingly, that the funding has to be baseline for DOHMH to implement. And I hope that we can agree that the city can't afford to bargain with funding for effective mental health care services. And this remains a priority for the Progressive Caucus. Can we expect the restoration and baseline of the $15.5 million at adoption? And I just want to clarify that also, the money that we're seeing put in by the city is to address the fiscal cliff left by the federal government and not actually do anything additional to make more headway on the wait list that currently exists?
Sure. So thank you, Council Member, for your questions. Let me first take the first one. So we added in the preliminary budget $15 million over fiscal 26 and fiscal 27 for gender affirming care. We look forward to working with the Health and Hospitals Corporation on how that funding will be utilized.
I just will say that's not nearly enough. Advocates are saying that the need is in the ballpark of more like 60 million, and also there needs to be money earmarked specifically for youth services, because gender affirming care, not every practitioner can provide that at young ages. So every major medical organization in the country has said that it is integral, life-saving medical care, including children 13 and under, and there's a real gap in being able to service that population.
Yes, Council Member, it is a start. We hope that within the fiscal constraints that we have, we're able to invest additional resources there. I think that this is a start, and of course, it's an important start given the health needs that we know exist. So I think the next piece of your question was related to IMT and to ACT, and your point we will take back in terms of the baselining question, but just in terms of the $4.5 million and the $11 million in one-time ads for ACT and IMT, we're looking forward to the discussion as part of ADOPT in terms of ongoing funding for that. And so we look forward, I know, to having those conversations with you and your colleagues.
Yeah, and just before I pass it back to the chair, I just want to say, in terms of the fiscal challenges, most of the people on Rikers live with a mental health diagnosis, could benefit from an active fact team. We need this medical care coverage for our transgender youth and transgender neighbors in the city. We got money for 500 more cops in this executive budget, but we don't have money for health care and trans kids. I think, that's a question of priorities. Thank you, Chair.
Thank you. And yes, agree. FACT, IMT, ACT, those teams do incredible work. So whatever we can do to try to uplift them would be great. Okay, Councilmember Dinowitz, followed by Councilmember Lewis. Sorry.
Thank you, Chair. Good morning. Yesterday we held our executive budget hearing with the Department of Education, and yesterday they testified that they submitted a new needs request for K-12 special education programming, including their AIMS, NEST, and Horizon programs. Notably, this budget does not include increases in K-12 special education. They testified, additionally, that these funds would reduce due process cases for Carter cases for tuitions at private schools. That was their testimony, and therefore, it would reduce the costs to our city's budget by doing what we're supposed to be doing, which is educating every child. First, how much did DOE request for this, and why was this request not funded?
So we are obviously continuing to talk to DOE about their new needs overall, and particularly on the due process cases. As you know, we've made, and as I mentioned in my testimony, we've made investments to the tune of $150 million in special ed pre-K.
In pre-K, I'm speaking specifically of K-12, yes.
Absolutely, you're talking K through 12, but I'm just saying that we did make investments, $150 million in special ed pre-K, in making sure that IESP, so that we're having lower cost in terms of children that need services. We're looking at K through 12, and we're looking at the overall funding envelope. Ultimately, we've made many investments in DOE within our executive budget, so we're looking at the available funding, and we're happy to talk to you in the next few weeks about it.
Okay, to be clear, these are, how much money did they request?
Liz, do you know exactly what the new need was?
I don't have that on me, but I will get it for you.
Okay, we can get that today? That's in an email somewhere? Is it in a
We're happy to follow
envelope
up with you.
Today?
Yep, I can do it right now.
Thank you, Liz. Thank you so much.
It was around $40 million.
Okay, thank you. And to be clear, they testify that there, for AIMS, for example, there are 510 seats, but 2,070 applicants. That was just for the AIMS program. Fantastic graduation rates, attendance rates, success rates. Similarly, the executive plan includes a cut to the number of budgeted school safety agents and a failure to restore $6 million in restorative justice program, which is functionally a cut, and the DOE testified yesterday over 25% of schools would lose restorative justice programming without this funding. So how are you supporting school safety, and why was this funding not included in the executive budget?
So the school safety agents have a headcount of about 3,801 as of the executive plan, with a vacancy rate of roughly 8%. The total budget is about $283 million in fiscal 27. This is a conversation that we want to have with you. We did add dismissal agents to address the busiest times, and just hired a class of 100 school safety agents who are anticipated to begin in June. On restorative justice, the executive plan includes funding to create, obviously, the Office of Community Safety. Within that, we intend to address restorative justice programs.
Okay, well, I'm not sure how you do that with a cut when the DOE testifies. The 250 of their schools of the roughly 960 schools that have this programming would lose it. And Chair, if I may have one more. The Mayor Mamdani ran on a promise of affordability and rent freezes, but notably, that rent freeze excludes our city-managed properties, including our city-run Michelamas. HPD oversees and manages these developments, over 100 developments, having approval and authority over operations. How many HPD asset management staff are dedicated to ensuring the health of city-managed Michelama properties, and what role does OMB play in ensuring that developments remain affordable and healthy to low and middle-income New Yorkers and co-op owners in these developments? And I want to highlight Tracy Towers in my district, which over the next 4 years will face a 30.6% rent increase, and over the last 4 years faced a 22% rent increase, which is as about opposite of the mayoral promise that he campaigned on as you can get.
We're happy to look into that and have a discussion with you, council member.
Can you describe OMB's role in working with HPD to make sure not only the investments that we allocated for the City of Yes funding and the state provided are going towards these buildings, but OMB's role in ensuring that rents don't skyrocket so the residents of Tracy and our other city-run Michelamas can live affordably and with dignity?
We are not involved in the oversight or review of rent increases, so we will be happy to talk to HPD and look at their oversight and supervision of the program, and happy to have a discussion with you about if there's any way that agency services can be focused on that.
Okay, thank you. We'll continue that conversation. Thank you for the extra time, Chair.
Great. Okay, Councilmember Lewis, followed by Councilmember Ong.
Good morning.
Morning.
Thank you, Chair. Two questions. I'm going to conjoin them together. The mayor's block-by-block housing plan commits more than $22 billion in housing capital funding over the next 5 years, with approximately $4 billion in the new HPD capital funding as part of the broader $22 billion housing investment strategy. So I wanted to know, how does this level of capital funding compare to the prior mayoral housing plans on an annual basis, and what specific portion of these funds represent truly new capital investments versus previously planned commitment? And my second question is, does the administration's housing capital plan also include funding specifically dedicated to studying and advancing housing development on top of existing city-owned property? And if so, are agencies expected to absorb planning and redevelopment costs within their own capital budgets, or is OMB establishing centralized funding sources to support feasibility studies, design work, and so on?
Sure. So let me start, and I'm going to turn it over to our first deputy director to address that. So I think in your second part of your question with respect to
agencies.
Right, in terms of on city property, we have the LIFT task force that is specifically focused on ways that we can seize opportunities to build on city property. And so there's a team together that's constantly looking at ways that we have property, across across the city to be able to build housing there. I do want to turn it over to Tara to talk about your first piece of the question in terms of like how our capital investments rank in terms of housing plans.
All right. Thank you. A few aspects to your question. In terms of if the agencies would be anticipated to absorb the cost of that additional development, unlikely. That's more of a development proposal as opposed to an agency operational need. So when that need would be identified, it would either be funded out of HPD's capital budget, or if it was an environmental study required, we would look at it within DCP in their EIS budget. In terms of how this ranks compared to annual funding from prior administrations, we would have to take a look at that. What I can tell you is that the vast majority of funding within the 5-year plan is going towards housing. So
Right.
the 22 billion is on a base of 117 billion in total.
Right. All right. Thank you, Chair. Thank you.
Great, thank you. Okay, Councilmember Ung is actually not here, so Councilmember Wong, followed by Krishnan.
Thank you, Chairs. I have a question about the DOB on cutting of inspectors. The executive plan includes 7 new positions at DOB, but also includes savings as a result of the elimination of 16 positions at the department for a net decrease of 9 positions. This is extremely concerning as DOB plays a critical role in inspecting building hazards. My question is, how many DOB inspector positions were part of the reduction of the executive plan, if any? And can you confirm that no inspector vacancies will be reduced as a result of the headcount decrease in the executive plan? Thank you.
Sure. So I think first thing is that when we did the vacancy reduction exercise, we ensured that there would be flexibility for the agencies to make determinations based on their funded headcount. At the same time, we wanted to make sure that revenue-generating positions were not also being swept up in the vacancy reduction. So DOB received 7 new positions solely to help them execute the recommendations of the SPEED report. And so the vacancy reduction exercises, again, revenue generating exempt, so it's up to the agency to make that determination. Would you add anything?
Correct, it is up to the agency to make that determination, but inspectors is something that the agency does prioritize. It would be self-defeating for us to pull inspector vacancies out of the agencies, and they do have 58 vacancies at the moment.
I see. Thank you. My second question also regarding DOB on sidewalk sheds. Earlier this year, DOB announced sidewalk shed reforms to be implemented by this year. Reforms would extend the timeline for inspections an extra year, create an abbreviated filing program for lower risk, well-maintained buildings to every 12 years instead of 5, and mandate sheds only extend to a maximum of 40 feet away from buildings. My question is, when will these new regulations be implemented, and how many sidewalk sheds does the administration hope to remove this year and in the next 4 years? Can you answer that, please?
Sure. So the DOB is currently in the rulemaking process to be able to move forward on meaningful reforms on sidewalk sheds. And we know that there is sufficient resources that the agency has to make sure that they implement the rules on sidewalk sheds. So we look forward to talking with you more once those rules have been promulgated.
Okay, thank you, Commissioner.
Thank you.
Thank you, Chair. I have one question for round 2.
Okay,
Thank you.
great, we'll add you. Councilmember Krishnan, followed by Narcisse.
Thank you so much, Chair Lee and Speaker Menon. Just a few quick questions. Good to see you, Mr. Budget Director and the OMB team. The Department of Investigation has a detailed history of rooting out corruption, especially in the last administration. The last administration also slashed their budget too, year after year. But its mission is both one of independence and also very sacred for the work of city government. What we heard from the preliminary budget hearings and executive budget hearings is that once you take out the fundamental payments they have to make, rent and things like that, they're only left with $175,000 in public funds for their budget, which is very, very little. and it forces them to have to look to their asset forfeiture funds to really supplement and boost their core operations, which is also drying up too. So I know we've talked about this before too. How is OMB thinking about increasing DOI's funding to make sure they have the resources they need for their mission?
Sure. So thank you, Council Member, and for your advocacy here. I know that, so I've met with the Commissioner on a couple of occasions and her team, and we've gone through their budget in great detail. So I've seen the actual trajectory of their asset forfeiture funds and how they're being used to cover sort of your basic day-to-day. And we know that the past is true, that they've had significant sort of reductions in their budget over the last several years. And so we are committed as an administration to rooting out corruption, waste, fraud, abuse wherever it exists across government. We look forward to having the conversations with you and with the council on making sure that we have a well-resourced DOI. I'm confident that we can get there in this adopted budget.
Great. I'm glad to hear that and look forward to the continued conversation. And similarly, there's a $4 million need that DOI has to be able to do the investigation and to publish the report on the 9/11, the knowledge that the Giuliani administration, Bloomberg administration had of toxins in the air on 9/11. So how are we looking at that? Is OMB able to commit to putting that $4 million in this budget?
We also look forward to having those conversations with the council in the next few weeks and fully recognizing that that is sort of separate but related, clearly, but separate from their day-to-day needs and what they need for their PS and OTPS budget.
Glad to hear it. And switching gears for a minute, I know we share the same vision for increasing our Parks Department funding and how crucial that is too. There are still PEP officers, for example, about a third that don't have the funding in place yet once their funding expires on June 30th. And there's a larger question of making sure our parks overall get more funding to ultimately get to a place where they have a proportionate city budget, proportionate to the city budget, the overall city budget, and to other cities across America. So how do you all see increasing the parks budget in this budget and specifically supporting worker alliance that are expiring on June 30th?
Sure. So we were proud to put forward $15 million and be able to baseline that for parks, and we identified some titles that it would cover. We know urban park rangers, forestry management, parks maintenance workers. We know that there's been highlight on PEP officers. We look forward to having that discussion with you and with the council in the next few weeks.
Great. Thank you very much. Thank you, Chair.
Thank you. Councilmember Narcisse, followed by Banks.
Good morning. Thank you, Chair, and thank you, Director, and all your leadership. Go Knicks, we can win this. The city's support, serious now, the city's support to health and hospital relies largely on supplemental Medicaid payment that draw directly down a federal match. If that match shrinks, does the city have a plan to protect the health care of those who rely on it the most on H&H?
Thank you, Council Member. As you know, we are grateful to have a Health and Hospitals Corporation that is a safety net for so many New Yorkers who need to access health care. This is something we are focused on to make sure that the hospital system can continue to thrive. We know that we have been in conversation with the state. Clearly, a lot of the Medicaid funding flows from the federal government to the state and down to us, so we need to make sure that whatever the state's plans may be to address what the impacts of HR 1 will be, what the trickle-down effects may be on the city, so we know how to fully sustain our health and hospitals system.
Thank you for that. On FEMA reimbursement, the executive plan includes an additional $176.3 million in H&H budget in fiscal 2026 as federal reimbursement for costs incurred during the COVID-19 pandemic. How much FEMA COVID reimbursement funding that has H&H received to date? How much longer do you anticipate H&H to receive this reimbursement funding for? Is H&H being reimbursed at a sufficient level for the costs it incurred during the pandemic? Does OMB work directly with FEMA to determine the reimbursement amount H&H is receiving?
So the Health and Hospitals Corporation has closed, FEMA has closed really the vast majority of the city's FEMA COVID portfolio. Health and Hospitals has received over $2 billion in reimbursement for eligible costs during, or against, I should say, FEMA COVID grants. So, yeah.
I heard the speaker start talking about shelters, but I have one question for you. How come during the height when we had all the migrants, we were coming in and we have more money like for homeless services we have more money in the budget now for the services for homeless in our city, while during the height of the migrant crisis, we had less. So which direction are we going? Are we putting people in permanent housing, or we plan to continue using shelters and to serve the population that we have in New York City?
I think as demonstrated in our block-by-block housing plan, we are committed to moving full steam ahead on an ambitious housing plan, 200,000 new affordable units as our goal, 200,000 units, homes preserved as well. And so the plan is, chock full of strategies to be able to address that. So our primary goal is to connect New Yorkers with permanent housing. That is the goal. That's where we want to be. We also have an obligation to serve the unhoused, and that is why you see a Department of Homeless Services budget and so on and so forth. And we addressed what had been, as we discussed, chronic under-budgeting in primarily the social services area by adding billions, really, when you look at shelter, when you look at city FEPs that had been under budgeted, when you look at cash assistance. Those are 3 areas among the top 6 that we talked about in terms of addressing chronic under budgeting. But the goal is permanent housing. That's what we need to focus.
I think that's the best way to go. Knicks, let's win this.
Let's do it.
Nice. Councilmember Banks, followed by Morano.
Thank you, Chair. Thank you, Speaker. Good to see you, Director. When it comes to NYCHA, the Executive Capital Commitment Plan includes an additional $500 million in HPD's capital budget for RAD-PAC, NYCHA conversions. We heard from NYCHA last week that this amount was determined by OMB. Can you explain how it was determined that $500 million was the appropriate amount for additional funding for PAC? The plan includes only $90 million additional capital funding for Section 9 compared to the $500 million for PAC. What criteria does OMB use to determine how to balance investments in NYCHA Section 9 versus PAC? And has the administration considered adding large sums of funding for alternate capital improvement programs such as CompMod, Comprehensive Modernization, and Order Preservation Trust?
Sure. Thank you, Council Member. So I'll start and then I'll turn it over to...
And if you can't answer the question fully, please do it in writing.
Absolutely. We're happy to follow up with you, but actually, why don't I turn it over to Tara Berard to talk you through?
So in terms of the funding that went to Section 8 conversions, the $500 million, we looked at which projects were shovel-ready. We looked at what the pipeline was in terms of what the agency wanted to do with both PACT as well as Trust. Another factor was that the funding for PACT and Trust kind of falls off in the out years, so we had to make sure to give them another lifeline to keep that pipeline going. In terms of the total amount of funding that we have for NYCHA, it's well over $5 billion, and in fact, the money that we have going to Section 9 exceeds what we have going to PACT and Trust. So if you look at FY26 to FY30, $2.7 billion going to PACT Trust, $2.8 billion going to NYCHA Section 9.
Well, we're talking about the next fiscal year, which is
I'm talking about 26 to
So in 2027,
in 2027,
what is the dollar amount that's going into RAD-PAC or privatization compared to what is going into Section 9?
In 2027, there's $1 billion that's going to Section 8 conversion, but that's split between PACT as well as the trust. And then there's
So
an additional.
just repeat, what's the total amount of money? These are straight questions. What's the total amount of money that's going into RAD PAC for 2027 compared to what's going into Section 9?
As I stated, it's $1 billion going to Section 8 conversion that is split between PACT and trust. So as NYCHA comes to us with
And how much is going into Section 9?
$841 million. Now, the last part of your question, I believe, had to do with comp mod and
Correct.
that alternative strategy. So generally speaking, that's not a model that we see that can be easily replicated because it does not draw down on additional Section 8 federal resources. It basically means that NYCHA and the city would have to pick up the full freight of the development cost, and we're trying to do this in a more efficient manner.
Well, the comp mod fund, the city can invest in that fund, am I correct?
Can.
And the city has opted out not to.
I think that we're looking at a whole series of strategies in order to bring down the PNA cost. Part of that is PACT, part of that is trust, part of that is updates to Section 9 housing.
How much funding has been invested in the Preservation Trust?
That is within the Section 8 conversion pipeline, so it's going to be a total of $2.8 billion between 26 and 30, combined with PACT.
So how many developments will be converted or will get the opportunity to go trust preservation?
We'll have to get back to, NYCHA has to tell us about what's going through the pipeline, but we're in the
If you
process
can give
of
us some
closing.
clearer numbers as to how much is going into each,
We can send
because
that.
obviously you've abandoned comprehensive modernization, which is something that has worked and continues to preserve public housing, and you've continuously dumped more monies into privatization of public housing, and that is definitely concerning. And that leads me to my next question, if I may, Chair. The Mayor's Housing Plan recognizes NYCHA's critical role in addressing New York City's housing crisis, and I've heard that continuously. Why does the administration continue to rely heavily on private development partnerships and RAD PAC conversions rather than the advancing a comprehensive strategy to reinvest and preserve traditional Section 9 public housing? It seems contrary to his philosophy.
I think if you look at the numbers, it tells a clear story.
I've seen
in
the
terms-
numbers.
Okay, I'm just answering a question. If you're looking at the total budget amount, you'll see a total of $22 billion going to housing. A full quarter of that amount is going to NYCHA. Of that amount, you have over half going to Section 9 preservation. And within the balance that's going to PACT and trust, a substantial amount will be going to the trust, which is fully within NYCHA management control.
All right, and just want clarity, the administration continuously uses the word comprehensive or NYCHA renovations. Is that just a coded word for privatization of public housings,
I think that actually refers to the level of upgrade that's going to be done to the developments as opposed to.
So in that,
Okay.
that term that's being used, it's not privatization of public housing?
I couldn't really speak to where you're seeing the term being used. I
Well,
think in
I
general,
mean,
if you're talking about.
This was in the director's
I believe if you're looking at comprehensive modernization, you're really looking at hard costs within the developments and what it takes to upgrade each of the apartments.
And my last question.
Can I
If I
put
may.
you in round two? Is that okay? I'm sorry, because we.
Thank you, Madam Chair.
Great. Okay, Councilmember Morano, followed by Epstein.
Thank you, Chair. Thank you for your leadership and endurance during these hearings as well. It's greatly appreciated by all of us. Thank you for your testimony, Director Solomon. Your testimony stated that this administration inherited a $2.2 billion budget gap in fiscal year 26 and a $10.4 billion budget gap in 27, right?
We talked about a $12 billion gap that we inherited, yeah.
So for the benefit of the committee and the public, can you identify the 5 largest components of that fiscal year 27 gap? More importantly, what I'm trying to get at, were those costs genuinely unforeseeable, or were they known obligations that simply hadn't been fully budgeted?
So we talked about the 6 big unbudgeted or under-budgeted areas. We talked about cash assistance, shelter. We talked about city FEPS, it's in the social services bucket. We talked about due process cases, judgments and claims, and the city's MTA subsidy. Those 6 accounted, because we added the funding, $7.5 billion that were unbudgeted. So the administration came in, we said, we need to be transparent, we need to level with New Yorkers, we need to be able to budget what are known expenses, known trajectories in programs that we've observed, and that when I came in to speak to all these talented professionals told me these are the actual costs, and we assessed it. And we
So it wasn't a forecasting problem, it was a transparency problem.
In our opinion, yes, it wasn't put forward. Yeah.
So I definitely think New Yorkers are eager to know not only what was inherited, but what happened afterwards. Of the fiscal challenges facing the city today, how much is attributable to obligations inherited from the prior administration, and how much is attributable to policy choices made since January 1st?
What we've talked about is in this executive budget, what you see, or in terms of over the course of the preliminary and executive budget, what you see is $17 billion that has been added in expenses, which is a very large amount because a lot of it, again, was the chronic under-budgeting. And 92% of that is to address the under-budgeting and the core government functions that the city needs to run. That's snow removal, that's IT, that is these programs that are mandated in many cases by either the federal government or state regulation, state law. So that accounts for that. So 8%, just 8% of that, 1.39 billion, right, has been added for programmatic investments.
Before I wrap up, Chair, the controller, Mark Levine's budget analysis released this morning concludes that fiscal year 2027 may not actually be balanced and instead contains approximately a $1.65 billion gap. Does OMB disagree with the controller's analysis? If so, what specific assumptions does the controller make that OMB believes are incorrect?
We believe we've accounted for under budgeting, and I think the controller actually confirmed that and actually applauded OMB and the administration for making sure that we put up unbudgeted costs in a way to be more transparent. In terms of additional costs that the controller is highlighting that they assert are not in the budget, we're happy to have that discussion and see what they're seeing and what they feel as though is not reflected, and we can move forward. But we have addressed what is effectively chronic under-budgeting in our, in the city's budget system.
Thank you. And for round 2, I have some questions about veteran services, so stay tuned.
Great. We've been joined by Councilmember Marte, and next we have Councilmember Epstein, followed by Ressler.
Thank you, Chair, and thank you all for your time and patience here. So I want to follow up on what the speaker raised earlier about the DCWP funding. We saw an OMB report earlier in the year which said they needed 321 lines to be able to match all the additional work the agency is going to be responsible for. And I know we've talked about 77 lines this year and a total of over 180 over the next 2 years. It does seem like, based on what OMB's earlier report said, that would still be close to 150 positions short to keep up with the needs that the agency has. I'm wondering how you square those two decisions.
We've, in this administration, worked with the new commissioner who's done sort of a top-down assessment along with City Hall. This has been flagged as a priority, obviously, for the mayor. And the commissioner, we worked with him to understand what his agency needs were and with the legislative mandates that apply to the agency. And that was the number that we were able to do, which the commissioner also testified was sufficient for being able to carry out the duties by those local laws.
Yeah, you know, when we had the hearing with the commissioner, we talked about whether these additional staffing would result in no backlog, people not waiting a year. He couldn't commit to that. If we see that there's going to be continued backlog, is OMB committed to trying to get additional staff lines? So New Yorkers who have a wage hour overtime violation doesn't have to wait 6 months to be able to speak to someone, not even the timeline it would take to actually prosecute a case to get them their money back.
The mayor has been very vocal and is committed to ensuring that there is restitution that is achieved for workers that have been, that have been the subject to these actions. And so that is what the department will do. We'll continue to assess with the department if there are constraints between the heads that they have and between their ability to fulfill the full mandate by the local laws that they've been entrusted to implement.
So I noticed there's no money in this budget for people who are advocating for delivery workers or street vendors who are doing the outreach. I'm wondering why there was no funding put in to ensure that the appropriate outreach and the language capacity by the organizations that are doing that outreach has been funded to support this work.
We will look at, we did add, I know you mentioned specifically, you said delivery workers.
Delivery workers, street vendors, people who are doing...
Street vendors, we did add over a number of agencies, including SBS,
No, I'm talking about...
SBS to do the outreach in multiple languages.
So I was talking about nonprofit organizations who have the relationships already with the street vendors and the delivery workers. Those are the people who are the critical infrastructure here, and there's no funding in the budget to ensure they have the resources to talk about the additional laws.
Well, the direct funding that would go towards organizations will be a conversation for Schedule C as part of ADOPT, as direct to those organizations. But we did make sure that we went through the small business services to make sure that they have the money, they have the funding they need to ensure that they can do outreach in multiple languages to the mobile food vending community.
Just if I can just quickly, Chair, just is there any capital money? I know Chair Dinowitz mentioned capital money for Mitchell-Lama. Is there a capital money put aside to give to Mitchell-Lamas who are struggling? We have a lot of Mitchell-Lamas who are facing 20% increases, and it's because of the capital needs. Is there any money in the capital budget for these Mitchell-Lamas?
We'll get back to you. I will note that the state budget included $60 million in capital funding for Mitchell-Lama development, but we'll get back to you on our capital plan.
I appreciate it. And then Animal Welfare Office in the Mayor's office, was there any increase in funding for that office?
Patrick? No, but happy to have these conversations with you as we
I
go
appreciate
forward.
that. Thank you very much.
Thank you. Okay, we'll circle back to Councilmember Ressler, and next we have Councilmember Eldebol.
Thank you, Chair, and good afternoon.
Good afternoon.
I have a question about pension amortization. The state budget included a provision that will push off or reamortize some required pension payments over the next 5 years, the unfunded accrued liability. While the maneuver is estimated to generate as much as $2.2 billion in the short term, it could cost an additional $7.6 billion over the next 10 years. Additionally, changes the state made to improve pensions for workers in Tier 6 is estimated to cost another $1.4 billion over the same period. What are the administration's next step towards pension amortization, and what is left to be negotiated with the municipal unions? And how does the city plan to close bigger gaps in the out years of the financial plan owing to this amortization? And do you believe that there are any risks to the city's bond rating as a result of the amortization?
Sure. So thank you for your questions, Council Member. So the amortization, as you noted, as I noted in my testimony, is a prudent way to pay down what is a long-term debt obligation by flat level dollar payments. the figure you cited about the 7.6 billion cost over the plan, that is for all employers in the pension systems. It's not only the City of New York, it's the MTA, it's Health and Hospitals, it's NYCHA. There are different employers that participate. So the cost over time to the city would be $5 billion, but the savings as well for the short-term fiscal stability is also significant as well. In terms of the status, we are the state law requires that it be approved by the boards of trustees of each of the systems. We are pleased to report that that the Board of Education Retirement System has approved. We know that the NYSERS board is coming up on Thursday, and then the other boards will come up for the remainder of the month. So we look forward to seeing those votes approved by the boards of trustees to actually effectuate the proposal. In terms of the rating agencies, we've been in constant contact with the rating agencies, as we do after we release every plan. So I've met with the 4 rating agencies last week. And we had a very positive discussion on what this proposal does. And we talked about the fact that it was level dollar, flat dollar, and we talked about the funded ratio for each of the pension systems. New York City's 5 systems at 86% versus the national average at 79%.
Thank you.
Thank you.
Okay, Councilmember Ressler.
Thank you, Chair Lee. Good to see you, Director and team. And firstly, I just want to commend you all for balancing the executive budget. It was no easy feat, and I think in particular took impressive skill in navigating Albany and securing significant support up there. And that didn't happen by accident. And you and the First Deputy Mayor and others deserve a great deal of credit for accomplishing it. I'd like to try to cover 2 topics today. Child care vouchers, first of all. So we have 25,600 children on a waiting list today who are in desperate need of child care support. And we have not yet heard any commitment from the administration about whether they will begin to invite children on that waiting list to access child care vouchers. There are a couple of things that I'd like to just get clarity on and then see if we can get some support today from you on this. Firstly, there are 31,000 children who are enrolled in mandated HRA vouchers today. For some years, we've been getting estimates from HRA on when they anticipate reaching the 63,000 threshold again of children on mandated vouchers. First, we heard that it was going to be in January of 2028, then March of 2028. Most recently, they testified last week that it's not until September of 2028 that we're going to hit that threshold, which means we have significant resources available for the non-mandated voucher population, low-income vouchers that our families need, these families on the waiting list. Can you identify how much savings we have as a result of the delay in the take-up on the mandated vouchers? Secondly, it was recently reported that the city has only spent 105 of the extra $350 million that the state has allocated for voucher funds. This is the maintenance of effort funding where when you spend this money, we get matching dollars from the state. We need to make sure that it's spent down. Can you confirm that every penny of that $350 million will be spent by September? And then thirdly, just to keep it simple, what I've been advocating for with some colleagues in the council and child care advocates is that we spend money this year on SCCR vouchers, the special child care funding vouchers that are a 1-year commitment instead of an in perpetuity commitment until children age out at age 13. Is OMB open to working with us on a 1-year model to use the extra funding that we have, that we've identified and just, happy for you to confirm exists, to expand child care vouchers for this coming fiscal year?
So thank you, Council Member, and thank you for the kind words. I think that, so first on vouchers writ large. So yes, you cite what we were able to accomplish in Albany and the additional funding that we got for the vouchers. The city tax levy funding that you speak of to meet the maintenance of effort will be met. We will put up that funding, and we intend that we will spend the full amount of what is provided by the state and what is provided in city tax levy to continue to fund vouchers for the eligible population as exists right now. Now, you mentioned the wait list. Of course, the wait list, does exist. We'd like to get there within the existing funding. We think that we can cover the existing population. However, if there should be attrition, that happens in the existing population, or should we see that overall state market rates go down, there may be an opportunity for us to, with existing funding, be able to reach into the waiting
Not
list
sure market rates will
coverages.
go down, but the state has delayed implementation of the increase in the market rate, which is helpful. And the attrition rates we've seen are steady. So we know what the resources we have. We can make the evaluation today. Can we add families for a one-year voucher commitment instead of an I get that it's a major financial commitment for the city to say we're going to enroll a child in a voucher at age 4 that they're going to have until they're 13. But it's less of a commitment to say this year we know we have the money because the mandated take-up is dramatically slower than OMB and HRA and ACS had anticipated. We have extra resources that we can spend in FY27. Can we start to offer children on that waiting list SCCF vouchers to help connect them to childcare for this coming fiscal year?
We're happy to talk to you about your suggestion and look at it in the next few weeks.
All right, I appreciate that. I have
Thank
more,
you.
but I think I'm round 2.
Round 2, yes.
Round 2, Chair Lee. Thank you very much.
Becoming a longer list of round 2. Okay. Councilmember Brewer, followed by P. Sanchez.
Thank you very much. It's nice to hear answers. For the last 4 years, we didn't have any answers. I'll be honest with you. I say it like it is. A couple issues. In terms of DOI, I know you have met with the commissioner, but my question is, did that include the $4 million for the 9/11 discovery?
It did.
So you're going to pay that?
We are going to look forward to the conversations we're going to have with you. I think what we were able to do is, and I met with her on 2 occasions, to look deeply at where they were in terms of an operational standpoint, and then obviously compliance with the resolution passed by the council on, by you, Councilman, to basically, to fund the effort that's needed for the 9/11 toxins investigation. So we look forward again in the next few weeks to talking about how we have a well-resourced DOI. It's an order of magnitude question, right? So we have to be able to work together and figure out what that order of magnitude will be, given the funding envelope that we have.
Okay, some small issues. Doris, I love Doris, and they have the FOIL responsibility. They need $255,000 to codify their open records portal, which will help us with FOIL. Is that something that you will fund?
It's something we look forward to discussing with you in the next few weeks.
Okay, and then also COIB, another agency that pays attention to corruption. They need $450,000. I know that you are paying for new paras to them, terrific, but they need extra to have a better staff salary and to hire an attorney. Is that something that you would
I think they're all part of the conversation that we intend to have.
Okay. And then in terms of electrical vehicle purchasing power, DCAS, you probably have the best commissioner. She's smarter than everybody else. I just want to let you know. No kidding. So in that case, do you have an estimate of how much additional expense or capital will be needed to purchase 640 vehicles every year to ensure the annual electric vehicle targets are met? Is that something that you're focused on?
We have in the 5-year capital commitment plan more than $4.7 billion, not just for EV vehicles, but for projects that reduce greenhouse gas emissions. And in there, we also have funding, I believe, for electric vehicles. We can follow up with you on the exact amount. We do have actually medium-duty electric vehicle purchases, $9.6 million in FY27, FY28 and 29, for a total of $28.9 million over the next few fiscal
years. All right, we can have a discussion about whether that includes these vehicles that I'm talking about. Okay. The other thing is, in the recent DYCD, a good commissioner, but she managed to upset everybody, not just one, but every single member, with her new ideas about an RFP and changing some of the after-school programs. Is that a cost-saving issue, or just like thinking that you're doing the right thing, but it's really not?
I don't think it was a cost-saving issue. I think it was.
I don't think it was either.
Yeah, I think it was a release of an RFP and the responses to the RFP.
Okay, but is that something that you could look at, or that would just not be in your bailiwick?
We are looking at it with the DYCD commissioner.
Okay, really, it's upset every single person imaginable. So I just would start over. Suggestion, I could help you with that. CUNY. ASAP, ACE, and Reconnect. I know that you're focused on CUNY. We all love CUNY. Those programs need to be fully funded. Is that something that you're focused on also?
We all love CUNY, for sure.
We love it, but we have to fund it.
Yes, well, we did put up the 15 million and baselined it.
Yes, you did. That's great.
And we also put up 50 million in capital for state of good repair, the most that they've received for that in over a decade. So that was important investment too. In terms of the programs which we know work, ASAP ACE and CUNY Reconnect, we look forward to having that conversation with you and your colleagues.
Okay. In terms of healthcare, there's no number, but we're all concerned whatever Trump is doing, Medicare, Medicaid, et cetera, mostly Medicaid. How are you thinking about that as a future challenge in terms of people getting cut off? I don't know whether you go to New York City Cares. I don't know if you just show up at the emergency room. It's obviously going to cost more.
Yeah, I think, as I mentioned, we're working closely with the health and hospitals and with the state because we need to understand what the state intends in terms of Medicaid funding that may be cut from the federal government. At the same time, we know that SNAP is also a real concern,
Correct.
and that's why we made strategic investments, whether it's the Community Food Connection Program, whether it's Groceries to Go, whether it's Get the Good Stuff, whether it's investing in SNAP eligibility specialists. We're committed to making sure that we have food assistance for those who need it. And so it's an ongoing conversation. I think it's been said before that the city doesn't have the capacity to backfill the magnitude of those kinds of cuts, but where we can, we will act and make those investments in partnership with the council.
All right, thank you.
Great, thank you. And I know the Commissioner of DYCD is working hard in terms of the after-school
Not hard
programming.
enough.
Yes, well, hopefully we'll hear some good news. Okay, great. So we have Pirina Sanchez, followed by Brooks Powers.
Thank you, Chair, and good afternoon. I hope somebody is passing you snacks. Sugar?
I don't know. I saw a granola bar being eaten by Councilmember Ressler, but offered some.
Hint, hint.
You gotta restart my. Somebody get them some sugar. Okay. In March, the New York Post published that Mayor Mamdani signed a $1.9 billion 3-year no-bid contract for DSS to house homeless households in New York City hotels on an emergency basis. Homelessness, we know, leads to community instability, family trauma, more disrupted childhoods, more families in crisis. Does the administration believe a $1.9 billion contract to house families in hotels over the next 3 years, homeless families in hotels, is a good investment for the city of New York?
So let me start, Council Member. Thank you for the question, and I pass it over as well to Patrick DiStefano. I think, as was mentioned before to Council Member Narcisse's question, our primary goal is to focus on housing. And I know this is an area that's near and dear to your heart. We need to make sure that is the first approach. That's the first goal. At the same time, we have an obligation, legal obligation, to house the homeless. And we know that there has been, over the years, have been capacity constraints that required the reliance on hotels. We have, as part of our cost containment, looked to move out as many families as possible from those hotels into where the shelter capacity exists. There's more to do, clearly, but we also have to fulfill our legal mandates as well. Patrick, I'm not sure.
Thank you. I'm
Okay.
so short on time,
Okay.
but thank you, Director. I understand that these funds will be dispersed as they are used. If the administration agrees that this kind of sheltering is not optimal, what steps is the administration taking to ensure that we use as little of this contract as possible? And I'm just going to sneak in my next question is a clarifying question from General Welfare hearing. Is this a fair characterization? FEPS houses roughly double the number of people. City FEPS houses roughly double the number of people at roughly half the cost as shelter, not accounting for this no-bid contract I just mentioned, about 82,000 people, with $3.2 billion being spent in shelter contracts and staffing versus 153,000 people, double the number of people, at $1.8 billion for city FEPS. Is this a fair characterization? The DSS commissioner did not answer my question during her hearing, so I'm hoping that you all will.
So I think that with respect to the City FEPS program, we know that it's a lifeline for many New Yorkers. We know that we want to be able to focus on how we could sustain the actual program. We know that as well, we've seen the shelter census continue to increase in certain populations. The families with children began to decline, but we've seen single adults continue to increase. And so we as the city FEPS voucher program continued to rise and hadn't been budgeted for, as you know, as we discussed, we haven't also seen those savings in the shelter side. We would like to see that happen, and we're actively managing with all of the new leadership that we have, both at the agency level and at City Hall. It's something we're constantly focused on. So we want to move out of hotels. We want to be able to connect people with permanent housing. That is our goal as we look to move forward as an administration.
Thank you. FEPS houses double the number of people at half the cost in shelter. Fair characterization or not?
I would respectfully say that we agree that FEPS is a lifeline for New Yorkers, and we'll continue to work with you. I know you're passionate about this issue, and we're having productive talks.
Thank you, Commissioner. I don't know if that's a demotion or a promotion. Thank you. These are numbers that you all, the agencies, are putting out, so it would be helpful to make sure we just have the same understanding. So thank you, Director.
Okay, great. I'm going to take a brief pause because Deputy Speaker, do you want to introduce special group?
Yes, I'm so excited to interrupt this very important budget hearing to welcome a school from my district. Hello. Yes, PS 147, and I just wanted to send a special shout out to the student council. I visited, I think last week or the week before last, and they were very excited. They said they had tried to get a tour at City Hall. One person was actually graduating, and I was like, let's make it happen. So shout outs to the student council, Holly, Stevens, Trish K, Prince David Pierce, Michael, Farzana, Bryn, Tessa, and Aiden. Thank you so much, Chair, and of course to our OMB Director for allowing me to interrupt. Thanks for coming.
Thank you. Okay, we have 3 more folks, and then we'll take a quick break after that. So we have Councilmember Brooks Powers and then Councilmember Aviles.
Thank you, Chair, and I've already put my name for round 2. So in round 1, I will focus on the district. Round 2, I'll focus on my chairmanship position. So it's good to see you, Director. First, I'm actually going to ask you all 3 questions, and then I can repeat whatever you need to do. So the Rockaway community for decades has advocated for a trauma center, and we have been able to secure $50 million in capital funding as well as a publicly owned site for the facility. Rockaway residents are closely watching whether this administration plans to invest in the trauma center. Can this administration explain why there is no funding in the executive budget for the trauma center and whether you intend to rectify the situation in the final budget? The next one is Senator Sanders has allocated $1 million towards the trauma center, but has been told that he cannot move the state capital funds to Health and Hospitals for this project. Health and Hospitals has informed us that OMB is not allowing for the transfer to move forward. Can OMB please explain why the funding that is already secured in the state budget cannot find a home within Health and Hospital? And lastly, the council appropriated $10 million for the Brookville Park Recreation Center in fiscal '24, yet that funding was later removed from the capital plan. Subsequent commitments to restore those funds have only been partially fulfilled, resulting in roughly $22.5 million currently budgeted, despite a combined council and administration commitment of $32.5 million. Why did OMB remove funding that had already been appropriated? Why was I not notified before these changes occurred? And when can the community expect the remaining $10 million in committed funding to be rectified in the capital plan?
Thank you, Council Member. I know that we've had a couple of conversations about the trauma center.
Really one yesterday, but.
Well, also in the cow when we had a little brief conversation, but yes, I do agree that this is something that we need to look into. I know that we spoke about the money that was existing in the budget. We talked about what else would be needed. We talked about whether or not the actual estimate was a correct estimate vis-a-vis what we had said versus what was put out there in terms of the overall dollar cost. So I am evaluating all of that with the team and looking at exactly what the estimates are. So we're talking about what the actual numbers are that we can all agree with. We need to agree on a number first, and then talk about how there's available funding in the funding envelope.
I'm sorry, Director. I'm sorry, one moment. Because I will say, while it's one thing to look at the final dollar tag, which I do not expect the administration will cover. I would love for you guys to cover the full balance, but I doubt it. So at the same time, what is the administration's commitment in this fiscal year in terms of funding in the final budget for the trauma hospital? The previous administration had provided $50 million, not including funding that the council has also funded on the expense side of this. I want to know what this administration's commitment is going to be.
And that's obviously a conversation that that we'll be having with you over the next few weeks. My point was that in order to make a determination about, particularly when it talks to capital, because with capital funding, as you know, if a project isn't fully funded, you can't do the certificate to proceed, a capital project can't.
I understand.
So we need to figure out what the actual, we need to have an agreement on the numbers. You had mentioned that H&H said it may be this. We knew that our team was saying something else. So I'm gonna, talk to the parties about it and figure out what the actual number is. Then we need to look at the funding envelope. It's just a matter of funding to see what is actually doable. I'll look into the Senator Sanders $1 million as well. In terms of the rec center, we also discussed that, and we'll be going back and looking at, as part of discussions that happened in the past, what was the change to that funding that went from, I think, 10 to 5 million, you said?
Yeah, it's a balance of 5 million. Now, Director, we did, to your point, speak about this yesterday, so you had a preview of what I was going to ask today. So I would imagine that you would have some sort of an answer for me right now under oath in this hearing.
I do not, but I'm happy to follow up with you as I continue.
Can I ask why you're not prepared when we spoke yesterday and you knew that I was going to ask these questions?
Beginning of a conversation, and I'm happy to continue over the next few weeks with you.
But I've been asking this question since the preliminary budget.
Understood.
And there's been no progress and no indication from the administration that we are moving beyond this statement that I'm getting right now.
Understood. And we also talked about a provider for the actual facility.
And we spoke about the provider being a part that's happening simultaneously with the securing of the funding.
Yep.
I don't want this administration to hide behind that as an excuse when we have been successfully securing funding in the last several budgets and prioritizing this from the administration. Mayor Mamdani has shared with me privately that he understands the need in this community and the fact that healthcare is a human right, but I'm not seeing that demonstrated in action. So I do ask that, Chair, if possible, before this hearing is done, that I can get an answer, because I did preview these questions and I think it's unacceptable to not get an answer to basic questions. I want to know if the administration is going to commit to some level of funding for the trauma hospital, as well as restoring the $5 million that was removed from the Brookville Park Recreation Center. Thank you.
And we'll work with you on hopefully getting some sort of answer on that. Sorry, I have like 10 papers in front of me. We've also been joined by Councilmember Hankerson as well as Mealy, and we will hear from Councilmember Aviles, Marte, and then Hankerson. Sorry.
Great, thank you. Thank you so much. I want to start with immigrant legal services. Last year, first, thank you for baselining the $33 million at the preliminary. Last year, we saw, there was a $53 million that we have not seen the restoration of this additional funding for this year. A portion of that funding was used to restore, honestly, the lost federal grants that we had seen for legal services in particular. I have to press that, the funding restoration that happened of those $53 million, really, we had a great partnership with OMB staff around making those designations to service providers, and we would definitely like to continue that partnership. Can we receive a commitment from the administration that it will continue to fight for that 53 million, particularly at this moment in time where the federal government continues to harm immigrant communities and threaten on a daily basis that they're going to flood New York City.
Yeah, we're happy to continue to work with you on this. I know that the Immigration Legal Services, in terms of funding, is at $54 million fiscal 26, $71 million fiscal 27. As you noted, we had added 6.7 million in fiscal 26 and 33 million in FY27 and out. So we did baseline it. So it is a significant sort of down payment on what we know is needed, particularly at this time. We appreciate your advocacy on this, on this issue as always, and we look forward to working with you more in the next few weeks.
Great, and again, it was a great partnership with DSS, OMB, the council to make those designations. We'd like to continue to do that work together.
Surely.
On NYCHA vacant unit readiness, our favorite, one of our favorite topics. Thank you for your collaboration in trying to address this profound issue of the 6,200 units that remain vacant throughout NYCHA campuses. Obviously, we have been pushing to obtain 100 million in capital and 70 million in expense to really be able to meet that full need to obtain the full scope of getting those units ready and online for New Yorkers. Can you tell me what progress is being made in expanding those commitments to meet that goal?
Sure, we agree. Obviously, that's why we added funding, the most that we can add, given the funding envelope to the budget. It's also something that is highlighted in the block-by-block housing plan as something that we really want to lean into. We've allocated nearly $374 million to the vacant unit and readiness program. That's total in terms of talking about $256 million in city capital funding across fiscal years 2026 to 2028, and $118 million in expense funding across fiscal year 2026 and fiscal year 30. When you really put this in perspective, it's an historic amount of funding for the program. We know there's always more to do, but I think given the backdrop of the fiscal challenges that we have, the fact that we step forward with this investment shows meaningful progress.
Yeah, thank you for that investment. I think we'll continue to push that in that New Yorkers and NYCHA residents can't wait till 2030 to be transferred out of an apartment. That needs to get front-loaded now, or at least we need to try to maximize in the short the amount of units that we are able to turn over, and we still feel like we haven't hit that right threshold. We are still far behind. And not as urgent in this funding. And again, this would house thousands of New Yorkers immediately. We don't need to build new buildings. We don't need acquisition. These are New Yorkers that can be housed today within the next 2 years, not 2030. So thank you. We'll continue to have that conversation and keep pushing to maximize that investment in the immediate. Because when we do the numbers over the long term, it's a bump up, but it's not where we need to be. Thank you.
Thank you.
Great. Councilmember Marte, followed by Hankerson.
Thank you for being here. I want to +1 what Councilmember Avila said about NYCHA and continue on that front. In the mayor's block-by-block housing plan notes that the capital investment in NYCHA since 2023 has begun to slow the growth of NYCHA's PNA for the first time in recent history. The most cited number of the authority total needs of approximately $78 billion from 2023. Is there a more updated number than this 2023, or is there a number going to come out soon that's more recent to make a better assessment?
As of January 2026, the estimated PNA is at $78 billion. And so it's a slight decrease from the 2025 estimate of $78.6 billion. Yeah.
And how did you determine that? What factors led to the slowdown?
So the physical needs assessment is done by NYCHA, not by OMB, but in terms of how they're attributing to the decrease, it's really the progress that's been made on the developments. So everything that's happening with, will be happening with the trust, with the pact, with the renovations to Section 9, helps to bring down the cost and bend the curve.
Okay. We were excited about the news about the CRI, which is based off the Ombudsman Call Center, but just wanted to know what's the total fiscal 2027 budget for the OCC?
For fiscal 27, it's 7.5 million. Fiscal 28, 7.5 million. Then 29, 2.5. And obviously, we'll see how the out years go with respect to funding.
Okay. And I have a question about the out years because we see a decrease for CRI as well. I think they're funded 7.5 million for fiscal year 2027, 2028, but then it drops to 2.5 million in 2029 and 2030. Why does this funding decrease in those outer years?
Yeah, so that's the one that we just referenced, but in terms of the funding dropping in fiscal 29?
I think the first 2 years, there are some one-time costs that are being picked up, and then we'll be reevaluating on a year-by-year basis.
Okay. All right. Thank you.
Thank you.
Okay, Councilmember Hankerson, followed by Councilmember Mealy, and then we'll take a break. I'm sorry about that.
Thank you, Chair. Good afternoon, Director. The Council has for many years called on the administration to baseline one-shots for a variety of initiatives within the Parks Department, specifically for headcount, including PEP officers, forestry workers, green thumb workers. We were happy to see that the executive plan included baseline funding for some of these. Does the administration plan to baseline the remaining one-shot positions in the budget, which would include PEP officers, which are desperately needed right now, as well as green thumb programming and tree stump removal programming, which is near and dear for my district in Southeast Queens?
Thank you, Council Member, for your question. We were proud to put up the $15 million for parks and baseline it and not wait until adopted budget negotiations to be able to deal with that. That's going to fund urban park rangers, going to fund forestry management and other parks workers. We know that it's been highlighted that PEP officers also need funding, and so we look forward to discussing that with you and with the council in the next few weeks.
From your estimate, do you believe that the administration will baseline?
We are happy to talk about more investments in parks. The mayor has always talked about more investments in parks. We know we have a 1% goal that the mayor has committed to during his mayoralty, before the end of his mayoralty. And so we'll continue to talk about ways to invest in this great public amenity.
Well, I'm glad that you brought that up. So, given the mayor did make a commitment to getting parks to the 1%, what is the administration's plan to get there within the term?
We obviously came into office, we faced a staggering $12 billion gap. As mentioned in my testimony, we worked really hard to make sure that we were able to stabilize the city's finances. Now that we've done that, we've done that without increasing the property tax. We've done that without raiding reserves. We've done that without slashing services. So as we become more fiscally stable, we can talk about the investments that we need to make. We've still carved out of all the expenses that we've added this funding for parks. We've carved out money for libraries, for culturals, things that would typically have waited for adopt, and we baselined it because we believe in those investments in our institutions.
And not to cut you
So
off,
we'll get there.
I believe that, but what exactly is the plan? You spoke about what you all have done, which I think is amazing, but given that you've been able to do that, I'm sure that there's some plan to be able to get to where we need to be with parks.
This is the beginning of putting up the $15 million in the executive budget. As we move forward, the plan in terms of overall budget, continuing to pursue savings and opportunities, and then looking where we can free up funding to make those investments.
If I may, just one final question. If that be the case, how can you say that we'll get there within the term if there's no plan to get there within the term right now? If you're saying we need to see where we can pull from, but the commitment has already been made now twice, once that we would get to 1%, and now that we'll get to the 1% within the term, but there's no plan, I'm kind of lost here.
Our goal is to meet that 1% before the end of the mayoralty. At the same time, the twin goal is to make sure the city's financially stable, to be able to make the kind of investments that both you and I agree need to be made in our parks. So it's an ongoing effort, and we're going to work with the council as partners on that.
Thank you.
Okay, great. Councilmember Mealy?
Okay. Older adults and SNAP benefits. Many low-income older adults rely on heavily on SNAP benefits. HR 1 expanded SNAP work requirements, and now adults up to 64 years old who are deemed able to and subject to the same work rules as younger recipients. People between the ages of 60 to 64 who did not previously have these requirements could lose their SNAP benefits. If they are not working, this June is the first month where people will lose their SNAP benefits if they do not meet the work requirements or obtain a waiver. What is the administration doing to address the potential impact of the work requirements on older adults between the ages 60 to 64 years old?
So this is something that is a focus of ours. We know that through our Deputy Mayor for Health and Human Services, she's looking at ways that we could mitigate the impacts of what is to come based on the federal government's actions. We've invested in more SNAP eligibility specialists.
Much?
We've been, Patrick, you have a top of your head on the SNAP eligibility specialist? You've had it? We'll get that for you as I continue to give my answer.
So demographic of people that need.
Yes.
Do you know what this would happen to 60 and 64? We
That's
have
why
to
we've
know
been,
this already before this budget passed. In order to have our seniors have to get a job to get SNAP benefits, that's life and death. So it's no plan. You don't know how much you're gonna put extra right now.
We've invested in the Community Food Connection Program. We've invested in the Groceries to Go program. We've invested in Get the Good Stuff program. So we are investing in food assistance.
So how many people you feel gonna get a waiver to not work? Did you estimate that into play?
That is something we're working on with our Deputy Mayor of Health and Human Services and our agencies.
That's kind of unacceptable. Yeah.
What I would also add is I don't know the number of SNAP eligibility specialists off the top of my head, but in this plan, we added nearly $70 million for HRA staff. So in addition to doing away with the 2-for-1, I mean, they are hiring up rapidly for these benefit access, frontline critical positions. They've also identified a specific phone number for SNAP, so you can call to make sure you're getting your benefits. There's a lot of outreach. So they're doing a lot in this field.
Well, I'm gonna follow up with you. Where about the home delivered meals? Is the administration considering adding fund to New York City agent budget to support higher reimbursement rate for home delivered meals to cover the true cost? About right now, you're saying it's $14.78, but when the administrations get reimbursed, it's really $16.17. How would you reimburse them with that gap?
So as of the executive plan, programs contracted budget is $81.1 million, supporting 4.8 million meals for older New Yorkers. And so we increased the per meal rate by $1. We regularly address the change in cost as appropriate. Patrick, I'm not
So
sure
what
you
is
wanna
the
add
appropriate
anything.
cost now? $16 or $17?
We continue to discuss that with the agency to make sure that we're covering what is appropriate. We know that there's outreach in this area, so we're working with the agency on it.
But you know the CBOs, they are getting reimbursed half of what they really need.
Yep.
That's not fair to the CBOs just as well. Thank you.
Okay, great. So we're going to take a 5-minute break, and then we are going to resume with round 2. So thank you.
Thank you.
Could we find our seats? Can we find our seats?
Okay, we want to make sure you guys don't stay until dinner time, so we want to get you guys out. So we're going to go right into second round questions. Okay, where do I begin? Okay, so I'm going to start with the HRA SNAP state and federal funding cost shifts. So at the General Welfare Committee's executive budget hearing, I brought up the SNAP cost shifts resulting from HR 1. We had hoped that the state would step up and include this funding in its enacted budget rather than shifting the burden to localities. The first and most imminent cost shift is $111 million for the city's share of the state's new SNAP costs. The executive plan does not appear to include this funding in HRA's budget to support this. At the general welfare hearing, HRA testified that this funding will likely need to be added in a future financial plan. So can you confirm that no funding was included in the enacted state budget to support this?
There was no funding provided, but at the same time, we have not heard from or had a confirmation from the state that this $111 million would be passed along as a reduction to the city. So not in the budget, no confirmation from the state that that will be passed along.
Okay. And if not, have there been, so you just mentioned there have been conversations with the state about, did they say anything about appropriation of funding towards this in the future? Was that
They didn't. We obviously, in the lead up to the enacted budget, had several conversations, and the result, of course, as we talked about. So, but this wasn't something where they indicated or confirmed that this was going to be a reduction to the city's budget in the same context that we were talking about ways that we were going to receive additional state aid to help us with gap closing.
Okay, and do you think that we'll need to be adding this into the FY27 adopted budget?
Well, I have to wait and see what if there's confirmation from the state. There was nothing, again, in the enacted budget, so we don't have anything confirmed for the state for us to act on in our budget. But if it comes to pass in a future plan, then we'll have to reflect it. We would obviously want to make sure we're engaging with the state to be able to convey what the hardship would be with that $111 million if we had to see that reduction.
Right, because this is definitely going to be a huge impact to the community and New Yorkers. So, got to figure this one out. One of the many conversations we'll be having in the next few weeks. Okay. Additionally, starting in October 2027, there will be an additional cost shift to states that could result in a 15% increase in the cost to states. The rate will depend on the state's error processing rate, and HRA testified that the state noted that this cost shift would likely impact HRA's budget. Does OMB have an update on how this cost shift would affect the city's budget?
We're continuing to look at that with the agency and also with our, administration colleagues that are looking at all the actions coming out of the federal government, and so we don't have any confirmed information to act upon at this moment.
Okay, and is there any possibility the implementation of this would be delayed?
Not that we know of.
Okay. Okay, so a couple questions on the healthcare accountability, which the speaker, as you know, had created an office for. In 2023, through the passage of bipartisan legislation that the speaker championed, the council made it easier for New Yorkers to understand their healthcare costs with the creation of the nation's first municipal, okay, sorry, I thought I was going crazy. Okay. Made it easier for New Yorkers to understand their healthcare costs with the creation of the nation's first municipal office of healthcare accountability. OHA would examine healthcare costs and hospital pricing practices, and the law would revolutionize healthcare in New York City by bringing transparency to prices and empowering New Yorkers with the information they deserve. And as someone who is on the provider side, I can definitely tell you that this is totally true in terms of the higher costs. So what is the current budget and headcount for the Office of Healthcare Accountability?
So first, I mean, it is an important function of this office in terms of introducing transparency in terms of hospital pricing and other ways that the consumer can be more informed. The budgets had been established within the health department and it's fully funded at $2 million per year. It's fully staffed at the moment. And, you know, there's a report that was published last year by the administration after significant sector collaboration and assessment. And so we're proud of their work in this area in terms of Department of Health and Mental Hygiene. And they're working on the next iteration of the report as we speak.
Okay. And when's the next report due again? I'm sorry.
We can come back to you on an exact timeline.
Okay. Great. And then child care workforce development. With the expansion of 2K, 3K, there is a growing need for trained and certified early childhood educators. To support the growth, CUNY has requested that the administration allocate an additional $6 million for various early childhood education training and certification programs, including an apprenticeship program. So what investments has or will the administration make in supporting the training and certification of early childhood educators in anticipation of the ECE expansion?
We're examining further. I mean, I think CUNY as an engine of upward mobility also plays an important role in terms of workforce development. I know this is a big priority for the chancellor. My time there, certainly, I've heard him talk about this a lot. And so CUNY can really be a catalyst with this kind of work. And so we're evaluating their requests. We look forward to having those discussions with you in the next few weeks. I would also note just in general, I know this is not the same issue, but it's related in the sense that we were happy to put up 40. We know that between the other investments that we've made to stabilize and expand 3K, and then the launch of 2K in the 4 districts so far, we know that this is an important piece of the puzzle that we look forward to working on because you need a workforce to be able to accomplish the goals that this administration set forward.
Right, and I know that, again, to my earlier question, I think the process takes a while in terms of the background checks and all of those things, and so I think that'll be key in helping us to streamline and get more folks in the pipeline, so whatever you all can look at to speed that up, that would be great. And I know that we were also talking yesterday at the DOE hearing about pay parity across the board with our early childhood programs. And so if you could work with DOE to make sure that we look at that holistically, whether you're a CBO provider versus a school-based provider, I think there's differences in the contract amounts there. So that would also be great if you could look at those numbers as well with DOE. Okay, and then lastly on the citywide grocery stores, FY27 Executive Capital Commitment Plan includes $70 million for the development of city-supported grocery stores. As we've heard, 2 of the 5 proposed sites have been identified already, one at La Marqueta in East Harlem and the other at Hunts Point in the Bronx. If the city plans to open up city grocery stores, is it going to be run by contractors, or what are some of the other options that you're looking at?
In terms of the sites and spaces, we are looking at, the EDC is looking at spaces that make sense to house these sites across the city. We obviously will have specifics at some point about any lease negotiations and specifics in terms of where they will exist. I would say that optimal program design is still under consideration, but we are making sure that we're looking at the parameters of store operations that EDC is looking at, and to make sure that it also comports with what the vision is that was initially set forth. We're making sure that we're committed to economic justice, addressing affordability, obviously worker dignity, and neighborhood visibility. So we hope to make more progress and share more information soon.
That'd be great. And if you could just let us know as things progress, you know, who's going to be selected, the type of workforce that you're going to be engaging, and all of those things would be great.
Certainly.
Okay. I'm going to... Oh, okay. Sorry, just another PSA. We're moving the next two hearings into the committee room next door at 3:30 for those in chambers and listening via live stream. So just wanted to let you guys all know that at some point we are going to have to get kicked out of this room, and we'll move to the committee room to prepare for an event here tonight. Okay, and with that, I'm going to move on to Deputy Speaker Williams.
Thank you. Just going back to libraries, given the substantial backlog of capital needs across 3 library systems, including aging facilities, HVAC, and roof repairs, ADA upgrades, and other state of good repair projects, how did OMB determine the level of capital funding included in this year's exec plan, and how much capital needs remain unfunded?
Yeah, so I think, Deputy Speaker, this was you know, we had to look at this in terms of available capital funding that we had. We had the submissions from the libraries in terms of what they were looking for. I think what we tried to do here was to say $50 million that's spread over one project for each of the library systems. Understanding that moving forward in the next few weeks, we'll have a discussion about, you know, potentially additional investment based on the overall funding envelope that we have.
Okay, and another issue that the library systems raised was the PICA program. So we know it was negotiated as a mandatory city health benefit. Obviously, it's an unfunded mandate, and so the library systems have to pick up the cost. So we just wanted to understand why these costs went unfunded. And why do the independent library systems have to absorb the cost?
Sure, we're looking at the numbers now with our team, and we'll be able to communicate soon about the parity funding that comes out of the health funding piece.
Visuals to have access to all the things that PICA comes with, but it does feel like an unfunded mandate for them to have to absorb that cost. Thankful for the baseline funding, but this of course creates additional needs for the library systems. Okay, some more questions on my favorite topic, the racial equity plans. Okay, so OMB has developed a fairly robust climate budgeting framework that evaluates capital investments through the lens of emissions reduction, flood resiliency, and heat resiliency. Is there currently a comparable framework within OMB for evaluating racial equity or environmental justice impacts when budget decisions are made? I know you're working on it, but wanting to understand, again, if anything exists currently.
Yeah, I mean, I think that we are developing the plan that we have in our preliminary plan to get there for the next budget cycle. But the sort of the absence of a particular specific rubric or framework doesn't mean that we aren't being attentive to investing with respect to new needs in disadvantaged communities in areas where we know have been targeted for underinvestment over the years, and there are areas in this budget where that sort of bears out. There was an announcement earlier this year about Community Parks Initiative, for example. We know that we have funded in this budget the New York City Her Future program. That's just another example. We know, for example, in the 2K siting, when really looking at where those districts will be, we look at the housing plan and really how we can make sure that the block-by-block comprehensive plan, the 200,000 new affordable homes, the 200,000 preservation, where's that investment happening, and how can we integrate an equity lens into that plan? So All of that means that we are focused on it, but we're going to have something that is structural and formal to say, let's go through this, perhaps in the way that climate budgeting, as you noted, actually does. We'll look to be informed by existing models to be able to improve what we have.
Yeah, and on that note, it's my understanding that OMB works really closely with the Mayor's Office of Climate and Environmental Justice to integrate the climate considerations into the annual budget process. So, again, already existing, you have this formal structure. So wanting to understand if that coordination process, a similar coordination process would exist with the Mayor's Office of Equity and Racial Justice.
Yes, I mean, I think it's in the same way that the climate budgeting is inextricably linked to the administration's environmental justice work. I think it's sort of similar, right? We want to make sure that our budget is representative of the decisions and the choices and the investments that we make to tackle a systemic issue, right? And so we're making sure that we're looking at, in the same way that we would look at environmental justice or investment in fossil fuel reduction or decarbonization or the various tools that exist there, what are the tools that we can employ here vis-a-vis investment for where we know there's been a paucity of resources that have been devoted to either services or amenities or public institutions, and that is what our focus will be.
Okay, so the plan establishes a goal of having agencies utilize equity budgeting tools and strategies during budget submissions. Will there be any accountability mechanisms for agencies that fail to meaningfully incorporate equity considerations into their requests?
Yeah, it's something that we are attuned to, and making sure that it's a two-way street, right? I mean, that's the goal here, is that OMB clearly is going to do its part in the framework, but we want to make sure, and again, the racial equity plan, it really charges all the agencies with thinking in this way as well, which is to say, if a new need is going to be submitted at its inception, how does it comport with the racial equity plan? How does it advance those goals? It will make the process much more aligned and compatible if we know the front end is also matching up with the back end. So we're committed. I know agencies are committed as well, and we will have a good product when we're working together in a two-way street.
Okay, just a few more questions, because one of the great things about the racial equity plan too, you have like a dual role, because you have this role because you manage the budget to sort of hold agencies accountable, but you also are an agency. And so just some questions specifically about your agency and how you are going to advance racial equity just in the functions of your agency. The agency's long-term racial equity goals, including advancing pay equity and incorporating the city's true cost of living measure into pay parity analysis. Has OMB identified any existing disparities within your agency's workforce, and what corrective actions are being considered?
We are looking at ways that we achieve, I mean, the pay equity piece is also a citywide effort. With our agency ourselves, we're looking internally to be able to say, how could we offer more opportunities, either promotional opportunities or hiring opportunities, to make sure that we have an effective and diverse cross-section of employees across our agency. We spend a lot of time in professional development as well. I know my first deputy director has been big on that long before I even got to OMB. Having an OMB Institute to basically make sure that there's a pathway, an upward pathway for OMB analysts to be able to develop in the agency and get promoted. So we're committed to that work and making sure that the agency makeup is representative of the diversity we'd like to see that exists, frankly, across our city.
Yes. So to that point, do you believe that your agency, its leadership structure reflects the diversity of the city it serves currently? Do you believe that your agency reflects that?
I think we have a diverse leadership in the agency. I think that we look for the best and the brightest, but we also look to have, again, a leadership structure that is representative of the diversity that we see in our daily lives. And so I'm committed to that. And the opportunities that may exist will also diverse.
Thank you.
Thank you.
Okay, great. Majority Whip Hanks, followed by Councilmember Brooks Powers.
Questionings regarding the community grocery stores. I don't know if this question's been asked. Has the administration conducted any studies on how the community grocery stores will impact small businesses, particularly like bodegas or local grocery stores?
We are attuned to those issues. I know in speaking with EDC, they are also attuned to that. We also know that through our small business services, we are investing in as much as we can to help small businesses. This program is something that directly relates to the affordability agenda, and the time now is even more salient when we see costs going up and the fact that the SNAP eligibility looms large, and there are so many factors that are playing into the need for grocery stores in this proposal. So it doesn't have to come at the expense of small businesses.
Thank you so much. So does the administration have a plan on how they'll engage council members whose these grocery stores will reside?
We're happy to take that back to our intergovernmental teams and our leadership. And
Please do.
Yeah.
Please do. Thank you. Okay, one more question. Sorry, Chair. So over 40% of New York City public school families speak a language other than English at home. The DOE's Immigrant Family Communication and Outreach Initiative is a $4 million program that helps immigrant families get important information about their child's education through strategies such as sending paper notices, calling, texting families, and collaborating with immigrant-facing CBOs. Does the executive plan, does not include this funding in the fiscal 2027 or in the out years? Can you speak to how this funding will be used this school year?
We will definitely be discussing that over the next few weeks with you and the council, and also with the Department of Education, to see how we can support these services.
And what would the programmatic results be if this $4 million in funding is not restored in FY27?
Well, it is an important service. We have to see how we can talk about it in the next few weeks in terms of the adopted budget. Having language access is critically important, and so we'll work with our team on New York City Public Schools to see how that goes forward. But Liz, I don't know if you have anything to add on that piece? No?
No, I can just say we'll continue to look towards this for adoption, and we're happy to continue conversations with you.
Okay, so one more. So if the DOE, they supported this program, have you given any indication why this funding wasn't included in the executive plan?
I think it's just a question of the overall funding envelope. We made a lot of investments in DOE. We also ELL programs, et cetera, in terms of the weights. So from our perspective, this is the fact that we need to have a public school system that can communicate. That's important, and we have to talk about that in the next few weeks on how the funding envelope can support that.
Thank you so much.
Thank you.
Thank you.
Thank you. Okay, Councilmember Brooks Powers, followed by Jay Sanchez.
Thank you, Chair. I'm going to again ask a couple of questions back to back just in the interest of time, but this is focused on the space of criminal justice. Regarding the Rikers Island closure, the Independent Rikers Commission has issued its blueprint to close Rikers Island, which lays out population. These programmatic recommendations are a critical component of the borough-based jails plan, but despite the council's advocacy, didn't receive adequate attention in the prior administration. How have these recommendations been incorporated into this plan? One example of a program that hasn't been sufficiently funded is Justice-Involved Supportive Housing, also known as JISH. In 2019, the city agreed to add 380 more units, bringing the total to 500. Currently, there are only 250 units online, half of which are supplemented with funding from the City Council to stabilize the reimbursement rates. When does the administration plan to fund and bring the remaining 380 promised units online at the higher reimbursement rate? Also, alternatives to incarceration operate at a fraction of the per person cost of Rikers and have been shown to be effective. But the executive budget does not increase the funding to ATIs. Can you explain? And then lastly, in terms of Department of Corrections technology, at the hearing on the Department of Corrections executive budget, Commissioner Richards testified that it is a priority of the Department of Corrections to modernize the agency. Is there money in the department's budget to fund new technology? Would this technology be capitally eligible? And one of the council's priorities is the development and implementation of an online scheduling system to facilitate visits to incarcerated individuals per local law 43 of 2025. OMB originally estimated that developing this software would cost $2 million. Have those funds been included in the department's capital budget, as this technology would be transferable to borough-based jails and therefore meet the 5-year lifespan requirement? And I can repeat any question you need me to.
Sure. So let me start first writ large about Rikers in terms of Rikers closure and the borough-based jails projects, and we're committed to those, and we know there are various locations that are in progress in terms of the different sites. At the same time, we made sure that we made investments in Rikers now in terms of maintenance. So we invested in cell doors, for example, to make sure that they're workable, and other maintenance that is required at the facilities. With respect to justice-involved supportive housing, as you noted, we have currently 120 units, and we hope to bring the city's total number to more than 350. We know that the health department has updated an RFP for the new units, and we urge providers to be able to apply. And so our goal is to basically increase the number of units that are there, and again, we encourage providers to apply. With respect to DOC technology,
I'm sorry, Commissioner, before you move on, the question was when does the administration, because I know the administration has been verbally supportive, but when does the administration plan to fund and bring the remaining 380 promised units online for the reimbursement rate, at the higher reimbursement rate?
Sure, we're going to stay close with the health department because that RFP is out there, and so we need to understand what the responses are and be able then to plot a plan forward based on those responses to say when will these contracts be in place and when we can move forward with funding.
So will the funding be included in this fiscal year budget at all?
It depends on what the outcome is with the health department and the RFP. But
when is the RFP done? Due.
RFP is, Patrick, do you know what it is?
The RFP was put out already last year.
When is it due
4.8 million
back?
was funding. I believe it's rolling, so you can apply as the applications come in and you fill all the units and the dollars available.
So if it's rolling, it's into perpetuity, so there's no timeline in terms of the funding, and we're in the fiscal year
It's
right
been,
now.
my understanding is in the past, there's been RFP on the street, but there haven't been responses. So we need to basically find out how we can invite people, and please, with your assistance and partnership, please get out the word using, of course, your committee to basically say, look, we need providers to be able to respond to this RFP, and then we can get there faster.
I don't want to compare you to the last administration because, this is a new administration. So again, if you're saying that the funding is going to be tied to the RFP, but the RFP does not have a deadline, there's no commitment for the funding. I'm trying to get an understanding as to when the administration plans to fund and bring the remaining 380 promised units online at a higher reimbursement rate.
So the funding was added in the baseline. So the funding exists. As the applicants come in and are awarded, they will be awarded such till we reach the
So the
funding
money
limit.
is there, it's just a
Yes.
matter of when the RFP,
When
you
applicants come in.
when they come in, then you'll release the funding.
Yes, when they
Okay.
sign a contract.
Thank you for that clarification. Sorry, Director. technology.
No worries. So the DOC technology, we're assessing the funding availability and the necessary upgrades. We've been in conversations with DOC. I think that during the executive plan, the department is able to self-fund a new project ID for visitation software for the requested $2.1 million. So we're glad that that's going forward. And we've also approved certificates to proceed for various technology projects, like the offender and jail management system to manage PICs from intake and through discharge as well. And then we also have a Workday software platform, which replaces the old agency legacy system for HR and payroll system. So we're working with DOC on their technology needs. We've made some improvements, more to do.
And then the ATI funding, do you anticipate more money by the final budget?
We're happy to talk to you about that in the next few weeks as we look forward to the adopted budget.
Thank you, Chair.
Great. Okay, so we have Councilmember Wong, followed by Jay Sanchez.
Okay, thank you, Chair. I have a question about the executive budget over here. Your own budget package says FY27 is balanced, but the out-year gap jumps to 7.07 billion. In the year after that, 9.07 billion. What recurring spending did OMB permanently align with recurring revenue instead of just pushing the problem into FY28? Because as I see it, this is kicking the can down the road. Can you answer that?
Well, I think, it's the number one. I think when we look at over prelim and exec and what we've added $17 billion in expenses because of chronic under budgeting, and you see how that propagates out through the system. And then when you look at sort of the revenue forecast, as my colleague talked about, which is more of a conservative estimate, in the out years, there are a lot of recurring savings in here and recurring state aid from the reversal of cuts and cost shifts that actually go into the out years and help us. So there's a lot that's been baselined, but you see in the fiscal 28 gap, that gap is more in line with historical numbers. We know that there is continued work to do on savings in the out years that we'll do through the chief savings officers, and revenue generating strategies that we need to continue to do so we can fund the affordability agenda.
Okay, thank you. Let me squeeze in one more question. Water revenue versus rental payments. Your financial plan projects total water and sewer charges of $2.318 billion in FY26 and $2.39 billion in FY27. Separate from that, the city is also extracting a rental payment of about $303 million in FY26 and $312 million in FY27 from the water system for general budget use. Question: how do you justify asking ratepayers for more than $4.7 billion in charges over 2 years while still diverting hundreds of millions of dollars away from the system?
Our world-class water system needs to be invested in. That's why we have the Water Authority, obviously, and rates go to fund the improvements and maintenance that make sure the system reaches its intended result, which is water, water access and delivery that we critically depend on. I think that with respect to the rental payment was already included in the revenue forecast. If we were to back out the rental payment, that would be a $300 million hole in the budget that we'd have to make up, elsewhere.
Yeah, but over here is for general budget use. It doesn't say that money's been taken out for maintenance and repair of the system. That's why it's concerning to me.
The rental payment has existed and is part of the revenue forecast that has no impact on what the overall maintenance of the system will be. And it was already put into the forecast. And if to take it out would mean that we would have to make up that funding elsewhere. Do you have anything there?
Yep. That's right. All right, thank you. I'll follow up with you on this. Thank you, Chair.
Great. Okay, Councilmember Jay Sanchez, followed by Lewis.
Thank you so much, Chair. First, I wanted to start off with sanitation garages. So there is extensive infrastructure being built out for containerization, yet a lot of the garage infrastructure that is much needed to house our trucks, do all the things that we need to do to run our system, are being pushed out into the out years. Has there been any conversation on whether the pace of the truck procurement will be aligned and available to deal with planned garage capacity?
Sure. We've had conversations with the sanitation department about this to make sure that their replacement projects are, we understood the timing that they would come online for those projects to be able to move forward. We've distributed by fiscal year based on the schedules and the cash flow of what we anticipate with the agency. We are basically not just expanding the fleet of the side loader trucks as related to containerization, we're also reducing the fleet on our rear loader trucks that offset the need for the additional space. So we're evaluating our options where space containerization, we're also reducing the fleet on our rear loader trucks that offset the need for the additional space. So we're evaluating our options where space obviously presents a challenge, but we're working with the department, understanding the timing and the cash flow of when those projects need to happen. Now, funding for the garage replacement itself, I think that we need to understand how within the capital project envelope, and this has been mentioned in other advanced, is as a possibility, or in other areas where we can repurpose. Some of the conditions that we see in the garages clearly need capital investment. There's no doubt about that. And so we're committed to working with the agency and with you as we go forward in the next few weeks to see what's in the funding envelope that could be provided.
And while, containerization is arguably a really great thing for the city, I want to make sure we're not putting the cart before the horse, and making sure that we have the actual tools to make sure that once we're fully in containerization, that New Yorkers are then not just bombarded with sanitation trucks all over their streets because there's no place to put them. Speaking of sanitation workers, the previous administration had put in a one-time funding for 21 sanitation workers in the heart of the hub, 3rd Avenue. It is the second most visited place in the city of New York after Times Square on a daily basis. The current administration just approved a 3rd charter school within 3 blocks, adding over 1,000 new students. And so really understanding where the conversation is with maintaining these 21 sanitation workers to ensure that as we're continuing to build out the hub, that we actually have the ability to clean the hub, given that in addition to all of that, it is the center of the opioid crisis in the city of New York.
Yeah, so I appreciate that, council member. I think that we'll work with the department to figure out what the overall resources are that are devoted. We understand that that was a particular area of focus that the department had in the past. We'll understand force levels and understand how we could work towards that goal.
Thank you. That's super important. Chair,
Thank
do I
you.
have time for one more question? Quick. And finally, the Huntsville Produce Market. This administration has made a concerted effort to really talk about food insecurity and food access with the expansion of the community grocery stores. However, the produce market, which feeds much of the eastern seaboard, is in the middle of a contract negotiation in which if they don't get it signed with the city by June, we lose our produce market. So has there been any conversation with adding more additional funds to the produce market and being able to make sure that we don't lose a vital, critical resource for our city?
I'm happy to look into that further and talk to EDC about that. Okay.
There's $130 million in city capital in the Huntsville produce market, and we're expecting $505 million in other grant resources, including $230 million from USDOT.
Thank you. Sure.
Thank you.
Okay, Lewis, followed by Brewer.
Thank you, Chair. I'm back again. I'll make it quick. The mayor has taken major action on the deed theft crisis by establishing the Office of Deed Theft Prevention to protect vulnerable homeowners in Central Brooklyn and Southeast Queens. Part of my question is for DOF, but I wanted to know from an OMB perspective, how does this office interact with HPD's new mortgage assistance program, if at all? And how does the office differ from the enhanced existing services provided through citywide council initiatives, such as the estate planning and resolution initiative and foreclosure prevention programs? And is the administration committed to working with the council to scale up and design the Office of Deed Theft Prevention? My last question, the city has historically struggled to fully execute its capital program, with the capital commitment rate falling from 78.3% in FY27 expand the size of the capital plan. What reforms are being implemented to ensure that agencies can actually deliver projects on schedule? And has OMB considered increasing appropriations without improving delivery capacity, and will continue to inflate projects costs and delay community benefits? That's all.
Thank you. You're reaching back into my prior lives on these two questions.
It's a good thing.
So deed theft, when I was commissioner, was a big focus as well at the Department of Finance. It was really a holistic view, and I have no doubt that you'll hear from Commissioner Lee when he testifies that it's a holistic approach. Of course, we'll work with other agencies, HPD, if they have information that can be brought to light under new leadership as well. We can look at that, the Land Records Division within the Department of Finance. Right. Can we see whether is there technology that could be used to be able to see the land records and patterns that are being, when a deed sort of transfers over? There was, I think, a proof of brought in, including creative technological tools, but then also working with other agencies and clearly law enforcement for those investigations and how they're supported. So it is a commitment, and I have no doubt that Commissioner Lee will talk about the broad strokes of how they're going to approach it. Okay. With respect to your second question, I mean, I think that this is something we're continually improving on, delivery of capital projects. I oversaw a capital process reform task force that brought together leaders from the industry, MWBEs, all stakeholders, labor in our capital construction universe, and being able to say, how can we streamline certificates to proceed? How can we have greater visibility into where the blockages or log jams are in those submissions? There's a new system that OMB has where we communicate regularly with agencies and say, hey, this CP is outstanding. You owe us some information on XYZ. Let's figure out how to get that and move that along. We've shortened the number of questions and time period to get to those points. We looked at things like blanket, capital eligibility and so on and so forth. So there are a lot of things that are going on to improve, clearly more to do, right. But the word is out with the agencies that we could, speed things along, and OMB as well. It's our responsibility too, to make sure that when a certificate to proceed is on my desk, we're moving it as fast as possible.
All right, so we look forward to that. Thank you for your response.
Thank you.
Thanks.
Great. Councilmember Brewer, followed by Banks, and then Morano.
Thank you very much. So a couple issues about buildings. We toured some of the courthouses, particularly the one in the Bronx Family Court, and there's leaks everywhere. So my question is, what funding, if at all, is allocated towards the courthouses in terms of renovations? Maybe not all of them, but is there any thought towards the courthouses and capital funding?
We've met with the Office of Court Administration recently with our Corporation Council, and I know that we've had visits, and I know that our friend, the DCAS Commissioner, Yume, has also been with us working there, and she's toured some of the facilities as well. So we need to have the facilities of our justice system in a state of good repair. We will see within our capital envelope what we can produce to be able to invest in there. I can follow up with you about what's exactly in the capital plan for that, but just to let you know that we are having those conversations and we're attuned to those needs.
Okay, I think a little bit before, this is about decarbonization, how much is allocated? I think it's $4.7 billion in the capital budget. Is that for schools and hospitals and public buildings specifically? And later on, could you break it down?
I think your number is
Might be not-
Correct.
Okay.
Yes, 4.7 billion for decarbonization and basically nearly $25 billion for projects with elements of supporting our net zero goals. And so you look at the 5-year capital plan, for example, $7.5 billion to address flooding and projects totaling over $1 billion to address extreme heat. Capital plan also includes $41 billion for resiliency elements. We are also developing a comprehensive climate action plan that will release in the spring of next year. So there'll be more on that soon. But we're also looking at reconstructing docks at the city's asphalt plants. That's $26.4 million in FY27. We talked about the EV purchases before.
Yes.
Heat pumps, clean energy at NYCHA. So there is quite a bunch of investments here. There's clearly more to do, but we do
Okay.
have some solid investments.
All right, I have more on that, but different topic. So Executive Order 12 required the Chief Savings Officer, CSO, to focus on recurring savings and efficiencies, as you know. They will provide updated assessments every 6 months. Can you provide some of the largest examples of agency efficiencies? When are the next round of assessments due? Should the council anticipate seeing them, either the adopted or November? And do any of them include improving agency performances? I hope so.
So during the break, Deputy Director Nathan Gusdorf was very sad that no questions came his way. And he was overseeing the Chief Saving Officer's exercise. So I would love to turn it to him to be able to address that.
Thank you.
I'm glad I'm not sitting up here for nothing. So just to start out, because as you noted, Councilmember, the CSO exercise is ongoing. We have 5 categories that we've used to frame CSO efforts that will continue to operate throughout the process. You've probably seen these numbers. But in the current $1.77 billion in savings across the 2 fiscal years, we have $24 million in savings from agencies giving up unused space, consolidating leases, and other leasing savings. $28 million in savings from IT upgrades, renegotiating software licenses, and other related IT savings. I think of particular interest for everyone here, $94 million in savings from pursuing better contract rates and insourcing functions rather than relying on outside consultants. $368 million from increasing the efficiency of public services overall, including things like overtime management, phasing out unused or redundant programs, and other programmatic improvements. And $947 million from improved financial management, better estimates, and revenue improvements, such as better grant claiming.
Okay, and as far as you feel strongly that in terms of how are we going to hear about all of this? We'll see the savings coming up. Is this what's going to be? Is that what you're saying?
So yeah, we continue to track all of these savings to ensure that they will be realized. Some of that is simply a matter of making sure that our estimates are accurate. Some of them do require implementation, and OMB is overseeing that in partnership with the Office of the First Deputy Mayor. And then in terms of the ongoing nature of the exercise, the executive order does require 6-month check-ins, but the reality is that we are in touch much more frequently than that in order to continue working on all of these savings prongs.
And you think the agency performance will improve as a result?
Yes, it has been such a priority to avoid service reductions and find efficiencies that we should see better agency service go hand in hand with the savings because they are targeting efficiencies.
Okay. Thank you. Quick question on water fountains. I know this is minutia, but the water fountains in the schools, they often don't work, and you can't get them fixed because you can't fix a standalone. Can you change that? No, you have to be part of some stupid big project, which isn't necessary, in order to fix a water fountain. That's stupid.
We look forward to talking to you about working with water fountains for sure.
Thank you. And then also...
sorry, Councilmember, because we got to move on.
Okay.
Time's constraints.
All
I'm
right.
so sorry.
Thank you.
But we're going to follow up with all the members' questions, and then if we can just make the questions and responses brief. Okay. Councilmember Branks, followed by Morano.
Thank you, Madam Chair. I know the emergency housing vouchers has been something that's been of concern, and obviously due to the fact the impact it may have on close to 5,200 NYCHA residents and some of the most vulnerable residents of public housing. During the last week's hearing, we heard that NYCHA is conducting outreach to the 5,200 EHV holders. And approximately, we believe, 1,200 had actually been signed up for the Section 9 wait list. This leaves approximately 4,000 households with an uncertain future with the EHV funding, which is set to expire in November. Is OMB aware of any state funding or alternative housing voucher programs that would help cover the $124 million, which is the annual cost for these households? And is the city prepared to cover any shortfall that might arise to ensure that these residents are able to retain their housing?
Yes, Council Member, we knew that this was an important issue that we had to confront in the face of the federal government cuts here in this area. So what we've been able to do is work with our agencies. We've looked at reallocating alternative federal funding, notably the home tenant-based rental assistance program. And we were able to do that so that we can use basically this rental assistance program to assist the households that are affected over a 2-year transition period.
Okay.
So, you know, I think the long-term outlook we have to really focus on still as well, because the problem will come right back.
Right.
We need to make sure that we're addressing it head on, but we went to work to find that alternative, as you noted, that will work for the short term.
And are you looking at any vouchers? Are these residents eligible for FEPS? Or I know NYCHA has been known to use the housing voucher for a lot of residents who on project-based Section 8, if they choose to leave or opt out of project-based Section 8, they've given residents, NYCHA residents, the housing choice voucher. Is that an option as well?
Yeah, I mean, I think we take a holistic approach. If we can assist households in any way, if you don't match up with one particular voucher and we need assistance, then our goal is to try to help as much as possible.
So you will cover the shortfall?
We'll look at it. We're covering the shortfall in terms of what we're talking about for that specific,
right.
The EHV loss, right? The emergency housing voucher loss through the tenant-based assistance program. But if there are any other gaps to fill that wouldn't be covered by what we've talked about, we'll look at other voucher programs. We just don't know if there's a match.
All right. Just want to make sure these 5,200 or the remaining 4,000 households are covered and protected.
We'll make sure we work with NYCHA to make sure that we can do what we can.
And one last question.
20 seconds.
Yes, one last question. NYCHA's capital needs has long been estimated at $80 billion, and I know it was lowered. You had mentioned that out at $78 billion. Given that significant number of developments have been already converted over to the RAD-PAC program, I believe close to somewhere between 27,000 and 30,000 units have been converted, and there's about 62,000 units that are in queue to be converted with this new RFP or expression RFP that's been released by NYCHA. What impact is that having on the needs, the capital needs assessment, or the $78 billion of capital needs that exists? Has there been an impact? And is conversion really, is it decreasing the capital needs of NYCHA?
This goes back to the physical needs assessment. There was a 2026 update, and it shows, as we talked about before, a slight decrease from what we saw last time of 0.8%. It showed that PAC conversion reduced it by $3.2 billion, and then other completed projects was a reduction of about $500 million. But then there were other new needs and inflation offsets, which kind of kept the number pretty stagnant.
And the reason why I want clarity on this is because NYCHA gave testimony to my committee that when a development is converted over, it doesn't impact the capital needs. So, but you're giving a different, it's contradicting what they're giving testimony to.
This is
what they've given
outlined.
testimony to.
The technical report for the physical needs assessment is outlined on NYCHA's website, so you can see the complete breakdown in detail in terms of how they arrive at that number and how it changes over time.
All right, well, I look forward to hopefully getting some clarity, and hopefully the administration and NYCHA can be on the same page when it comes to what the actual impact RADPAC is having on the capital needs. Thank you. Thank you, Madam Chair.
Thank you. Morano versus, sorry, I'm thinking tennis and sports. Morano versus wrestler, sorry.
My money's on Lincoln in that matchup. That's right.
Morano then wrestler.
Thank you, Chair. Thank you, Director Solomon. I have the honor of serving as the Chair of the Veterans Committee. The Department of Veterans Services represents only a tiny fraction of the city's overall budget at $6.6 million. How did OMB determine where savings could be achieved without affecting services to veterans? What specific metrics or performance indicators were used to make that determination?
So the first thing is that we really looked at, and you just heard this from Deputy Director Gustav, which is that we made sure we insisted to agencies, don't submit anything that's going to be a service cut. And if they did submit something that was a service cut, we would explore deeper as to how the agency felt it would be not a service cut, but an efficiency or program effectiveness or whatever other category it fit into. In this particular case, there was $60,000 that was the only proposal in the savings book that dealt with a planned parade that was supposed to take place. And that was the sole savings initiative that was accepted. There is, I believe there was one-time funded that was added last year at Adopt. That's a separate issue. That wasn't an issue related to the Chief Savings Officer exercise. So based on that, we had confirmed that it was an event. It was not anything related to cuts to veteran services. And in fact, we look forward to discussing with you moving forward, not only in Adopt, but overall, long-term. How do we enhance services to our veterans? It's the least we can do, and we look forward to the conversation.
As do I. So that $60,000 you alluded to, the executive plan includes $60,000 in baseline savings for DVS. So did DVS meet the same savings target imposed on other agencies, or was there a different standard applied because of the circumstances that you just alluded to with the parade?
Well, for example, so that was the sole piece. There was, in terms of the vacancy alignment exercise, they really didn't have vacancies that, or funded vacancies to be able to take. So they were exempt from that particular exercise. They had maybe two. Does anyone help me? But it was a very small amount where it wouldn't have made sense for us to apply the vacancy alignment exercise. So that was something where they were exempt. So really, we felt as though there wasn't an action that was taken as part of the savings exercise that would have any real impact on the department.
So just to reiterate and be clear, can you guarantee that no veteran seeking assistance with benefits, housing, mental health services, employment assistance, or discharge upgrades will experience longer wait times or reduced service as a result of these savings?
The Chief Savings Officer exercise does not impact any of that.
Thanks very much.
Thank you, Chair Lee, and I'm very happy to not be competing with Councilmember Morano. I wanted to focus on the Progressive Caucus's campaign for rentals within reach. As you know well, Director, we saw a disgraceful 12-fold increase in vacant NYCHA units under Eric Adams' administration, from just 486 when he came into office at the end of the de Blasio administration to well over 6,000 when Mayor Mamdani came in 4 years later. Similarly, we've seen the number of vacant supportive housing units that are in the city's control, DOHMH and HRA units, increase dramatically over these recent years. There are 1,157 vacant HRA and DOHMH funded supportive housing units today, as of a report from a month ago. So combined, we're looking at close to 7,200 plus vacant units that the city funds, that are in our control, that are for the poorest New Yorkers who need housing the most. We want the City Council to champion putting more resources in to activate these units. What do you think is the best way for us to fill, to renovate, and get activated these NYCHA units and these supportive housing units? Is it if we give additional funding to NYCHA to hire additional staff to fix up the units? Is that the best approach? De Blasio had a shelter repair squad a decade ago that fixed up shelters that were in substandard conditions. Should we be bringing resources together from other agencies to fix up NYCHA apartments? How can we break through and not ensure that it's just the same number of vacant units a year from now?
So thank you for your leadership on this issue. I mean, I know that you also have focused on this for many, many years as well. We know it's a priority of the caucus, and we know that from our perspective, what we added in the executive budget, we think it makes some meaningful progress. We know there's more to do. We want to be as ambitious as we can be. The block-by-block housing plan outlines how ambitious we want to be in there. A vacant unit doesn't serve anyone. We need to be able to, and we invested in ways that we can bring more apartments on and repair and maintenance in terms of mold and leaks. We have the OCC, call center as well. But the vacant unit piece, again, we talked about the numbers a little bit earlier. I know that, again, we'll make meaningful progress. And when you look at sort of the historic and recent history, it's probably the most combination between capital and expense.
Yeah,
I know that you're talking about more like strike forces or squads.
What's
that
the kind of
can
blitz
come
that
in
we
and
can do that
it.
can make a
Yeah,
difference this
something-
year? Because when we hear from NYCHA, when we've talked to them, they've said with the additional funding that the city's putting in, which we're grateful for, all we're going to do is stop the bleeding, and it's going to be the same number of vacant units a year from now. It won't improve because it's getting worse every year. And that just, being at status quo, having 6,000 vacant NYCHA apartments a year from now isn't a win. So we want to hear from OMB, what's the investment that we can make that will make a difference? If the council's willing to lead on this, and I can't speak for the speaker, but if that were to happen, what's the investment in vacant NYCHA apartments and what's the investment in vacant supportive housing that you believe and your team believes would make the greatest difference so that we could house potentially 20,000 New Yorkers who are desperately in need of affordable housing this year if we renovated these units?
Yeah, I think it's a conversation we'll have over the next few weeks, and we can tie sort of the investment into working with NYCHA to understand for every dollar spent, what does it buy us in terms of units brought online?
We have not had the easiest time scheduling some of these follow-up meetings, so we would love to, it's good to hear that you want to continue those conversations. Hopefully that will make it a little easier to get things on the books. Thank you.
I was going to make a joke, but I won't. Okay, Pirian Sanchez and then Mercedes.
Hello, we're still here. Okay. So continuing my questions around the FEPS program, at the General Welfare Executive Budget hearing last week, DSS gave us some insight into the cost containment savings in the executive plan for DHS and HRA. The plan includes savings of $543.5 million in fiscal 27, $280 million in 28, and $336 million in fiscal year 29, and $381 million in fiscal 2030 across HRA and DHS from city, state, and federal sources. These savings will be generated through a cost containment plan for the FEPS program and DHS shelters, where DSS aims to more effectively maximize the use of non-city funded housing subsidy programs, ensure long-term shelter residents obtain subsidized exits, and improve shelter diversion at intake. Can you walk us through how OMB worked with DSS to develop the cost containment plan? What specific indicators did OMB and DSS use to estimate the projected savings starting in fiscal 27? And if I have time, I'll ask more.
Sure. So thank you for your question. Let me start, and then I'll turn it over to Patrick DiStefano to continue. So we worked on, and I alluded to some of this in my testimony, but we looked at certain things in terms of centralizing central support, in terms of operational support, and finding other efficiencies. So it was a few things that we talked about. Rent reasonableness, for example. We talked about comparing legal rents against the Division of Homes and Community Renewal legal rent data list. We talked about reducing broker's fees. We talked about alternative ways that we can potentially use arrears, for example, rent arrears, through one-shot funding to be able to find a different pathway for families that may be facing eviction. So we talked about those and all of these things. What was the North Star here was without cutting vouchers, At the same time, we looked at ways that, and this is a one-time savings in terms of fiscal 27, which is can we, and this goes to your earlier question, council member, where we can look at ways to vacate some of the hotels and into shelter capacity where it exists, and that achieves, savings in FY27. Patrick, I don't know if you want to add anything to that.
All the things that the director said fit into this very holistic view of what we're doing here. I mean, even before that, before you get to the front door, we've invested more in right to counsel, $20 million or $40 million more for that. So we're trying to prevent evictions. We want to get at every step of the process, people from not entering shelter to when they get into shelter, if they get a voucher, they have education and training opportunities to be more self-sufficient. So holistically, we looked at every aspect of it, and that's how we arrived at these conclusions.
Thank you. I'm going to say a statement instead of a question, and to respect time, if the chair will allow. I think it is fair to say that settlement negotiations around the FEPS expansion there needs to be a number in the budget this year in this negotiation. And so I'm hoping that with the controller and the council's more rosy projections for revenue in this year, with these savings that are being identified, maybe more savings that are being identified, that we really get there in terms of being able to expand vouchers for families that need it. I think we can do so much more. And just on my question before, I do want to make sure that we get on the same page that FEPS is cheaper on a per person basis than shelter is, because I believe you. I believe that you want to focus, you and your colleagues in this administration want to focus on permanent housing. I believe that you mean that, and I believe that this administration and this council can think big together, and that we can be the first sort of administration to pivot the city from fulfilling our right to shelter mandate through shelter and do that instead in housing. We can be the beginning of a tidal shift. So I just really wanted to emphasize that, and thank you, Chair, for the extra time.
Thank you, Chair, and we can be the catalyst for this process and make sure it happens. Thank you, and you're so alert, and thank you for your time. Usually people get tired at a certain time. But as Chair of Hospitals Committee and ER nurse for many years in Level 1 Trauma Center, I want to really put my support behind the trauma center we're talking about on the Rockaway Peninsula. Peninsula needed for a long time, and I hope that we can address this. More than 100,000 people live in the peninsula, and they only rely on one single hospital for service. We lost a police officer because of it time consuming, and when you're in emergency, it's a tick-tock movement. Anytime you can be gone. And we don't want that to happen, so I'm hoping that you look into this. This is very important. Now, coming back to my District 46, Canarsie has lived through a lot. When we're talking about gun violence, our youth and our kids really want to have a rec center, and they've been asking for it. I play basketball in the court with them, and that's all they ask me, when we're gonna have a rec center. We don't have no swimming pool, and I think that's a great opportunity for us to address those. This is a prevention. As a nurse, we do preventive, we have to prevent things from happening. So I hope that we can work together on this. I already have a steady money, $500,000, and I'm hoping that if anything, anywhere in your budget, you can put some construction dollars to help us out, to save our kids.
So thank you for raising it. Happy to talk to you more about it. And, you know, it's the next generation of Knicks players on that basketball court. So.
Yeah. I'm a mom. What can I tell you? I grew up with them. Now I'm still playing basketball with them. So I don't want them to die.
Yeah.
And I'm sure you don't want that too. You're a smart man, and you know prevention is better than curing. So I hope we can sit down and discuss that and find a way for both projects. Very important. Thank you.
Thank you.
Okay, Councilmember Maloney.
Thank you for being here.
Thank you.
I have some questions around economic development. The EDC's economic snapshot from May 29th was generally upbeat, but net business formation was down 4,000 year over year and down 1,000 from the previous quarter. And more businesses have closed than new businesses were formed. In your assessment, what is causing the net business closure in New York? And I'll do a rapid fire for time. Are there specific industries that are struggling more than others? And how does the administration's priorities supporting small businesses and economic growth are incorporated in this budget plan?
Sure. Thank you for your question. And overall, I mean, I think we're going to work with and have been working with EDC to drill down on the challenges related to the business community. I think that when you look at the executive budget and what we've been able to do with small business services, providing the support there, whether it's the best BEST for the acronym that we have for the engagement with the business, with the small businesses, for services to be provided that we invested in the preliminary plan. We also invested for small business services now in terms of the commercial lease assistance, as we talked about. We talked about the right to counsel. And obviously funding them for their efforts on mobile food vending. So we are being able to focus on small businesses writ large. I mean, I think that overall we are looking at, again, the investments that we have in the universal childcare space. We are looking at the affordability agenda writ large, the housing plan, the block-by-block housing plan, where you're talking about the creation of 30,000 construction jobs. You're talking about the permanent creation of permanent 12,700 jobs in terms of operations of housing. So there are a number of ways that we can support job creation and businesses within the city through our affordability agenda and our focus there.
Thank you. Has OMB conducted any analysis on the efficacy of incentive programs that we have for business relocation taxes like RACE or REAP and what that has done for revenue of the city? Have you considered expanding, reforming, or replacing any of those models? Do we have a sense of what businesses have been bringing revenue to the city? Just that line of questioning.
Yeah, absolutely. I mean, we are looking at those. I think it's prudent to look at those, to take a fresh look, coming in. I know that many of these incentive programs have existed for many, many years, and they are extended at, 4 years, in 4-year intervals of late at least. So we need to look at sort of the original the inception and the value proposition when they were first created, what they have produced for economic development, what kind of industries have thrived under those, or which industries have not, which industries need the incentive, and where across the city does it make sense. So we are looking at that. We will look at that with the Economic Development Corporation and with the Department of Finance as well.
And which CSO, if any, is in charge of reviewing savings and how we structure those tax breaks for economic development, but also for housing?
So on the economic development piece, well, obviously, there is a chief savings officer with respect to EDC, but when we talk about the effort to look at the tax incentives, it's cross-cutting across many different portfolios. And so the Office of the First Deputy Mayor and OMB, with the respective agencies that this may impact, are all looking at these together. You could have situations as well where there is an incentive that impacts a particular industry, whether it's manufacturing, et cetera. So we have to look at where other portfolios will invite them in to be able to look at those as well and get that perspective. So it is a multitude of different parties that will come to this conversation.
My last question, thank you, Chair, is around the revenue driver of tourism. So New York City tourism was projected to reach 76 million visitors by 2026, but the city is roughly 10 million short of that projection. Right now, the plan has 28 million in the current year, which is decreasing from 23 million in FY27. So why is the city decreasing support for NYC tourism and conventions, especially in this economic environment? And can you commit to at least increasing the budget to prior year's levels? Just see if you can speak to the administration's support for increasing tourism to help drive tourism revenue.
Sure. So we are in receipt of the request from NYC Tourism for additional funds. We look forward to discussing that with you and the council in the weeks ahead. Of course, we want to make sure that we have more tourists that are coming here. I mean, obviously, a mix of federal policy and other reasons maybe aren't, leading to, not exceeding what previous levels have been. We have been investing, or we have invested, obviously, it's not on a permanent thing, but with the World Cup, we've invested more in tourism that is being used for advertisement, particularly in international destinations to make New York a tourist attraction. Obviously looking at more permanent investments and how we can bring tourism here on a regular basis in order to the benefit of the city because of obviously the tax revenue, so on. So we want more tourists to come, and we'll be looking at that budget request along with you.
The last point I'll make is that cities that are much smaller than New York with far fewer hotel rooms are spending 2 to 3x on their marketing budgets for tourism. So I think it's something we should definitely have more conversations about. Thank you very much. And thank you, Chair.
Thank you. Okay, really couple quick last round questions. So in March 2026, the admin signed a $1.86 billion contract with the city's hotel trade group for shelters over the next 3 years. Which is a little concerning. We know that hotel shelters come at a higher cost to the city compared to purpose-built shelters. And can you verify that the city entered into such a contract? If so, was this a new contract or renewal of an existing one?
Sure, Chair. Let me turn it over to Patrick DiStefano to address that.
So this is a renewal of an existing contract. So it renews the term. It's a 3-year contract. It can be terminated, I think, with a month's notice. So you're just paying for the rooms that you have, and it streamlines the process when there's a shortage of rooms in the shelter system. Obviously, we want to get out of the hotels,
Right.
but in the short term, this allows us to have sites.
Okay, so after the 3 years, is there an option for extension? If so, for how many?
I don't believe there's an option for an extension after this one, but we can double check.
Okay. I will say that some of these I know were supposed to come to an end in certain areas, and so if we could relook at some of these and look at the purpose-built shelters, that'd be great. And was this contract competitively bid? If not, why not, and how was it procured?
I would have to get back to you on that specifically. Since it's a renewal, it was
Right.
continuation, but I'm not sure the origin of it.
Okay, and then also, before you renewed it, what was that process like? Did you look at if there were any complaints or if there were any issues with the contracts?
Again, because this is sort of a master agreement or an umbrella contract, it's really so that DHS can quickly get in and out of sites. And it also eases the burden for the providers because they're not negotiating directly when they have to jump to a new site. So I don't know that there would be another parallel entity that could provide this service.
Okay. And what are you doing to reduce the use of hotel shelters in the coming years?
So this is part of the cost containment plan as well, but you know, obviously we've seen the family population decrease slightly over time. We're doing a number of different things like we spoke about, front door, making sure people don't get evicted, increasing right to counsel funding, all the steps to make sure that we are providing every aspect for families and individuals so that they don't enter the shelter system.
Okay, and then really quickly with the DSS cost containment, which you were just talking about, how did OMB work with DSS to develop the cost containment plan, and how are the savings amounts calculated?
Sure. I mean, we and I'll kick it back to Patrick as well, but we convened really the new leadership, the new commissioner at DSS. We had really all of the players across the board in terms of the Corporation Council, the Deputy Mayor for Health and Human Services, and we really just took a look at what we can do across the board that was within our own control. We knew that we had a state agenda. We knew that we had things that we couldn't do on our own, that we needed the state to intervene in, but what are the things we were able to do? And once they were identified along with the housing team, and again, Health and Human Services, Corp Council, City Hall, we then started to estimate, just like we would estimate any cost containment proposal. We've looked at sort of what the trajectory would be if we made this change using available data from the Department of Social Services, for example, and then we use that data to then make reasonable assumptions about what the results would be. So we're confident. They are real savings. They're recurring savings. Again, the program itself, in terms of city FEPS, lifeline for many New Yorkers. We think that this will strengthen it while also making some reasonable operational efficiency adjustments.
Okay, are there any concerns that the strategy may slow down some of the application review processes? And do you anticipate more overhead support will be needed?
No, when we've worked with the agency on this, we think that the level of administrative support, overhead, things like that are in place. Like I said before, we did add a significant amount of funding to DSS for staffing in this plan so that they're able to hire up. The 2-for-1's gone. Some of the IT measures they're putting into place should improve the process. So we're confident that it's not going to make it longer. Hopefully it's the other direction.
Right. Okay. I think that's it, actually. I just want to plug that Councilmember Brooks Powers did mention she wants us to look at the $5 million in the budget, as well as Senator Sanders' $1 million towards the trauma center. And if we can get a timeline, I think she had wanted it by today if possible, but if we can get a timeline on that, that'd be great. But I just want to thank you so much, Director Solomon and your team, and also thank you to our comptroller in the back for waiting so patiently and your team. But thank you for giving us the extra time. We really, really, really appreciate it.
Thank you.
So thank you.
Thank you very much. Thank you.
Thank you. And we're going to transition right away. Okay, I think we're ready to go. Okay.
Thank you so much.
I want to make sure I get everybody. Okay, so we're going to continue on. So good afternoon and welcome to the final day of hearings on FY27 executive budget. Councilmember Linda Lee, and excited to be here with my colleagues, our Deputy Speaker Williams, Morano, Brewer, Wong, Hanks, Majority Whip Hanks, I'm sorry. And I think that's it for now. Okay. So welcome to our awesome comptroller and dear friend, my dear friend, Mark Levine, and your team. Thank you all for joining us today to answer our questions. It's, as a reminder, this is what I have to do every single year, not every single year, before every testimony. Sorry, I'm losing my language right now. It's getting towards the end. But we're having public hearings all day tomorrow, starting at 9:30 a.m. So make sure that you all sign up, please, because we want to hear from the public and hear your feedback, so please sign up. Okay, so I think we're going to get straight into it and turn it over to our committee council to swear in our comptroller and the witnesses.
Good afternoon. Do you affirm to tell the truth, the whole truth, and nothing but the truth before this committee and to respond honestly to council member questions?
Yes, I do.
You may begin.
Okay. Thank you, Chair Lee, and members of the Finance Committee and City Council. I know it's been a long day. I've been there. I promise I'll keep it energetic. I'm pleased that I'm joined today by Executive Deputy Comptroller for Finance and Economics, Francesco Brindisi, and Deputy Comptroller for Budget, Krista Olson. I really appreciate this opportunity to share my office's assessment of the fiscal year 2027 executive budget and the May financial plan for fiscal years 2026 through 2030. This is a time of enormous contradictions in New York City's economy and budget. On the one hand, our city's economy is strong today by most measures. On the other hand, we are now heading into a period of greater economic uncertainty than any time in recent memory. On the one hand, the stock market is near an all-time high. On the other hand, private sector job creation in the city has essentially come to a halt. On the one hand, our budget is being bolstered by a significant increase in tax revenue. On the other hand, we face extremely large out-year deficits. How can all those things be true at once? I will attempt to square these contradictions in my testimony. I'll also assess the extent to which the executive budget addresses our most pressing fiscal challenges. And I'll suggest measures we can and should take now to prepare us for the uncertainty ahead. First, the state of our economy. Wall Street has just continued to show record strength. This has helped power our tax collections, which through April are 6% over last year. My office was thus able to revise our tax forecast upward by $927 million in fiscal year 26 and $1.1 billion in FY27 since March. After the blowout first quarter, Wall Street's profits in calendar year 2026 are now projected at $54 billion, below last year's record $65 billion, but still quite high by historical standards. Our jobs picture is more complicated. We are in what some are calling a low-hire, low-fire economy. Thanks to the relatively low pace of layoffs, the employment population ratio in New York City is actually at an all-time high. But due to limited hiring, the private sector here, excluding educational and health services, has shed nearly 6,000 jobs so far in 2026. Inflation in New York City is rising at a worrying pace, hitting 4.6% year over year in April, the steepest in 3 years. Gas here was up 34%, food up 5%, electricity in the Northeast regions up 12%, all putting an even greater affordability burden on New Yorkers who are struggling. Wage growth here has been strong, but here again, there are two stories. The highest paid industries, where workers make an average of $225,000 annually, saw wages grow by 5.7% over the past year. For the 2/3 of New York City private sector workers in lower paying jobs, real wages have declined. What does all this mean for our budget? I'm relieved that today we're reviewing an executive budget which no longer calls for a property tax increase and no longer drains our rainy day fund. I'm also pleased that, after years of uncertainty, the plan baselines funding for a variety of important programs. This includes 269 baseline for DOE and FY27, for technology, the Learning to Work program, IESP support, and a partial fix to school custodial budgets. Additional baseline items include right to counsel, library subsidies, and foster care contracts, as well as an additional $25 million for fair fares. How is it that, given the dire warnings about our budget gap that I and others issued in January, we've been able to make so much progress in recent months? By far, the biggest driver is the surge in city revenues, both collected and forecasted, which totaled nearly $7 billion since the November plan. We reached a much-needed increase in funding from Albany, which we're grateful to the governor and legislature for providing. And the mayor, to his credit, has committed to a number of efficiencies and savings measures. But all this was not enough to fully close the gap. The budget is in fact balanced with a great deal of temporary fixes. The plan relies on a slew of one-time measures and short-term savings, which altogether total $6.1 million in FY27. These are measures which, by definition, will not be available next year. They include $2.3 billion from the reamortization of the unfunded pension liability, $1.6 billion in accounting adjustments to prior year accrued expenses, in addition to the $500 million already budgeted in the preliminary budget. Nearly $1 billion from the more gradual timeline to achieve the class size mandate, and from the clawback of H&H's share of pension reamortization savings. $200 million in one-time lower subsidy to the MTA, in addition to the $500 million already included in the preliminary budget. Beyond the one-time measures, the executive budget plan also dramatically draws down prepayment of next year's expenses from $3.8 billion in FY25 to roughly $1 billion in FY26, a 72% decline year over year, the largest single drop since 2002, right after the 9/11 attacks. Taking the reduced prepayment and the reestimate of prior year expenses together means that we are spending $4.4 billion more than we're bringing in this fiscal year, continuing a worrisome trend. And next year, the general reserve stands at just $100 million, and we're already assuming reductions in prior year expenses, setting a new precedent for using these types of measures even before the start of the fiscal year. I also have to note that some of the savings in the plan that are really just targets at this point. The plan still carries roughly $600 million in unallocated efficiencies from various agencies, plus $1.97 billion over 4 years in 3 new cost containment targets: City FEPS, DHS shelter, and DOE special education due process cases, all still lacking implementation plans. In plain English, this all means that we are kicking a very big can into next year. Just how big is that can? The executive budget projects a gap of no less than $7.1 million in FY28 and rising steadily thereafter. Now, my office, of course, runs our own calculations of out-year gaps. When we plug in our tax forecast and our estimates of under-budgeted costs and unmet program needs, including overtime and child care vouchers, the FY28 gap widens even further to a whopping $8.8 billion. We will face that gap without the option of the many one-shot measures that we've used up this year. We won't be able to re-amortize our pension again. We're unlikely to be able to further delay class size implementation, et cetera, et cetera. And all of this is predicated on a strong economy. Our baseline forecast does not assume a recession. It does not assume an AI-driven labor dislocation or the popping of an AI investment bubble. outcomes which, according to our recently released analysis, could lower revenues relative to baseline by between $9 billion and $14 billion over the period of the financial plan. This plan assumes continued strength in the securities industry, in the pool of bonus payments, in stock markets, the volatile foundations of our personal and business income tax collections. The city's bottom line in FY27 depends, in a real sense, on the bull market continuing for another year. Any of those assumptions can break. If we do hit turbulence ahead, our reserves are nowhere near adequate. The city will finish this year with just $2 billion in the Revenue Stabilization Fund, aka our rainy day fund. This leaves us with an extremely thin financial cushion relative to the scale of our budget. Even if you count the $5.2 billion in our Retiree Health Benefit Trust, which I'll remind you is an offset to roughly $100 billion long-term liabilities in healthcare for retirees, though it's been used as a de facto rainy day reserve, we're still far below the amount we need to weather a typical recession. And among the 10 largest cities in the nation, our reserves relative to revenue rank us 9th, ahead only of Chicago. Looming over all of this are our credit rating agencies. Moody's, Fitch, and Kroll sent us a warning sign when they lowered the outlook for the city's credit from stable to negative. I don't expect any immediate further actions from them, but the risk of a downgrade in the months ahead remains. The structural gap, the low level of reserves, and the repeated reliance on one-shot measures all increase the risk of future credit rating downgrades. We should do everything we can to avoid this. One critical step we can take is to establish formal rules for our rainy day fund. In April, I laid out a plan to establish a target balance for the fund of 16% of tax revenues with the 10% floor, a deposit formula when revenues exceed trend, and clear, narrow criteria for withdrawals. In other words, rules that require we put money in when times are good and only take money out when times are tough. I'll be proposing a charter amendment to establish these rules in the coming days and hope you'll join me in this effort. If we were to adhere to that funding for our rainy day to that formula for our rainy day fund this year, a year in which the economy is strong and tax revenues are up significantly, we would be adding $854 million to the fund, not leaving it flat as the current plan does. I urge you to find ways to add to the rainy day fund as your work to finalize the budget in the coming weeks takes place. I know that you will be pushing hard to fund the council's priorities and initiatives in the final budget, as well you should. I fought for many of these investments when I was in the council. My ask is that you avoid adding even more one-shots to the budget as you find ways to offset the additional expenses you're fighting for. New York City has many strengths to draw on as we navigate these challenges. Our economy is strong. Our workforce is supremely talented. Our tax base is the envy of other cities. Yes, we face real economic uncertainty ahead. Yes, we face a structural imbalance in our budget. But we have all the raw ingredients we need to solve this, and we still have time. Let's act decisively. Let's seize this moment. Thank you, and I look forward to your questions.
Great, thank you. We've also been joined by Councilmember Maloney. Okay, so really quickly, I just have a few questions on class size compliance. So the administration, do you agree with the administration's $122 million estimate for DOE's cost to meet 70% class size compliance next year?
So we estimate that ultimately this will cost us $1 billion a year on the expense side by 2030. I think at that point they have it in there for $800 million. So we do see a shortfall at that point. For FY27, I also believe we have a slightly higher estimate than they do.
Oh, sorry, but was the billion for 100%?
I believe that we peak at $1 billion for 2030, correct?
That's right. We assume it's going to be what they originally said of $1 billion in 2030.
Got it, okay.
For fiscal year 27, the 122 million should be sufficient to hire the 1,000 teachers that they've said they need, but we are waiting for their class size report that comes out later this month.
Okay.
To confirm.
Do you have an estimate for the cost of the proposed differential payments to the teachers in exempted classes?
I don't think we have an estimate because we're waiting for the class size update, which I think could happen any day. It's supposed to come in June. But I think it would be on the order of high single-digit millions. Am I in the right range?
For the differential, we calculated just based on those exempted classes last year or in the current
I see,
school
okay.
year, and found it to be about 25 million. But again, as the controller said, we're waiting for the updated class size report and the number of exempted classes going forward.
Okay, great. And with an extended timeline, do you have a new estimate on the cost to meet 100% class size? That's the 1
the
billion.
2030 number, yeah.
Okay,
That'll
got
be
it.
$1 billion a year. By the way, the
Right.
capital cost as well, right? Because we have to build out for some schools. Under the Adams administration, they originally projected that as an $18 billion capital expense. Now, I believe in November, they offered an update saying they found some more efficient use of space that would run at about $14 billion. We have nothing like that currently in the capital plan. I believe it's about $1.5 billion in there. So by any measure, on the capital side, we're going to need to put more money in.
Okay, and then moving on to AI. I know that your office just released a report on AI and New York City's fiscal future. The issues related to AI have multiplied over the last few years as AI's capability, has increased dramatically. As with many new technologies, government is often years behind in learning how to deal with the new advances. So what lessons should we have learned from the past and how we deal with AI industry? And can you summarize your AI scenarios presented in your report and how they may affect the city's revenues specifically?
What a good way to frame the question, Chair. This city has been reshaped again and again by technology, from steam to electricity to railroads to automobiles to container shipping to the internet. It literally rebuilt the physical structure of the city. And in some ways, sometimes we managed that well and sometimes we failed to. We ignored the arrival of container shipping, and we no longer have major ports in the 5 boroughs of New York City. We lost that to other places who adapted quicker, just to give you one example.
Yeah.
I think the internet on the whole has probably made us stronger as a global financial hub and a hub for knowledge work. I think that AI is going to be by far the biggest transformation yet, and I think we should assume it will change the city in powerful ways, change the economy in powerful ways, potentially very good, and also potentially very bad. It's hard to exactly predict where we're headed because the experts themselves don't agree. The technologists don't agree with the economists, and the economists don't agree with each other. So we decided to embrace that uncertainty, and we developed a forecast that included 5 different scenarios, and we ascribed a percentage likelihood to each. They range from very positive, where we could see an uptick in the market because of AI and a net increase in jobs, and they range all the way to very negative scenarios, which include potentially a rapid loss of 250,000 jobs in a matter of months. And we also forecast these potentially could take a hit to the budget. For example, if the AI bubble pops, an estimate of between 9 and 14 billion, just talking about the budget hit. So I think we need to prepare for these eventualities, both good and bad. How do you prepare for uncertainty ahead? How does a family prepare? How does a small business prepare? How does a government prepare? We need to build up our reserves, our savings, as a family would say. And we just have very, very little, as I outlined in our plan. We have such a small amount relative to the scale of the budget. And so we believe this should add to our urgency of building the reserves now, so that if we do see the bubble pop, we can avoid cutting services. If we do see people unemployed, we can help support them. That's what we called for in our analysis.
It's funny. So that's the perfect segue to my next question, which is about the rainy day funds. The administration's preliminary plan included a drawdown of the city's rainy day fund, and the city council and comptroller were in agreement that such an action would be detrimental to the city's fiscal stability. So the new charter commission created by Mayor Mamdani is considering the proposals that would provide more guidance. And so I know you had spoken about this, but what rules would you suggest for the usage of the rainy day fund? And do you have any recommendations as to how deposits into the reserve fund should be managed?
Yes, I mean, big picture here, we're coming off a very long run of a successful economy in New York. Other than COVID, essentially going back to the financial crisis, we've had a 16-year bull market, and we basically have nothing to show for it in our reserves. We have a rainy day fund of $2 billion against a city budget of 125. So it's just, it's a crying shame that we've had all those good years go by and we didn't save enough. And the first thing that the formula we're calling for would do would set targets so that when you have a good year in the economy, when tax revenue is growing, that you are required to put more money in or deposit into the fund. We call for 20% of what's over our 3% growth to go into the fund, plus a look back, an average over the last 6 years, 40% from the look back, so that we're putting money in every year. And to give you a sense of the scale, that would mean this year, when our economy is at the moment very strong, we would have to put about $830 million in, give or take a little. But there also needs to be rules about when you can take out, because we were about to take out now when the economy is good, which is not the purpose of a rainy day fund. This is not a rainy day. From an economic perspective, the sun is shining. So the condition should be either a recession, which is it's a little bit hard to measure in real time, but we defined it as 2 consecutive quarters of job loss, or some sort of catastrophe, a natural disaster, a pandemic, God forbid, a massive terrorist attack. Now, what we called for in our report is we should add major AI disruption to the list, and that probably requires a change to the state legislation. How big do we want it to be? So we believe it should be 16% of our annual tax revenue. That's not an arbitrary number. That's the amount that we would need to cover in a normal recession so we didn't have to cut services, right? That's our goal. If we enter a recession, we want to protect services. If we have a reserve fund of 16% of our tax receipts, that would allow us to avoid, and I think that's about 12 billion now, 13 billion? 13 and a half by today's budget.
Got it, okay. And then in terms of the floor, of the minimum amount that the city should be required to...
10% would
10%,
be our
okay.
floor. Again, we're at $2 billion in the rainy day fund,
Right.
which is, I don't know, 1.7% or something, so we're
Yep.
way below the target. 10% would give us essentially the first half of the recession, the first 2 years, so it would give us some time to cushion the blow.
Okay. Okay, moving to pied-à-terre tax. On April 15th, when the pied-à-terre tax was announced by the governor and mayor, the claim was this would raise $500 million for the city each year, starting in FY27. And I think your office had put out a report finding that the revenues could actually be substantially less than that. So the exact contours are now public based on the legislation passed as part of the final state budget. So now that we have the true outline of the new tax, can you tell us how much money you think it will raise next year?
So, Madam Chair, this is a moving target because you can define the rates, but we don't know yet how many people will seek exemptions, how many people will contest their assessment, how many people will change their behavior. Maybe they have a relative move into their home so that they're no longer considered a pied-à-terre. And certainly if we look at other cities that have implemented this, that has happened. Which is why when the initial proposal was released, we gave a slightly lower estimate for what we thought would come in because we assumed some of these factors. But once the final language was printed in the bill, we can say with a little more certainty that we're actually quite confident that we will at least meet our baseline of 500 million, and that potentially it could be much more than that. If you assume no behavior change, we'd be at $1 billion, which we don't expect. But we're confident enough that you heard me express doubts on some revenue in the budget. We're actually not putting uncertainty on that. We think that we're pretty confident that even with the change in behavior and people contesting, that we'll still hit the $500 million target.
Okay. And I know some have raised concerns, to your point, behavior changes, that this tax could negatively impact the real estate market and property values. And so how much of this are you concerned with, or what sort of is your thoughts on that?
Look, we don't know yet. And we're going to have to watch what happens to sale prices and the number of sales. I think it is logical to assume that you could have an impact on sale price if you have an additional cost. We're calling it a surcharge now, technically not a tax. But we really won't know yet. And that could have an economic impact, and we certainly will be watching for that in the comptroller's office.
Okay. Moving on to the school budgets and the hold harmless. So I know on Sunday, the DOE chancellor announced that DOE would hold initial school budget allocations harmless for 26-27 school year. The city has been holding initial school budgets harmless in recent years as enrollment has declined citywide. So wanted to know if your office has an estimated cost for holding initial school budgets harmless, and will this funding be added at adoption?
Yes, to remind people the big picture here, we've had a very large drop in enrollment in New York City public schools. We're down probably 250,000 students, and the budget has gone up every year. And part of the reason for that mismatch is a policy that was put in place during the pandemic for understandable reasons at the time, that even if an individual school lost enrollment, you didn't want to cut the budget. And this was COVID. There was so much stress on the system that we just wanted to protect schools. But we're now 5 or 6 years after that, and some of these schools are pretty far off their pre-pandemic enrollment. But you have schools that are 10 or 20 or 30 or 40 or even 50% off. And so, wow, the mismatch is getting quite big. And in effect, it means it's a lot of money per kid that a heavily enrolled school that's overcrowded, which you might think would want more help, is actually getting less per child. So I believe that we are going to eventually have to resolve this and frankly do it pretty soon because of all the strains in our budget. Not in the way that would shock these schools from one day to the next. You don't want them to endure catastrophic cuts. This could be phased in a fair way that's predictable. You want to protect services to kids first and foremost. But we believe that today it's about a $260 million difference. Again, because we're waiting for this all-important assessment of enrollment that's coming soon, we don't actually have an exact fix for you. So the number I just offered is really just a guess at this point.
And then to your point about phasing it in, what do you think would be a fiscally responsible way to, in terms of timeline, to phase that?
I'm not sure I would get something specific. I would be happy with almost any plan to phase it in. Right now, we're just on this indefinite path of allowing greater and greater and greater differences between budget and enrollment. And I'd be comfortable with any plan that just got people on track. And you know, I also have to say, Madam Chair, that we have now 200 schools with under 200 kids in their schools in such a big city with 8 million plus residents. And that also is there's a big budget cost there because obviously you have a lot of fixed costs for a school. Some of these schools are so small, it's not even good for kids. They can't even field a sports team. And so I do think that as part of our effort to find savings, we should look at combining more schools. It's tough. It has to be done sensitively. Parents need to be part of the process. But this, too, is also weighing on the system as, again, we had this mismatch between a growing budget and declining enrollment.
Okay, great. And then, as we know, the due process cases cost quite a bit. Have you conducted an analysis of the due process case cost containment savings item included in the executive plan and DOE's budget? And if so, do you believe 149 million in savings in FY27 is realistic?
Well, first, a big picture, we've had such a rapid rise in this line. In 2019, we were spending 500 million on so-called Carter cases. It's going to hit $1.5 billion. So a tripling in 6 or 7 years, you don't really see that in government very often. It's got to be contained. And I do applaud the mayor for articulating a plan to do that. It has not really been defined yet. I think the vision is that we'll offer more services in schools so that kids can receive what they need in the public schools and not have to go to the private schools. That is definitely a good strategy, which I totally support. But it's a little bit hard to be exact on the savings because you have to account for additional money we spend if we need to spend on additional services. And it could be that we spend money on services today and don't get the savings right away. So it's a little hard for us to assess this exactly, though again, I think the mayor is absolutely right that we need more services for children with learning differences in the public schools so they don't need to go to the private system.
Okay, perfect. And then before I hand it off, I know the speaker wanted to be here but could not come back, and so I just wanted to ask a few questions on her behalf.
Of course.
Okay, so the FY28 gap in your budget analysis of the preliminary budget would be 13.9 billion, assuming that the property tax increase did not happen, which thankfully it didn't. So now the updated executive analysis shows a gap of 8.8 billion in FY28. That's a 5 billion change, a large change even if you account for the pension amortization savings of about 1.6 billion in that year. So how did your outlook change, the delta change so much? And then with such large variances in the forecast, how can we be sure that it doesn't change so drastically, and what measures are you taking to sort of look at that?
Okay, very good question. Very important question. You know, Madam Chair, forecasting turns out to be a little challenging because it's hard to predict the future.
Yes.
But we had no choice but to do our best. And we came out with a forecast of about, I think, just under 88 billion. Just over 88 billion in, give me the exact number, please. What's our total tax revenue forecast for next year? 88. Vis-a-vis 27, sorry. Right, so we have 87.8 billion as revenue for the coming year. That is a little lower than the mayor's projection, so we're just a tad bit more cautious. Now, there are other fiscal monitors that also have given assessments, including the Independent Budget Office, which is about another $500 million below us. There is the State Comptroller, which I think was right about where the mayor was, and then there is the Financial Control Board, which is about where we were. So we're clustered within about $1 billion of each other. The mayor in the group is the most optimistic. Council came out with this forecast today, which I'm excited to review. I think you all are about $1.5 billion above the mayor's projection. Any of us could be right. I hope the highest possible projection is right. It really depends on what you think will happen on Wall Street. That is kind of the core assumption. I mentioned that Wall Street had its best year on record, the most profitable year on record, the biggest bonus season on record. And what we assumed is that next year Wall Street has a good year, but a little bit off that record. That's how we played it. It's possible that we break the record again, and I hope we do. But as you heard in my testimony, I see some reasons to be cautious out there. I will also add that while we really commend the mayor for ending this era of drastic under-budgeting of major expense lines that we knew we were going to incur, we do still have a difference of opinion on a few budget lines. They're nowhere near as drastic as prior years. But if you consider both, we're slightly less optimistic on the revenue, and that we have some slightly higher numbers on the expenses, we go up from, I think the mayor had it at about 7.1 billion for the fiscal year 28 out year gap. We have it at about 8.8 billion. That explains why we are just a little more concerned about the scale of the gap.
Got it, okay. And then I think your tax forecast assumes that revenue growth will fall from a 5.5% growth rate this year for FY26 to just 2.2% in FY28, which is around the rate of inflation, if not below. So what leads you to believe that tax revenue growth will slow down so much, and are you projecting a recession?
We are not projecting a recession.
Okay.
I think we are assuming a more typical year in tax growth. Again, we are not assuming a repeat of the record profits on Wall Street in the past year. Again, that could be achieved, but if the AI bubble bursts, there'll be an impact. If the impact of the war and oil prices and higher interest rates are felt in the city, it could also lead to a slowdown. And I think most economists do put the chance of a recession in 2027 at about 35%. Some that I trust would probably say closer to 40%. So for all those reasons, we were a little more cautious, but I will ask our Deputy Comptroller if he'd like to weigh in on the growth versus inflation question.
Well, I don't know what the council estimates in terms of inflation going forward. We see that historically, after years of steep growth, then tax revenues tend to moderate, right? Overall, our growth rate is 3.3% over the entire forecast horizon. So there can be fluctuations year to year, but essentially we are on a slightly less optimistic growth trajectory as the council, which is 4.3%. So as to the gap, I mean, it was 3.7 billion, the property tax, and then there is 1.7 billion from the reamortization, so that total is about 5.5 billion, which is about how our 2028 gap sort of swings. So most of it is explained by those two.
Okay. And just, sorry, last question. OMB has had a tradition of conservative budgeting, and based on your analysis, it appears that your office has a more conservative outlook on the city's budget. Why is that, and how much upside risk is there that the budget gaps will not be as big as you say?
Well, look, you're talking about very large numbers, and so we are within less than 1% of OMB's projection. As I said, we're about $500 million below on an $88 billion base. And we have reasons to be cautious. Either of us could be right. There are benefits to being cautious, though, right? Because if the cautious estimate is wrong, then you end up with a little more cash at the end of the year that you can put to vital programs or put into the reserves. If the more aggressive estimate is wrong, then at the end of the year, you're in a hole, and then you have to make very tough decisions. So this is a balancing act, and we're doing our best to get it right. Look, I'll just say that as long as I've been in government, we've had a very strong economy. I've been in government 12 years, with the exception of COVID, where we had so much federal money come in that from a city budget perspective, we didn't really endure the pain. And I think this year is different. The economy today is strong. I do believe that. But we're under more fiscal strain than we have been at any time in my 12 years in government. And I personally see more economic uncertainty on the horizon than at any time in recent memory. So for all those reasons, we're landing on the slightly more cautious side.
No, I totally get it. And I will say, I got to give a special shout out to our finance team and our economists, because I know that IBO, the mayor's office, your office, as well as the council, we have different sort of projections that we usually have. But I'm proud to say that they've been pretty good, so it's great. But hopefully we'll see what happens, obviously. But please take a look at the report and let us know. Would love to have more conversations with you about that. Okay, so I have more questions, but I'm passing it off to my colleagues so they can go. So first up, we have our Deputy Speaker, followed by our Majority Whip.
Thank you. Hi, nice
Hi,
to see you
Deputy
again.
Speaker.
So I actually passed a bill that required the city to establish a task force to review and report on AI's impact. Do not know the status. I literally have texted again our compliance division to follow up, because I've been asking them for the status of this bill, because it would essentially, task the city to create a task force to really look into a whole wide range of things, workforce impacts, all of the things. How is AI going to impact the city? So your report warns that AI would significantly impact employment, wages, and city tax revenues. So what specific steps do you think we should take to ensure that AI-driven productivity gains translate into broadly shared economic benefits rather than deeper inequality?
Thank you for leading and issuing that legislation. It's an important report. We'd love to help make sure that the task force comes together, and love to be part of it if appropriate.
Yeah, I was gonna say, you should be a part of it. I don't know if I have to check to see if the bill requires, these task forces, sometimes we require different citywides to appoint someone, so we'll have to see.
Absolutely. Look, I'm really worried about the economic disruption. I'm worried about the job disruption. The chair asked about a historical perspective, and the city lost 1 million jobs in deindustrialization. It happened over 40 years, though. And as painful as it was, there was more time to adapt. And while we don't know precisely where we're headed on AI, we could lose jobs much more quickly. And we need to be there to support people for that. It's hard as a city because so much of the leadership we need has to come from the national government, and we're not getting that right now. But I would absolutely support plans to give the American people ownership stakes in some of the companies that stand to make trillions of dollars from this technology. I support ways to ensure that no one's left behind right now. And we're going to potentially need new economic models to do that. I've asked what can we do as a city? And we have some ability to support people who lose their jobs, maybe by some limited income assistance, perhaps by retraining. We have none of that in the budget right now. And when I see that we're already running a gap and we have very little money in our reserves, if this hits in 6 months or 18 months, I'm worried that we're not going to be ready to respond quickly enough. So in the report, what I called for is let's start building up our reserves. Let's add AI disruption, in addition to natural disasters and other things, to the list of uses, and be ready so that if we have 100,000 people unemployed, we can help support them economically, we can help retrain them, and so much more.
Yes, I love that response. And if my memory serves me correctly, DCAS had testified and said that they're somewhat working on this. It wasn't clear. So I'm still very interested in what internal assessments they're doing to make a determination. Maybe some city employees need to be reskilled or upskilled to maintain their job, and that just hasn't been clear to me. So your report also suggests that the city, as you mentioned, should roughly double its reserves. What objective measures or triggers should we look at to determine when accumulating additional reserves becomes less valuable than investing those dollars into various things that we care about, like workforce development or digital literacy or other interventions that could reduce AI's related economic and workforce disruption in the first place?
Yeah, it's a fair question. And I think considering the uncertainty ahead, building the reserves really isn't a choice. That's why I want an actual formula there. But I am all in for rethinking our retraining in the city, including from K-12 and CUNY, where we're giving people very limited education in the kind of emerging AI skills that employers are asking for. I talk to employers all the time. I talk to CEOs all the time. It's part of my job. And they're not so much telling me yet that they are slowing down hiring, although I feel that may be beginning, and I can talk about that from anecdotal evidence. But they are saying to me unambiguously, they're hiring people with AI skills now. And I look at what we're doing in K-12 and what we're doing at CUNY, and I feel like we are way behind in pivoting the curriculum. So I think we need to move now quickly, and I would love to work with you on that.
Okay, just two quick questions. So as you know, New York City agencies are now required to develop and implement racial equity plans that are supposed to be attuned to the budget. Yet one of the persistent challenges is ensuring that those plans are reflected in the actual budget decisions and resource allocation. As the city's chief fiscal watchdog, what role do you believe your office should play in measuring whether agency spending aligns with their racial equity commitments? And are there additional tools, reporting requirements, or accountability mechanisms you believe are needed to ensure these plans result in tangible outcomes rather than simply compliance exercises?
You've been leading on this, Deputy Speaker, and I really am grateful for that. The city has a very, very long and shameful history of underinvesting in communities in need, in communities of color. This is well documented, and we don't want that to happen on our watch. And so we do need to ask very serious questions about where and how our money is spent and who is benefiting, and is there equity, geographic equity, racial equity, and more. And I would love for my office to be a resource here. We've talked some about this. I would love to find ways to help make sure that this information is accounted for and public so we can do the right thing here.
Okay, last but very final question about just Southeast Queens flooding. So one of the things, and I haven't really spoken to you about this, I should have added that to my list of things that I spoke to you about when we met, is the claims process. And I know it's tricky because it's a legal document, but just wanted to know if your office has done anything to advance on making sure communities who are seeking to file complaints for like flooding related issues have the proper resources to do that. And if you think that the city's capital investment adequately prioritizes communities.
Yeah, this is people, so not everyone knows that our office manages claims, and you obviously know if you live in Southeast Queens, and this is something I really want to partner with city council members on, because technically my office is not allowed to help people fill out their claim because we are adjudicating it, so it would be a conflict. What we want to do is empower you and every council member to help provide that assistance in your offices. And we're actually launching an effort now to go to every council member. My wonderful team, led by Deputy Comptroller Alana Cantillo, is already working on this. We really would like to partner with the whole body so that you know how this works, you can help educate people, and also give us feedback if we can make the process easier. That we can do for sure. So I really want to work with you on this.
Awesome, thank you. Sorry, I don't know if I said we've been joined by Councilmember Maloney as well. So next we have Majority Whip Hanks, followed by Councilmember Narcisse.
Thank you, Chair. Good afternoon.
Hi, council member.
Oh, yeah. So my questions. Okay. The Comptroller's Office regularly identifies risks and inefficiencies in city spending through audits and oversight reports. Based on your office's recent finding, which agencies or areas of city government present the greatest concerns regarding fiscal accountability or operational inefficiency?
Councilmember, you say, what is my greatest concern for operational efficiency?
What areas of city government present the greatest concerns regarding fiscal accountability or operational inefficiency?
Okay. My office oversees the contracting process. As you know, we review and certify contracts. There's a special case at the Department of Ed, which has authority for contracts under $25,000 that actually, they don't have to come to us for registration. They can self-register there. And that creates a little bit of a blind spot for us. They do eventually show up in Passport. I say eventually because 95% of the contracts start before they're registered. So we don't often have real-time eyes on them. And in December, a report came out from the DOE's investigator that there are some challenges there. So we're looking into this. There are a shocking number. I think it's over 150,000 times a year these small contracts are used. I was surprised when I heard that number. But again, these are under 25,000. There's not as much control. And so this is something we're looking at.
Well, I used to run a not-for-profit, so I completely understand that. Thank you for that. The city's capital process continues to face delays in moving projects from funding to actual construction. From the comptroller's perspective, what reforms are most urgently needed to improve capital project delivery and ensure neighborhoods with long-standing infrastructure needs are not continually left behind?
It is an absolute scandal that it costs $5 million on average to build a Parks bathroom, that it costs $80 to $100 million to install elevators and ramps in a subway station. This is limiting our city's ability to thrive and to build for the future. And there are generations of policies which have accumulated to make this happen. It is all of them well-intentioned. It is concerns about environmental protections, about community input, about safety, about design criteria, et cetera. The accumulation is costs that are just out of control. and we've got to rein it in. We made a big step forward thanks to the governor and the state legislature on reining in SECRA in the budget that was just passed. That's going to help expedite review, but there's just a myriad other obstacles that have to be cleared away that I would love to partner with you on. We could do an entire hearing on this topic, but it's an urgent priority.
Thank you so much. Thank you, Chair.
Great. Councilmember Narcisse, followed by Wong.
Thank you, Controller, and your team for being here to answer our question, and thank you, Chair. On the formal rules for our rainy days fund, I will join you definitely, and don't forget to add epidemic, because with crack era and all this thing that's hit us in New York City, sometimes we have to take money out, especially the Black and brown communities been suffering, and when we need to address that, I will say we can add that because epidemic is a big deal too. The homeless service budget is now higher than at the peak of the migrant crisis. As the office that audits city contracts, are we getting value for what we pay when we pay the shelter providers? That's one. You noted the budget clause back health hospitals, right? Share of the pension savings. I have to ask, what does that do to a system already facing hundreds of millions in federal cuts? The general reserve next year sit at $100 million. Is that adequate for a big city like New York City?
Okay, all really good questions, Madam Chair. On the homeless services budget, it's gone up a lot first because we have more people in the shelter system than ever. We're at over 90,000, I believe, at this point, or close to it, maybe high 80s a night, and that's helped increase the budget, but also we're spending more per person. Now that is in part because we've been relying on hotels as kind of an emergency stopgap because we don't have enough purpose-built shelters, and hotels are no one's preferred solution. They're also very expensive. This is part of the cost, but maybe implied to your question is, I do think we need to scrutinize the contracts with providers and make sure that we have performance metrics and that we're getting good value for our money. This is something that I would like us to focus on and would love for you to work on as well. You asked a question about H&H. So there are some savings in here related to the fact that the pension reamortization also applies to H&H. That's, to use a technical term, they're an obligor. They also pay into the pension system because they have workers there who are part of it. And so essentially the idea is that, I believe, the money that they would be saving from the reamortization would be passed back to the city. Is that an accurate statement?
Yes, it's the amount that the city is assuming in the plan is for the first 2 years, 26 and 27, and it equals Health and Hospitals pension savings over the course of the life of the plan.
And just very quick on your question about $100 million, this is the in-year reserve. Okay, this is not the long-term rainy day fund. We hope we never used it, right? I hope the rainy day fund sits there for a long time and we have no more pandemics. But the in-year reserve could be used any day and goes up and down a lot. And we're going to start the year with only $100 million. That is an unprecedented low number. And so the answer to your question is no, I do not think that is adequate.
Thank you.
Okay, great. Councilmember Wong, followed by Brewer.
Thank you, Chair. Thank you, Controller Levine.
Good to see you, Councilmember.
Thank you. My question goes back to the water rental payments. The city continues to pull hundreds of millions of dollars out of the water system for the general fund. They use it even though the original debt rationale ended years ago. Will you audit the water rental payment and publicly show how those funds have been used?
I think it's a very important topic, and I would love to work with you on it.
Thank you.
So how about we meet on this
Absolutely.
and figure out a good plan together?
Absolutely.
Thank you, Councilmember.
I have time for another question. You praise parts of the executive budget, but also warn it still depends on one-shots and does not solve the structural gap. What single assumption in this budget worries you the most? Childcare, city Phelps, peer-to-tier revenue, or something else?
Right. Look, you had a robust conversation on City Phelps.
Right.
And I want to say this is an incredibly important program. I'm very proud that New York City has the only essentially municipal Section 8 in the country. There's something like 70,000 families being supported on it. I do not want to cut that program. But it's growing at a very, very fast pace, council member, and it's not currently accounted for in the budget. And that's not sustainable. And so I think by simply bending the curve on the growth, we can both protect families who need it, but also get a handle on the budget impact. So I'm going to identify that as a fast-growing budget area that we need to get a fix on this. It needs to be properly budgeted, and there's probably going to have to be some restraints on the pace of growth.
Because right now, like, it's growing exponentially.
Yes, it is.
There's no end in sight in that, right? Thank you.
Thank you, Councilman.
Thank you, Chair.
Great. Councilmember Brewer, followed by Morano.
Thank you. So I just was wondering where you think we are with the retirees' health care, a very complicated topic. And secondly, I know when you were in the council, we all fight to get rid of the CRT, the commercial rent tax in Manhattan. I didn't know if you thought, given the good news about the revenue, that might be something to consider for those small businesses. And then also, I just wanted to get updated where we are with the credit ratings. One thing about the schools, I just want to say, knowing the schools well as you do, students need more help than they have in the past. So even though the number has gone down, each student has a whole myriad of challenges. So I don't think it's apples to apples. You got X number and you only need X dollars. I think you need more dollars in a sense because every child needs more support. So I just want to throw that out.
Yeah. So look, I'm going to answer the retiree health question from the perspective of the retirees themselves, which is I know what you care about, council member. And first of all, Advantage is gone and not coming back. I get asked about it constantly still, so I want to reassure people there. We still have some work to do to achieve some of the savings that we have hoped for in previous agreements, but I want to emphasize that that does not put the health care of individual retirees in jeopardy. This is a problem for us to work out, to make sure our budget squares, but that is not a problem for retirees. Look, on the commercial rent tax, it's true, I have felt it's unfair that it's only one part of the city, Manhattan South to 96th Street, where this is applied, and it's hard enough to run a small business right now. And I have generally focused on kind of lifting the trigger point so that
500 now, I think.
Right. And I would probably be in favor of lifting it further. I'm a little more cautious on our broader fiscal situation, council members, so I'd like a chance to think about the question of completely abolishing it, but I would certainly support finding ways to exempt more small businesses.
Okay, and then credit ratings?
Sorry, credit rating, yes. Look, we got a warning shot from 3 of the 4, from Moody's, from Fitch, and from Kroll. And they told us by lowering their outlook that there's a chance they would give us a downgrade. It's not a foregone conclusion. We could still avoid it, but I think that that is still an ongoing threat that in the months ahead and through the fall, particularly as we close out the annual budget in October, we need to be very wary of. I think that the good news we've had in Wall Street earnings helps our standing with the credit agencies. Some of the additional money that we got from the state will help our standing. The fact that the current budget plan does not draw down the rainy day fund, I think also will improve our standing. So I think we're in a better place for those reasons, but we should still be cautious. And I think this is still hanging over us, and we should still do everything we can in the months ahead to avoid the risk of a downgrade.
Okay, and just finally on housing, much discussion. You have said that you're going to use some of the pension money to assist in the effort. I didn't know where you are with that, and just generally, allocation for housing? How are you feeling that we're going in the right direction or not?
Look, we've done so much good work on rezoning, City of Yes, and the charter amendments. There's still work to do there. I know the council's all over that. But to me, the big fight right now is the financing. We have vacant properties all over the city where the land's ready to go, the zoning's set, the developer's set, it's all good. They're waiting for financing. You see it probably in your district, lots that are waiting 1 year, 2 year, 3 year, 4 years, and it's often financing. There's a long wait for low-income housing tax credit, et cetera. So we're trying to solve that. We've announced a plan to invest $4 billion of city pension funds in financing housing in New York City. Deeply affordable housing, workforce housing, preservation, conversion of offices to residential. This is going to impact tens of thousands of units, and this is going to be good for the pension fund. We're not going to lower our investment criteria. We never do. We turn down deals all the time. We're going to find that win-win where we get good returns, but provide financing that would have been missing in these deals. I'm very, very excited about this plan.
Thank you very much.
Thank you, Council Member.
Great. Councilmember Morano, followed by Maloney.
Thank you, Chair. Sir, for the record, comptroller or controller?
Mark is just fine, Council Member.
But in general, if you're setting the tone for the city.
I don't want to be put on the record on this because I don't want to upset one of the constituencies.
Fair enough. All right. Controller
Ask me when I'm not under oath.
OMB testified this morning that the pension reamortization is a responsible way to smooth payments over time and improve predictability. Your testimony characterizes that same action as one of the major reasons where, as you said, kicking a very big can into next year. What specifically do you believe OMB is getting wrong? If this pension restructuring is such a concern, what would you have done instead?
I really appreciate the question, and this is a once-in-a-lifetime opportunity here. I think there is an argument to smooth out the payment schedule from an accounting perspective. I would prefer that, given this is a once-in-a-lifetime windfall, that we use it to build up reserves, and not to simply plug this year's gap. And that's an opinion I've expressed repeatedly. This is ultimately a decision of the trustees, where the labor unions themselves have the dominant vote. And those votes are now rolling out. The first very small pension fund, Board of Education and Retirement Services, did vote to approve last week, but this is probably only about 3% of our total assets. The big funds are still scheduled for the weeks ahead, so stay tuned for that. But again, my feeling is there is a justification for smoothing this from an accounting perspective, but I just want to make sure that we are also using this very unique opportunity to build our resilience for the long term.
Your testimony says the city would be adding approximately $854 million to the rainy day fund if your proposed reserve policy were already in place. Given the competing demands for public safety, sanitation, education, housing, everything we've all talked to you about already, and other essential services, where specifically would you find that $854 million? What spending would you reduce, defer, or eliminate in order to make that deposit?
Well, first of all, the point of having a rainy day fund is so that you do not have to cut services when the tough times hit. The impact of not having prepared is that every kind of service that you and your constituents need could be cut. And I've already spoken about a few ways I think we could save money in this year's budget by combining small schools, so you avoid having to have duplicate 2 principals and 2 assistant principals and 2 school secretaries, et cetera. I think that benefits kids ultimately, so that they have critical mass to field sports teams. I think we are going to have to look at the hold harmless structure. That alone, I put at $250 million this year. And I say with great sensitivity, I do think we can bend the curb on city FEPs and save money there as well.
And finally, if I may, Chair, OMB testified earlier that the administration closed what it described as a $12 billion budget challenge without raising property taxes, drawing down reserves, or cutting services. Do you agree with that characterization, or do you believe taxpayers should understand this budget differently?
Well, the mayor presented a balanced budget as the charter requires. I think it's fair to ask what's happened in the last 5 months to make that possible. And the most important contribution to our progress has been Wall Street has had a very, very strong run. And so we have all revised our tax estimates up. We had a very good bonus season on Wall Street. Secondly, we got about $4 billion in additional support from Albany. Credit to the governor and the state legislature on that. Then there were some savings and efficiencies that the mayor identified. Credit to him on that. But as I mentioned, that was not enough. And that still left us with the need to use some one-shot measures that are going to get us through another 12 months, but they're not going to be there for the year after. And the proof of this dynamic is that the out-year gap, the FY28 gap, which we're going to start talking about in like 6 months, is $8.8 billion. And that's a big number. It's a very big number. We're not used to seeing a number that big. And to confront that where reamortization is off the table, I don't think we're going to delay class size again. There's other things that I don't think we'll count on for yet another year. I think that should give us a little bit of concern, and it's why I think we should do everything we can in this budget to solve some of these structural problems.
Thank you.
Thank you, Council Member. Thank you.
Great. And next we have Councilmember Maloney, followed by Councilmember Aviles.
Thank you, Chair. And thank you to the comptroller, that's my guess, for testifying. Completely agree with you on the risks and opportunities that are presented with the shift to AI and the need for workforce development to start early in all sectors. And we all need to be getting more comfortable with AI tools, including in nonprofit and government.
Yes.
So we have some work to do there. And I also want to mention the other side of this coin, which is the role that New York City plays in the AI economy as an applied AI leader, and what we can be doing to ensure that AI companies are founded in New York, grow in New York, and that we reap from those economic benefits. If you could speak to that.
Well, first of all, I'm very grateful for your leadership for economic development. It's extremely helpful to have someone who knows technology in that role, and you're a very good partner for me on that. And amidst all the potential disruption on jobs that we fear might be coming from AI, there is one way that we could get a little more of the upside, which is to have some of the jobs building these tools located right here in New York City. And we've had that benefit so far. We have gotten a fair amount of the upside so far, also because we're financing this boom. And the firms that are financing the data center build out, et cetera, acknowledging all the complications with that infrastructure. But that is one reason why our budget is in a good position today. One reason why we have closed the $12 billion gap that we were worried about in January is because the financing of the AI boom has run through New York City. And I know you're well aware that we've had a very good run on renting of office space. Commercial real estate is on a tear right now. Who saw that coming 6 years ago in the pandemic? And one of the major drivers of that is AI firms, which are renting space at a very rapid clip. Firms we know and startup firms, very large ecosystem. So what can we do to support that? I mean, this should be the capital of applied AI. AI for healthcare, AI for research, for biotech, AI for financial services, for law. We should be the capital of that industry, and we should do everything we can to grow that ecosystem. We want those jobs here. I would certainly rather the people building those tools be New Yorkers who live in a diverse city and ride the subway every morning than someone in Silicon Valley who's living in a bubble. That's my belief. I'd rather that New York be the place where these new tools are built.
I agree with you on that, and having New Yorkers take part of the upside. And I wanted to ask one quick question on the revenue side with tourism. I asked this to the OMB director prior, but am concerned about the lower funding for NYC tourism in fiscal year 2027 when we are seeing that projections are 10 million visitors shorter than what reality is 10 million shorter than the projections. So do you agree with the lower funding? And what assessment have you made at the comptroller's office about what the marginal impact of adding funding to be comparable to other cities in our country on increased tax revenue from tourists coming and using our businesses and our services?
Thank you for fighting on this. We are way underfunding NYC tourism. The amount we're spending is a pittance relative to peer cities. I think Las Vegas is 10x more in what the local government gives for tourism promotion. And we're behind our goals. This is a huge economic engine for New York City. We need to be out there telling the story, and we're not able to do it adequately. So I absolutely support your fight to get more funding for tourism promotion. And I think you've asked for an analysis of the impact of every additional dollar. And I don't know if that's been done, but it's something I would love to work with you on.
And the last thing I'd add to that is an assessment of how all boroughs benefit from that increase.
And look, it is unequal right now. And I mean, every tourist wants to go to Times Square, which, if you're watching from home, it's so crowded, you'd probably be better off going to like Prospect Park or somewhere a little more open. We do want to see tourism shared more equally, also in Uptown Manhattan and in communities of color more broadly. And our tourism promotion can help that by uplifting the stories of the diverse communities of the city. One more reason we need more funding for NYC tourism.
Thank you very much, and thank you, Chair.
Great, thank you. Councilmember Aviles.
Hi, Mark.
Hi, Alexa.
I'm not going to engage in the other conversation, but thank you so much for your testimony. I want to jump around on a couple of things. I mean, interestingly enough, I was sitting next to a hedge fund individual who was really expounding the excitement around AI, and I said, so do you think kindergartners should be using AI? And he said, absolutely not. Wow. It does beg a question here that I think our cities should certainly lean into those, but there is a growing movement of profound concern with how AI is unregulated in our public school systems. That doesn't acknowledge the bias of AI, digital inequities across the city, and how some students are, have the tools and others do not, and how that will exacerbate inequity in our city. So I guess just as a general matter, I think we really need to look very, very seriously at the use of AI in our public schools and develop some real guardrails, because ed tech companies are staying with our dollars, and I'm not sure, I think they're harming our children more than they're supporting them. So that is not my line of questioning, but I couldn't help but to say that. In terms of city FEPs, you mentioned a couple of times bending the curb. And we know that the growth has been exponential, the crisis has been exponential, and this has much been your life work as any others, right? Affordable housing, truly affordable housing. But so has the growth of shelter costs. The council has been trying to meet us in the middle. Do you have a recommendation of how we can bend the curve but still continue to provide the much-needed housing to this community of folks that continue to grow every year?
I agree this is an essential program, and it's definitely kept families out of homelessness, and I don't want any family to lose their voucher. I really don't. I don't think we need to even consider that. But Section 8, there's an annual budget for that, the federal government has, and you can't spend beyond that. Now, unfortunately, that can mean there's a waiting list, but the federal government can print money, literally. The federal government can run a deficit. So I think it's very hard for the city to have a multi-billion-dollar program that has no budget limit. And I would like to see this incorporated into the budget with a fixed price tag.
Yep.
And that's what I mean by putting in some guardrails on the growth. And that's going to entail some trade-offs. I
Sure.
get that.
Sure.
But to me, that would be the way to make this sustainable for the long term.
Great. I think we want a number that we can work with. It's not the big number we'd love, but I think we need to get to a point where there's actual negotiation around a number.
Yeah.
In terms of the pension funds that you noted in to finance projects, sounds eerily familiar to public bank, which we love. I was curious if that commitment includes a commitment to very low income housing, or is it just like use our financing money to do a lot of market rate and a little actual affordable housing? Like, what kind of guardrails are you going to be using for those pension financing funds?
Look, we absolutely need housing for people at the lowest rung of the economic ladder, including people who are at risk of homelessness. And we do have some good programs like that in the city, like Ella, which should get more funding so we can build more units. But also, we have an affordability crisis at pretty much every rung. A bus driver in New York City is having a very hard time finding housing. A social worker, a construction worker, a nurse even, are finding it very difficult to secure housing they can afford, and we're losing those families as well. So I think we view the best housing model as one that has options for people at every rung of the ladder, potentially in a single development even, where you have mixed income housing, which has all the benefits of families from different backgrounds being together. And look, I believe that we just need to expand the supply overall. We probably have a $500 million, a 500,000 unit shortfall in New York City. That's a very big number. We're only building about 25,000 units a year, so it would take decades to get there. And to do that, we're also going to need to mobilize the private sector. So we just need more housing built of all kinds, and we want to help with that. But again, we are very, very focused on people who are at every level of the income ladder, including those who are earning minimum wage or in danger of homelessness.
Thank you. I'll just say to close, I think using our pension dollars, like JP Morgan Chase uses our pension dollars that don't benefit our most vulnerable community members, but kind of trickles the money at that and is interested in making the most money it can with our money. I would be a little uncomfortable with using public dollars again to do private financing for private companies to max out their profit on our dollars in another way. I think there needs to be some real guardrails and make sure that, Sarah and Ella, you still take too long. There's not enough money there to develop those units, and getting them 10% at a clip is not going to reach the need. So I would encourage guardrails on that use.
This is a huge discussion which we can't do justice to here because we're over time. But look, my solemn obligation is to protect the pension fund and to make sure that the 750,000 New Yorkers who have worked for the city or are still working for the city have a safe retirement. I wake up every morning thinking about how I can make sure I live up to that. That doesn't mean we can't also, while maximizing risk-adjusted returns, do some good in the world. And we're looking for win-wins, especially win-wins in New York City. But it's a narrow path where we can get good returns, we can have a good impact, and I'm confident that we're going to have some great announcements on housing projects in the 5 boroughs, which you're going to love, which are going to meet those 2 standards. So stay tuned.
Thank you.
You got it.
Great. Thank you so much, Comptroller. Okay, so I think that actually concludes this portion of our budget hearing. So thank you so much. Sorry we started late, but thank you for staying
Thank you,
a little
Chair,
longer.
and thank you to all the council members. Very great conversation. Thank you.
So I think we're going to move into DOF in the committee room. So we will be back.